This is Srinivasan, faculty for law at MASTERMINDS Guntur. Students, today we are going to see the concept of bailment and pledge of CA Foundation. Students, as you all aware of this is the newly added chapter by ICAI. Students, the overall weightage of Indian Contract Act, remember Indian Contract Act, not of bailment and pledge. The overall weightage of Indian Contract Act is 20 to 30%, or you can say 25 to 30%. So students, definitely you cannot take away any chapter without, you should not skip any chapter irrespective of the size of the chapter and irrespective of its importance. Each and every chapter is crucial because that is a score, basically that enhances your scoring capabilities. How, sir? Because you're reading only one contract act and it is fetching you 25 to 30% of your total marks, then obviously it's an advantage for you. So without any delay, sir, let us see the concept of bailment and pledge. Sir, I am sure that by the end of this lecture or by the end of this session, you will be able to understand the bailment and pledge, each and every concept of bailment and pledge thoroughly. Remember, this is a revision lecture for exam oriented purpose. Revision lecture for exam oriented purpose. What do you mean by that? We cover each and every concept with some few examples, so that you will be familiar with, or you will be able to recall each and every chapter, each and every topic once again. So let us see the concept of bailment and pledge. Yeah, sir, what do you mean by bailment and who are the parties to it? Sir, of course bailment is a contract, right? Sir, without it is a contract, we don't study as per Indian Contract Act. First of all, bailment is a contract. What sort of contract is this? Let us read. The word bailment has been derived from the French word baillir. What do you mean by that, sir? It means to deliver. Bailment etymologically means handing over or change of possession. Change of possession means you change the possession of the goods from one person to another person in a contract of bailment. Sir, let us be more specific about it. As per section 148 of the Act, of the Indian Contract Act, bailment is delivery of goods by one person to another, for some purpose upon a contract. So basically there must be a contract, and also there must be some purpose, and also there must be delivery of goods. Delivery of goods essentially involves so the change in the possession, right? So the change in the possession. So that's what we read about. Now, delivery of goods by one person to another person for some purpose upon a contract, that when the purpose is accomplished, the goods will be returned or otherwise disposed of according to the person delivering them. Sir, this seems to be a large definition, but let us break this into parts. Now listen, students. Delivery of goods by one person to another person. Let us take an example and decode this definition, and let us put this definition into such example. For example, you have cleared your CA Foundation in the first attempt, in the immediate attempt. Now, there will be the books lying with your CA Foundation books. Now, you have decided to give these books to your junior, even in your institute. For example, you are doing, this is a student A. This is student J. J is his junior. Now A has some pile of books with him. Now, sir, he want to give these books to B for his upcoming examination. Sir, of course, in another attempt, in subsequent attempts, even J will write his exams, right? So for that purpose, now A is giving these books to Mr. J. What is the purpose? Purpose is for his examinations point of view, or for his exam purpose. Now, sir, there is a delivery also. Now the purpose is exams. Upon a contract, what is the upon a contract when the purpose is accomplished? Listen here, sir. Upon a contract that J should, now A said to Mr. J, Arey J, whenever you are done with your exams, that means whenever you have completed your exams, please return the goods to me. Please return back, or please give back, or please return the books to me. So that is the terms of the contract. Now when the purpose is done, when the exams are done, Mr. J has an obligation to give the books to Mr. A, because this is a contract and every contract involves rights and obligations. Here the obligation of J is to return the book back to Mr. A and the right of A is to take the books back, right? So for some purpose upon a contract, when the purpose is accomplished, so what is meant by accomplished? Accomplished means completion of a certain purpose, so completion of certain goal. When the purpose is accomplished, the goods shall be returned, or means goods shall be returned or otherwise disposed of. Sir, what is meant by disposal actually? Sir, now listen, take this case, sir, take this example. Now A may sometimes ask Mr. J, upon completion of your exams, Mr. J, upon completion of your exams, give to Mr. J2, another guy. Who is this J2? He is junior to Mr. J. So, as per the directions of A, J shall follow. J shall follow whatever the A gave the directions, right? The directions given by A must and should be followed by J. So now sometimes J may ask to give it to J2 or give it to Mr. X. In all these cases, J should follow the directions of Mr. A. Delivery of goods by, come back to the definition, sir. Delivery of the goods by one person to other person upon a, for some purpose, upon a contract, that when the purpose is accomplished, the goods shall be returned or otherwise disposed of according to the directions of the person delivering them. Who is the person delivering them? Mr. A. So whose directions has to be followed? Mr. A. So according to the directions of the person delivering them means here according to the directions of A. Now let us read once again, sir. Delivery of goods by one person to another person for some purpose upon a contract, that when the purpose is accomplished, the goods shall be returned or otherwise disposed of according to the directions of the person delivering them. Now listen, sir. So listen here, sir. Listen here. Basically, A delivered the goods, right? A delivered the goods to B, to J in our example. Let us continue with our old example. And asked Mr. J to return the goods upon the completion of exams. Nothing goods. Let us be more specific, sir. The books. Let us be more specific. The books. So these are the, let us assume these are the books, sir. Pile of books. Yes, sir. These books has been delivered to J. Upon completion of the exams, J has to return those books to Mr. A. This is one of the points. Sir, do you find, now tell me frankly, sir, do you find any remuneration here? No, there is no remuneration. Keep that point in mind, sir. We will discuss a later at a later point in time. Now, there can be another bailment also. Now, for example, he is Mr. O, sir. He is Mr. O. He won a car. He won a car. So this is a old car, sir. Old Ambassador. This is an antique item. So this has very demand nowadays, sir. So high demand nowadays. No. But sir, there is a minor repair for this car. There is a minor repair for this car, for which Mr. O went to Mr. M. Mr. M is a mechanic, car mechanic. Now, sir, listen carefully. Mr. O is the owner of the car, right? O is the owner of the car. This owner of the car went to mechanic. Now, upon completion of repairs, will Mr. M sell the car or will he give it back? Usually, he will give it back. But here, this Mr. M might charge some consideration. Here, there might be some consideration, but here, there is no consideration. So now you should understand that bailment, contract of bailment may involve consideration or may not involve consideration. We will talk more on that. But now, as of now, let us take the introduction of the parties, sir. Who are the person who deliver the goods is called bailor. Let us see. The person delivering the goods is called bailor. See, this bailor is delivering the goods to bailee. So these are the books, sir. Let us assume these are the books in our example. So who is the bailey, sir? The person who delivers the goods is called, the person delivering the goods is called bailor, that we know. But who is a bailey? The person to whom the goods are delivered. The person to whom the goods are delivered is called bailey. Got my point, sir? Very good. Next. Now we saw what is bailment, and we saw different parties to a bailment, contract of bailment. Now distinguishing features of bailment. Distinguishing, what do you mean by the term distinguishing, sir? Distinguishing means, sir, usually there will be a contract. Now we are talking about the contract of bailment. There must be some peculiarity, there must be some major changes to a general contract and a contract of bailment. No, what are the features that differentiate contract of bailment from a normal contract, from a general contract? So what are the features that differentiate the contract of bailment, from a general contract? Let us see, sir. So essential characteristics or elements of a bailment. In order to call a contract as a contract of bailment, in order to call a contract as a contract of bailment, now these elements must possess. What are these elements, sir? So there must be a contract. Of course there will be a contract, because this is a contract of bailment. And only for movable goods. Why only for movable goods? If the goods are immovable, obviously can't deliver, no. Obviously can't deliver. That's why goods must be movable goods. There must be delivery of the goods, that we know. The goods are delivered some purpose. For some purpose, there must be delivery, and there must be that such delivery must happen for a purpose, and there must be change in possession. Sir, we also know that in the Sale of Goods Act, what is meant by delivery? The voluntary change in possession of the goods is called delivery. So here there must be change in possession of the goods. Return or disposal of goods as per directions of bailor. Sir, the definition, nothing. Sir, all these elements has been possessed in the definition itself. So if you are thorough with the definition, you need not to by heart all these, sir, essential characteristics. So be thorough with the definition. Sir, this is a mark gaining chapter, sir, because if you know this definition, sir, the definition itself fetches you 1 mark easily wherever you write in the essential cases. So be thorough with the definition, students. Next, sir. So different forms or different types of contract of bailment. Now listen, sir. So I guess as of now you will be more familiar with the what do you mean by bailment and parties to the bailment. Now listen. Bailment on the basis of benefits and bailment on the basis of rewards. Basically it is divided into 2 types, sir. Bailment on the basis of benefits. Initially bailments on the basis of benefits and bailment on the basis of rewards. Bailment on the basis of benefits again subdivided into 3 categories. What are those, sir? Exclusive benefit of bailor. Sir, what do you mean by exclusive benefit of bailor? Sir, and let us see all these headings, sir. For the exclusive benefit of bailor, for the exclusive benefits of bailey, for the mutual benefit of bailor and bailey. Mutual benefits of bailor and bailey. What do you mean by the exclusive benefit of bailor, sir? Listen, sir, I am leaving for Delhi, sir. Now in my house, I have one gold chain, bracelet, and gold biscuits of which values about 10 lakh rupees, sir. Which values about 10 lakh rupees. Now I have a threat of thieves, sir. So there are more thieves at my location. Now I called upon my friend, sir. And I have delivered him to keep these all the gold ornaments and related items with him safely. Why did I give him, sir? For safe custody. Sir, now tell me, sir, this Mr. Bailey, my friend is Bailey, I am the bailor. Now this is, of course, this is a contract of bailment. Upon my returning to my home place, Mr. Bailey, my friend, will return all the gold to me, right? So this is the contract of bailment, no doubt. But this is happening exclusively for the benefits of bailor. Exclusively for the benefits of bailor. For whom he is keeping the gold in the safe custody, sir? For my purpose, for the purpose of bailor. Sir, is he getting anything, sir? Is he getting anything? No. Is he getting anything? No. In this case, since he is not getting anything in return, since he is not getting any consideration, this bailment has been purely entered for exclusive benefits of the bailor. So I'm not obviously I'm not paying anything to him, sir. Did I say something? I'm paying something to him? No, because so that's why this is being exclusively for the purpose of bailor, for exclusive benefit of bailor. No, sir. Second one, exclusive benefit of bailee. Sir, that book example, why in despite no consideration, sir, there is no consideration, right? Even though there is no consideration, I am giving him the books for his exam purpose. For whose benefit I am giving, sir? For my benefit? Absolutely not. So I am giving the books, my books, to him for his examination purpose. So that's why it's called exclusive benefits of bailee. Of course, he is not giving any consideration to me. So in our previous example, when I gave him the books, when I delivered him the books, he didn't give me even 1 rupee, but still I gave him books, after which he will deliver back to me. That's a different story. But when I am giving him, he didn't pay me any consideration, and also at later point in time, he didn't pay me any consideration. So I am simply giving the goods or delivering the books for his exclusive benefit of bailee. That is the example here. Next, for the mutual benefit of bailor and bailee, I took my ambassador car, that's an antique car. I took my ambassador car. Here, sir, here in my previous example, Mr. O took his ambassador car to Mr. M. No, O will be paid some charges, right? So for his mechanic work, for his repair work, he will be paid some charges. And now even he is doing his services. Now Mr. Mechanic is rendering his service, and Mr. O is paying some consideration. There is mutual benefit. For Mr. M, there is consideration. For Mr. O, there is services which is obtained from Mr. M. For both the parties, there is consideration. For both the parties, there is benefit. So here you can call this as exclusive benefit of bailee. Exclusive benefit of bailee. No, sir. This is basis of benefits, sir. This is done. Now we are going to discuss of this part. What is this part, sir? Bailment on the basis of reward. What do you mean by reward? Gratuitous, non-gratuitous. Sir, there is no much difference. Gratuity, what is meant by gratuitous? Gratuitous means doing something for free or without charge, or free or without charging any consideration. Without charging consideration, no money, sir. So that is called gratuitous. So doing something for free. Now, sir, you can call this, in the previous example, when I gave him books, no, sir, you can still call that as gratuitous bailment. No separate example needed. Sir, now you may get a doubt. Sir, when you gave the books to him, you are telling that this is exclusively, the bailment is exclusively for the benefit of bailee. Sorry, exclusive for the benefit of bailee. Now, can I call this as gratuitous bailment? Of course, yes. Of course, yes. It's a gratuitous bailment. When I gave, no, sir, there is another gratuitous bailment also. When I gave my gold ornaments to my friend didn't charge any even single rupee from me. Is that a gratuitous bailment, sir? Of course, it's a gratuitous bailment. Now you should come to a conclusion that even though there might be benefit for either parties, that may be still make gratuitous benefit. Simple, sir. If there is no consideration, there is no charge to either parties, then you can call it as gratuitous bailment. If there is consideration, if there is involvement of money, you can call it as non-gratuitous. Not for free, sir. You are charging something there. You are charging money. Since we are charging money, it is not free. Non-gratuitous means not free, but some consideration is present. Now, so this is just for a bifurcation purpose, sir. You need not to get confused. Okay, so that's not even so important from the exam point of view. Now, what are the duties of bailor? What are the duties of bailor? So let us, duties of bailor, sir. Bailor's duty to disclose fault in goods bailed. What do you mean by that, sir? Bailor's duty to disclose fault in goods bailed. This is again further bifurcated into gratuitous bailment in case of non-gratuitous bailment, sir. Sir, if you recall, sir, the duty of bailor is further classified into Sir, in case of gratuitous bailment and in case of non-gratuitous bailment. Now listen here, sir. Sir, when I give my car, I am a bailer. I am a bailer. Sir, what do? I give my car to different people and charge consideration on the basis of distance traveled. Means I will give my car on lease. I will give my car. I have a car, sir. I will give my car on lease to different people. After using that, those people has to pay me some consideration when they are delivering my car back to me. When they are delivering my car back to me, they have to pay some consideration. Whenever I am giving it, whenever I am giving it as a non-gratuitous, means I am charging money. No, if I charge money, it's a non-gratuitous bailment. Then I have to disclose each and every fault if I know. Sir, what if I don't know the fault in the goods, even though I will be held liable? Simple, sir. Listen here. Listen here. In case of non-gratuitous bailment, since I am charging money, since I am charging consideration, I will be responsible whether I know the defect in the goods or I don't know the defect in the goods. And in case of gratuitous bailment, since I am not charging any consideration, my liability is limited. When if I know the defect only, I have to disclose the defect. Otherwise, if I don't know the defect, I need not to disclose here. But in case of non-gratuitous bailment, I will be held responsible even I know the defect or I don't know the defect, because I am charging money here. Got my point, sir? Next, duty to pay necessary expenses. Sir, in case of gratuitous bailment, for the benefit of bailer, and in case of non-gratuitous bailment, who has the duty to pay necessary expenses, sir? So, in case of non-gratuitous bailment, in case of gratuitous bailment, for the benefit of bailer, sir, what is gratuitous bailment again? Gratuitous bailment means, for example, I have a car, sir. I gave it to my friend. Of course, he will not pay any consideration. For that, I have to bear. Sir, if some accident or some minor engine issue happened, sir, do I need? He incurred 5,000 on behalf of my car. For my car, he incurred expense. Should I pay that general, like ordinary expenses or not? Yes, of course I have to pay. In case of non-gratuitous, that means I gave to car to Mr. X. This time he is not my friend. I gave my car to Mr. X. I gave it to Mr. X. No. In case of this non-gratuitous bailment, means I will charge some money from Mr. X, because X, I don't know Mr. X, he is not my friend. So that's why I wish to charge some 5,000 rupees for my car as rental expenses. In this case, sir, so if there is a major issue with my car, and such person, such Mr. X incurred some expenses for such major engine issue or whatever, then I have to recompensate. I have to compensate. Look at here, sir. I will give an example for this. Okay, student. Now listen. Mr. O has a car. He gave it to Mr. L on lease. A car on lease. Now, Mr. L will pay some money for that, because he took car on lease. No, that's why he will pay some 10,000 rupees per day as rental expense or expenses, lease expenses. Now, sir, listen. Whenever already Mr. O is charging 10,000 rupees for this, and if he gave the car, now since he is charging 10,000 rupees, the car must be in a good condition. If the car is not in a good condition and there is any major repair work has been done by Mr. L, Mr. L incurred rupees 5,000 for this major repair expenses, which is not ordinary in nature. This is extraordinary. This is not a minor defect, sir. This is a major defect and this is an extraordinary defect. Then since Mr. L got it repaired with Mr. Y, so and paid 5,000 to Mr. Y, now Mr. L can recover 5,000 from Mr. O. That's the whole point, because already he is paying 10,000. If he is paying 10,000, your car must be in a good condition, but still he incurred some expense. No, so this 5,000 can be taken as compensation. That's the whole point here, sir. Now, duty to indemnify the bailee for premature termination. Duty to indemnify the bailee. What are we reading, sir? Duties of bailor. So in that, duty to indemnify. What is meant by indemnify? To compensate. Indemnify means to compensate. To compensate. So, duty to indemnify the bailiff for premature termination. What is meant by premature termination? What is meant by premature, sir? Well before due time, right? Well before due time, before due date, before due date, or before the actual date of the contract, before the actual date, before due date or actual date in the contract, before due date or actual date. For suppose, I gave my car to my friend, sir. I gave my car to my friend. Sir, in this case, sir, if my friend has taken in case of gratuitous bailment, so duty to indemnify the bailiff for the premature termination. For suppose, sir, I gave certain goods to Mr. A. Now, listen, sir, I will give an example here. I gave 10 bags of vegetables to Mr. X. I give 10 bags of vegetables to Mr. X. This is Mr. I. Mr. I gave 10 bags of vegetables to Mr. X. Sir, for non-gratuitous purpose. Now, what is non-gratuitous purpose? No, he's going to charge some money. He's not giving it for free. So, in case of non-gratuitous purpose, here, yes, we know that this is again divided into gratuitous purpose and non-gratuitous purpose. Non-gratuitous purpose. Now, listen, sir. In this case, since he is delivering the vegetables for, let us see both, sir, gratuitous purpose and non-gratuitous purpose. He is delivering the goods for gratuitous purpose, and he said in the contract that, "Arey, Mr. X, I will retake these 10 bags of vegetables within 3 days." Meanwhile, what happened, sir? So, Mr. X has no place to store these 10 vegetables because it will get rot. No, those will be rotten vegetables. After some times, after a particular period of time, sir, the vegetables will rot, right? So that's why to keep the freshness, Mr. X put it in a warehouse. Mr. X put it in a warehouse. So for this warehouse, he incurred rupees 1000 for 3 days. He entered into a contract with Mr. Wo, sir. He is the owner of the warehouse, and the owner of the warehouse said, "Arey, Mr. X, for storing these vegetables, I will take 1000 rupees for 3 days." Now listen here, sir. Mr. I meanwhile went to Mr. X and said, "Arey, I gave you vegetable for 3 days. I know that, but I know only 1 day has elapsed. But I need my vegetables right now. That means Mr. I is willing to terminate the contract because he initially said after 3 days I will take back my vegetables. But here what happened, sir? Mr. I went to Mr. X and asked the vegetables on the second day itself after the day 1. Now he is prematurely terminating the contract, right? For this purpose, Mr. I has to pay 1000 rupees plus whatever, if there is any extra charges incurred by him, to Mr. X. Sir, Mr. X already paid 1000, no? And also, if Mr. X went to Mr. Wo to ask the goods, he may charge 500 rupees extra for breaching the contract. This 500 also shall be paid by Y, sir. I, sir, shall be paid by I. This is the case, sir. Now, sir, what if it is a non-gratuitous bailment? Non-gratuitous bailment means Mr. I, what is meant by non-gratuitous bailment, sir? Without free means he is taking some money. In this case also, if Mr. Wo has incurred any expenses, extraordinary expenses, then Mr. I has to compensate, but not ordinary expenses. Let us take a look at next point, sir. Next point. In case of, what is the bailor's responsibility to bailee? Indemnify the loss. Bailor's responsibility to bailee. Sir, if the bailee incurred any loss, sir, he has to indemnify the loss. Now, what is the responsibility of bailor to bailee? Bailor's responsibility to bailee means he has a duty to receive back the goods. What is this, sir? I didn't understand. Now listen, sir. After the completion of, in this case, forget about this warehouse and all, sir. In this case, he gave it for 3 days. No, he gave it for 3 days. Meanwhile, on the third day, Mr. I hasn't visited Mr. O, not Mr. O, Mr. X, right? Bailee. Basically, Mr. I has not visited. Mr. I has not visited to take the goods back on the third day. That means, yeah, Mr. X has to keep for the fourth day, fifth day, and so on. No, so that he might incur some extra expenditure. No, that's why Mr. I has a duty to take back the goods. If not, the whatever the extra expenses incurred by Mr. X for this purpose, for this delay, should be compensated by Mr. I here. That's the whole point, sir. Next, what are the rights of bailor? Right to terminate the contract in case of unauthorized use of goods bailed. Sir, if we give a car for a repair, sir, what should that mechanic do? We are the bailor, he is the bailee. What should that mechanic do? He should repair the car. After accomplishment of that purpose, he should return the car back to you, means to the bailor. But what did he do? He took his family to a trip, sir. That means it's an unauthorized use, no? So then you can terminate the contract then and there itself. Sir, basically, if you see any unauthorized act, that means, sir, the purpose will be clearly determined in the contract of bailment. No, if the purpose is not being followed by the bailee, then you can terminate the contract at any point in time. Next, right to demand the goods back. Means, sir, this is it, sir. So you have a duty after the time period, you have a duty to take back goods. Now, if the bailee is not giving the goods back to you after the accomplishment of 3 days in our previous example, now the bailor has a right. He has every right to take back the goods. Next, right to file a suit against a wrongdoer. Means, sir, for example, Mr. A is the bailor, Mr. B is the bailee. So in this case, sir, B has certain goods. A gave certain goods to B, Mr. B. Who is the owner? Sir, tell me one thing. In contract of bailment, will there be any transfer of ownership? Absolutely no. So there will be mere change in the possession of the goods, right? So Mr. A gave goods to Mr. B, sir. From Mr. B, Mr. C has taken the goods without any authorization. From Mr. B, Mr. C has taken the goods without any authorization. Now the goods are lying with C. Now, whose goods, sir? Whose goods are these, sir? These goods belongs to Mr. A. Now he can file a suit on Mr. C since he is the owner. A is the owner. Next one, right to sue the bailee. Sir, in every case, sir, if there is unauthorized usage or if he did not deliver the goods back in time, you can sue the bailee at appropriate circumstances. Right to get compensation. What is this right to compensation? Sir, if there is any unauthorized usage or if there is any spoilage or if there is any due to fault of the bailee, then you can take compensation from the bailee. These are the rights of the bailor. Next, what are the duties of bailee? Duties of bailee means these are must to be done by bailee. He has to take care of the goods back, sir. Sir, if a ordinary man in his ordinary prudence, he will take care of his own goods. No? In the same way, the bailee also take care of his goods bailed. That means he will take certain goods from the bailor. No, he has to take care of these goods. See, just like his own goods. That means in case of, we read that in case of quasi contract also, in case of finder of lost goods also, he has a responsibility of a bailee. In the same way, he has to take care of these goods. Not to make inconsistent use of goods. What is this inconsistent use of goods, sir? You should not make any unauthorized usage. You should use only for the purpose of bailment as directed by the bailor. Now, no right to mix the goods. Sir, what if goods are mixed with the bailor's consent? Sir, if the goods are mixed with the bailor consent, sir, you can separate. You can separate. Then there is no separation because you have mixed. Then there is no payment of money for this separation because you have mixed the goods with bailor consent only. Now, if the goods are mixed without bailor consent, but these goods are separable, sir, you have mixed two different kinds of goods, sir. So bailor give you goods X. Bailor bailor gave you basmati rice, sir. Bailor gave you basmati rice. Bailey has mixed this basmati rice with his own rice without consent of bailor, with his rice general. Oh, these are ordinary rice, sir. Now these goods, these rice bags, not rice bags, all the rice has been mixed into a big pile. No, they must be separated. No, sir. If the if the goods are, if the goods are separable, then the expenses has to be borne by the bailee. Why, sir? You have mixed the goods without the bailor's consent. No, he didn't ask you to mix, but you have mixed it, so you have to bear the expenses. If the goods are mixed without bailor's consent and the goods are not separable, then the whole amount shall be paid. Whatever the cost of the goods has to be paid to bailor. Got my point, sir? If you have mixed the goods, sir, with this consent, then amount can be proportionally be divided in the first case. Now, return of goods billed. Of course, after the accomplishment of purpose or after completion of time of, after completion of contractual time, you have to return the goods billed. Return accretions to the goods. For example, sir, for example, Mr. G has gave some gold of 10 grams worth 80 rupees. Sorry, 80,000 rupees. 10 grams worth 80,000 rupees to Mr. B, Mr. Bailey. Okay, Mr. Gold. He gave 10 grams. Now, to keep in a safe custody for a 1 week, for 1 week, sir, he will give rupees 1,000 for 1 week. This is the contract, sir. After completion of 1 week, he will pay 1,000 and he must return the goods. He must return the goods. Now, 1 week passed by, sir. 1 week is done. 1 week passed by. Now, on the 8th day, at the end of the 7th day or 8th day beginning, he has to give the goods back now. At that point in time, the goods, the gold has a hike in price. Hike means now the worth of the goods is rupees 90,000, sir. It became 90,000, means there is a 10,000 increase in the price, right? 10,000 increase in the price. Now, Mr. B should not complain that, should not have any contention that, Arey Mr. G, you gave me goods, gold worth 80,000, no? That's why I will also give gold worth 80,000 only, but not 90,000 worth goods. That means, sir, per gram here it is 8,000 rupees, no? Per gram it is 8,000 rupees, no? Sir, if for 90,000 how much will be there, no, sir? He will take proportionately, and he said, Arey, I am not going to give you 90,000 gold, I will give you only 80,000 worth gold. The contention of Mr. B is wrong here, sir, because whatever the gold has been bailed to you, the same gold has to be returned with any addition in the value. And now, sir, now what is the contention of B? As per contention of B, he will give only 9 gram around, sorry, you can calculate that proportionately, sir. So the contention of Mr. B is not correct. Mr. B is not correct. I will give another example, sir. For example, Mr. Baylor, he is Mr. Baylor. He gave a dog, sir, the pug. You know pug, right? So pug is a dog, a breed dog. So Now, after he gave it for 1 month, sir, because Mr. A is leaving to some else place. Mr. Baylor is going to somewhere else, sir. That's why he gave it to Mr. Bailey to look after it for 1 month time. 1 month time. Sir, within 1 month, sir. So within 1 month time, sir, the pug has a another pug. The pug gave birth, sir. So the name of the dog is Puppy. It gave birth. Now, while returning the pug, the dog, the mother dog, he has to return this puppy also, this newly born dog also. Got my point, sir? So here, even though if there is an addition to the goods bailed, he has to give all the goods back. That is called return of accretion. That is called accretion of goods. Now, not to set up an adverse title. That means, sir, A gave the goods to B. B is the Bailey. B is the Bailey. He should not sell the goods to someone else, making C as the uh, owner. Because generally, sir, again there comes sale of goods act comes into play, sir. Sir, if she purchased the goods in good faith and all, but generally Bailey should not set up a adverse title. Means that Bailey should not be in a position, or Bailey should not claim that he is the owner of the goods. Definitely he is not the owner of the goods, because in case of bailment there will be no transfer of ownership. Now, sir, listen next. What are the rights of Bailey? Rights of Bailey. What are the rights of Bailey, sir? What is the first right in case of rights of Bailey, sir? So, in case of rights of Bailey, the first right is right to deliver the goods to any one of the joint bailers. Sir, if there are two persons, A and B, they are the joint owners. They have jointly bailed the goods with Mr. C, sir. Now, when Mr. C is delivering the goods back, he can either give it to A or he can either give it to B, sir. So, he has right to deliver the goods to any one of the joint bailers. Now, right to indemnity, or right to get indemnity or compensate, right to get compensate. Sir, if the in the previous example, I told you one, in the previous case, I told you one example now. Sir, Mr. Bailey incurred a extraordinary expense. His car engine got damaged. No, for such purpose, Bailey has a right to claim compensation. Now, right to claim compensation in case of faulty goods. Sir, when the goods itself are faulty, sir, but the goods has been bailed, sir, but the goods has been bailed by bailer. Now, in case of non-gratuitous goods, sir, non-gratuitous bailments, sir, what can he collect? He can collect, sir, because, sir, for example, he gave me a car, sir, to take a ride for some money. These are non-gratuitous bailment. Since I am paying him some money, no, this is a non-gratuitous bailment. In this case, if the car is faulty, sir, and it has a breakdown, then I can collect compensation from him, because since he is charging some consideration, goods must not be faulty. In this case, I can charge some consideration. Right to claim necessary expenses. Sir, in case of non-gratuitous bailment, sir, in case of gratuitous bailment, sir, he gave me some, my neighbor bailed me with some gold, sir. I have kept it in a bank locker. I kept it in a bank locker for safe custody. For the expenses, for such a bank locker expenses, being a bailee has a right to collect from my bailor. Now, right to apply to court to decide the title of the goods. Means, sir, what is the right to apply? Here, remember, sir, here I am a bailee. Here we are a bailee. Now the bailor gave some goods. No, bailor gave some goods to bailee. Now this goods is being claimed by Mr. O, sir. Since he is claiming that he is the owner of the goods, he is claiming the goods from Bailey. Now he has a right to apply to the court. He can go to the court and ask the court, court, I have took the goods on bailment. Now Mr. O is claiming the goods that he is the owner, and whereas I have taken the goods from bailor A. Now it's up to you to decide to whom the real ownership lies with. Now this is a simple point, sir. Now next, right of particular lien for payment of services. What is meant by particular lien? What is a lien, sir? Right to possess. We read that in Indian Sale of Goods Act, right? So right of lien, we know right of lien, right of particular lien. For example, you gave your watch to a repair, sir, for repair. Now, he asked you 500 rupees. You haven't paid, sir. Now till the time of payment, such mechanic, watch mechanic or the person who repairs the watch can possess the watch with himself, since you have not paid for. Now listen here, sir. Since you have not paid the amount to him, sir, he can retain the watch. In case of general lien, sir, general lien will generally be with banks and wharfingers. Sir, what do you mean by this, sir? Listen here, sir. Here, Mr. L, sir, he is Mr. L. He took a loan from a bank. He took a loan from a bank. Now, the loan gave 50,000 rupees without any security. Without any security only, the loan gave, the bank gave first loan. Subsequently, Mr. L went for another loan. This time, the bank took a security, means pledge, just like a mortgage, his car or house, whatever, sir, and gave rupees 2 lakhs to him. And gave rupees 2 lakhs to him. This is the loan 2. Loan 2. Now listen, sir. At the due date, on the due date, Mr. L has repaid loan L2. L2 means he gave security, no. So the bank otherwise the bank will take away the car. That's why he paid the loan 2 of 2 lakh rupees. Still he is liable to pay 50,000, no. In this case, since the car has been mortgaged with the bank, if he not paid even 50,000 rupees, which is not belongs to this debt, sir, this 2 lakhs and this car is related. These both are related to one debt. But this 50,000 is a separate debt. Even though he has not paid, even though he paid this 2 lakhs, if he has not paid this 50,000 to the bank can still retain the car or take the car. That's what. So this is called general lien. This is called general lien. It is generally you can apply to any debt, sir. So for previously, the bank gave another 25,000 rupees to him. Another 25 without any security. So he paid 50,000, he paid 2 lakhs. But this 25,000 has not been paid by Mr. L. Can the bank still exercise general lien, sir? Of course, yes. Bank can still exercise the liens, a general lien. But this general lien is usually lie with wharfingers and banks only. Next, sir. Sued by bailor and bailey against wrongdoers. Sir, what do you mean by sued by bailor and bailey? Sir, here the owner of the goods is A, sir. He bailed it with B, sir. But Mr. O is claiming the goods, no. Listen here, sir. I will give you an example. I will give an example. Just wait a minute. Sir, for suppose I gave you a car. I gave you a car, sir. On lease. On lease. That means non-gratuitous. No, sir, I gave not to you, sir. Generally, Mr. X gave a car to Mr. D, sir. Sir, what will D do? D is a driver, sir. So he used the car for hire. Means, so he will take the customers to from one location to another location and he will collect some money. X let a car to him. He leased a car to Mr. D, sir. Now, listen carefully, sir. In this case, Mr. F came to Mr. D and claimed that, Hare Mr. D, the car is mine. Actually, I am the true owner of the car, by showing some fake documents or else or something like that. He claimed the car. Sir, but initially the car is leased for 1 month, sir. 1 month for rupees 50,000. The car is leased out for 1 month for 50,000. Now, sir, F claimed the car and he took it away, sir. Within 1 week, within one week only, F took away the car. No, within 1 week, F has taken away the car. Now, since F has taken away the car, the remaining 23 days or 24 days, the car is not available with D, no. That means he would have, he might have incurred some loss, no. Otherwise, he might have earned some money with the help of that car. Now, sir, in this case, the amount, whatever the amount he lost, that can be collected by Mr. D from Mr. F. Sir, if there is any damages caused to car also, since he is the true owner, even X can collect the amount. That is the point, sir. So, apportionment of relief or compensation obtained by such suit. Sir, you know this suit by Baylor and Bailey for against wrongdoers. So you can file a suit on F because the car does not really belong to F, sir. He just simply lied. So you can file a suit, and whatever the amount has given by the court can be apportioned between Baylor and Bailey as per the facts of the case. Means whatever the amount of damage incurred to Mr. Bailey, that such amount can be taken by Bailey. Now, whatever, if there is any loss for such the true owner Baylor, then Baylor can also take. So both of them should take the amount in proportionately. So next, indemnification for premature delivery. Sir, what are we seeing, sir? Listen, we are seeing the rights of Bailey. Sir, indemnification for premature delivery. Let us continue with the previous example alone. Let us continue with the previous example. Now, let us forget about Mr. F, sir. Let us forget about Mr. X. F. Here, yeah, here X gave the car, to Mr. D for 1 month, no, for 50,000 rupees, no. However, X has terminated the contract within 10 days. That means he went to Mr. D and he asked the car back. So within 10 days only, that means he has no car for 20 days, no. He has no car. That means this is a premature termination, no. After 1 month only Mr. X should ask, no. So obviously this is a premature termination, no. So in cases of such premature termination, Mr. D can claim compensation from Mr. X. Got my point, sir? Yes. No. Right about Bailey's right of lien. Bailey's right of, you just now we saw, sir. So right of lien means right to retain the possession of property, sir. Because in case you will deliver some watch, whenever you go, you deliver some watch for repair, I just gave you an example, sir. If the watch is being repaired within due time, within due date only the watch is repaired, but you have not paid the amount, then he can exercise the lien. Such lien is called particular lien. So a particular lien is a right to retain only those goods in respect of which some charges are due. What is a general lien, sir? A general lien is the right to retain the property of another for such general balance of the account. Just now we saw the Axis Bank example. Next, rights of finder of lost goods. Who is the finder of lost goods? Is he a Baylor or Bailey? He is a Bailey, of course. Sir, we read this in quasi-contract also, right? So it's a sort of quasi-contract because the law implies or law imposes certain rights, imposes certain obligations on one party, and it confers certain rights on another party. So for Mr. X lost his goods, sir. So I found out the goods. What is meant by finding the goods? Finding the goods means not merely watching the goods, sir, or not merely observing the goods. We have to take those goods into our custody. Then I will be called as finder of lost goods. Now, a person who finds some goods which do not belong to him is called finder of the goods. Now, what are the rights of finder of lost goods? No right to no right to sue the owner of compensation of expenses. No right to sue the owner for compensation of expenses. Sir, what is this? Listen, sir. Sir, for example, Mr. L lost his goods, sir. Mr. F found the goods. Mr. L. He is Mr. L, sir. He lost the goods. So, Mr. F found the goods. Now the bag of goods are with Mr. F, right? Since the goods are with F, sir, For he will incur some expenses while searching for the true owner. No, he should not sue for that expenses. He should never sue. Sir, what can he do? He can retain the goods till that expenses are being paid by L. Actually, F cannot sue Mr. L for the expenses. What can F do, sir? F can retain the goods, means F can keep the goods with himself till Mr. L pay the expenses incurred by F. Expenses, for example, for such expenses and all, Mr. F might have incurred some 500 rupees. So, for this 500 rupees, F should not sue Mr. L. Then what can he do, sir? Mr. F can retain the goods, or he can simply, he has a lien right, sir, over these goods till the amount of 500 being paid by Mr. L to Mr. F. That's the whole point here, sir. Now, and next, sir. Sue for specific reward. Sir, sometimes a loser, the person who lost his goods, he will announce some reward. No, for that reward you can sue, sir. Sir, what if you are not able to find the true owner and the goods are getting perished? Then you have right to resell, and after selling, the amount what you get from that nothing but sale proceeds, you have to give it to the true owner after retaining your expenses. So of course you have a right to sell, but before selling you have to put some reasonable efforts in searching the true owner. Got my point, sir? Simple. Duties, sir. What are the duties of finder of lost goods? As previously we have discussed, same duties as duties of Bailey. Sir. When bailments get terminated, yes, sir. Sir, this is very important from your exam point of view, sir, because there are 5 points that might be asked for as straight question for 5 marks. So in exam point of view, this is very important, sir. So you can mark this as example, important, and moreover this is in ICI study mat also. So you can answer wherever you read, sir. You have to read this very well, sir. This might be come up for 5 marks in your examination at any point in time. So bailment, sir. When does bailment will come to an end? Termination means coming to an end. On expiry of stipulated period, means the bailer will prescribe a stipulated period in the contract. Now, upon completion of such stipulated period, the bailment will come to an end. On fulfillment of purpose. What is meant by another term for fulfillment of purpose, sir? On accomplishment of purpose, or by notice. You can give a notice of a termination also, sir. So reasonable notice of reasonable length. Next, death of bailer or bailee. Sir, if the bailer is dead, sir, basically when the person who, as per the contract, he has to deliver you some goods, sir, he is no more. So you cannot ask for bailment, sir. So you may, even though you entered into contract, the bailment is technically not possible. Next, destruction of subject matter. What is meant by destruction of subject matter? Sir, the things which are going to be bailed, or the goods which are going to be bailed got destroyed before the bailment itself. Then what? There is no transfer of goods. No, there is no. You cannot deliver the goods because those goods are already destroyed and it is not fit for the contract. That is not answerable. That is not fit for the purpose of the contract. Then those goods cannot be bailed. This is called destruction of subject matter. Next, what are the essential features of pledge? Yes, sir, we are going into pledge. Okay, now, so you know all the essential features of pledge. So I hope I am clear with contract of bailment as of now, sir. Thank you. Example, yeah. So he is Mr. B. He is a builder. He builds house. He constructs houses and all. So Mr. A asked him to construct a house for A. So A came to B and asked him to construct a house for B. Now, sir, listen carefully. Sir, for this performance, B has to perform the promise, right? For this performance, A asked some security. So he has to construct the house within time now. So he should not breach the contract. For this, A asked certain amount as security. Why did he ask it, sir? If B breaches the contract, then he might lose his valuable time now. That's why. So for performance, for the construction of this house, B pledged certain goods, sir. Be pledged certain goods. Now here, sir, as soon as his performance is completed, he has to give his goods back, right? So this is called performance of promise. Got my point, sir? So sometimes that is maybe like now here, observe carefully, sir. Observe carefully. Here, B is not liable to repay the amount, sir. He has not taken any amount. Listen carefully. He has not taken any amount. Whereas he has promised. He has promised to perform. What is the promise here, sir? To construct a house. So here repayment of debt is not there, but performance of promise is there. What is the performance, sir? To construct a house. After constructing this house, he can take his goods back. That's why here there are two elements. Now, so liable to pay. What is the duty of pawnee? Liable to pay the debt or perform the promise. Next, compensate the pawnee for any extraordinary expenses. Here the same, sir. Look at here. So in the previous example, we read now pawnee's right to claim. Sir, his right is our duty, right? Sir, for example, we gave some goods. We have pledged some goods, sir. He has to take reasonable care. For such reasonable care, the creditor kept in a safe custody. For keeping in safe custody, he might have incurred some expenses. So he can collect from us, right? So he has a right and we have a duty. Contract is nothing but rights and obligations only, no, rights and duties only, no, the same comes here. So listen here, sir. Right to, we have a duty to compensate. We have an obligation to compensate the pawnee for extraordinary expenses. Next, the duties of pawnee. So he has a duty to disclose all the faults. What do you mean by all the faults, sir? Sometimes whenever the pawnee is giving goods, so those goods must have some faults, no? So he has to disclose all those faults. Next, must indemnify the pawnee. For what, sir? Indemnification for any loss aroused. For, sir, in the previous case you have discussed, no, if on subsequent sale, sir, if there is any deficit on sale, this 4,000, sir, he sold the goods worth 10,000, but he fetched only 6,000. 4,000 is the deficit, no? That deficit has to be compensated by the debtor. Here the pawnee, it's the duty to him, sir. He must indemnify the pawnee. He must pay the deficit as well. Just now we have discussed. Indemnify means what? What is the difference between these two, sir? Here in this case of deficit. Here in this case of any loss incurred, sir. What do you mean by any loss incurred? Sir, he might, upon pledging the goods, sir, the goods might deteriorate, no? When he subsequently resells, sir, so he might not fetch any amount, no? So those amounts must be indemnified by the pawnee. Next, state the provisions relating to pledge by non-owners. Sir, this is as much similar as the sale of goods act, sir. So sale by non-owner, this is pledge by non-owner. So pledge by mercantile agent. What's meant by pledge by mercantile agent? Who is a mercantile agent? He is a business agent, sir. Sir, when a mercantile agent has pledged, who are this, sir? He is a non-owner. He is not owner of the goods. He is the pawnee. So pawnee might have some agent, no? Agent of the pawnee. Even this agent can pledge the goods with pawnee. That's the whole concept. Sir, now, even though he is not the owner, sir, there will be certain conditions that have to be fulfilled. If all the conditions have been fulfilled, sir, then the pledge by mercantile agent will give a good title. That pledge will be a valid pledge, even though agent has pledged the goods, provided this agent must have obtained the goods with the consent of the pawnee, his principal. Pledge by person in possession under a voidable contract. What is a voidable contract, sir? Here the aggrieved party will have an option either to affirm the contract or to rescind the contract. Now, pledge by a person who is in possession under a voidable contract. What do you mean by a voidable contract? Just now we have discussed, sir. Sir, under a voidable contract, sir, if the pledge happens before rescinding the contract, then the pledge would be valid. Otherwise, it would be invalid. Coming again, sir. Sir, if the pledge has happened before the aggrieved party has rescinded the contract, sir, then that is a valid pledge. Otherwise, it is not a valid pledge. In other words, if the pledge has happened after rescinding the contract by the aggrieved party, then it will not be a valid pledge. Next, what do you mean by the pawnee has a, yes students, pledge by pledge where the pawnor has a limited interest. What do you mean by limited interest, sir? Sir, for example, I will give an example here. Sir, when I am walking to a railway station, sir, so to board a train, sir, on the way, sir, on the way, I got a mobile phone, sir. I got a mobile phone which it does not belong to me. I am not the owner, right? I am not the owner. I am not the owner. I pledged the mobile phone. I pledged the mobile phone with Pani after incurring some after incurring some repair expenses to the extent of 10,000. Now my interest in the goods is limited to 10,000, right? And moreover, when, sir, here be careful, sir, when I pledged with the pani, when I pledged the goods with the pani, my interest is 10,000. Subsequently the true owner can recover this mobile from the pani, or yes sir, the pani, by paying this 10,000 only. Because I am not the true owner, whosoever the true owner is, he can recover the mobile phone by paying 10,000 rupees. So this is because his interest is limited, sir. So I am the true owner, but someone else has pledged my mobile. So in this mobile, in this contract of pledge, the person who is not the owner, his interest is limited to the extent of 10,000 rupees only. Next, sir. So pledge by a co-owner in possession. Sir, pledge by a co-owner. The same we have read in sale of goods act. Sir, there might be two owners for a single goods, right? So the ownership is joint. The ownership is joint for these goods. Sir, these goods can be pledged by any of the joint owners, provided these goods, whole of the possession of the goods must be with a single joint owner. If such a joint owner has pledged the goods with the pani, then it will be a valid pledge, sir, and there will be a good title. Next, pledge by buyer or seller or buyer in possession. Pledge by seller in possession or pledge by buyer in possession. These are two words, sir. Pledge by seller in possession or pledge by buyer in possession. What do you mean by seller in possession? Sir, for example, I have sold the goods. I have sold the goods. But still the possession is lying with the seller. He is the seller. He is the buyer. Already I have transferred the ownership. Still the possession is lying with me, no? If I pledge the goods which are in my possession, the pledge will be valid provided this pani does not know about the defect in my title. That means he is in a good faith. That in this case, sir, the pani will get the pledge will be valid and he will get a good title over the goods. Sir, then what do you mean by pledge by buyer in possession? Sir, before transfer of ownership only, before transfer of ownership, he is the seller, he is the buyer. So before the transfer of ownership only, he got the possession. The possession is lying with the buyer, no? The possession of the goods is lying with the buyer, no? So the buyer can pledge the goods with a pani. So who does not know the defective title of the buyer? That means the pani is in good faith. So this is the common point between seller and buyer, sir. The pani must not have any knowledge of the title of either by the buyer or by the seller. That means he has taken the goods on pledge with good faith. Next. So let us see the differences, sir. Bailment and difference between bailment and pledge. So in case of bailment, sir, the transfer of goods by one person to another person for some specific purpose. Here we will transfer the goods from one person to another as security for repayment of debt. So what are the terms applicable? Who delivers the good is called bailer. Who to whom it is delivered is called bailee. Who delivers is called panar. To whom it is delivered is called pani. Purpose. It can be for any purpose, sir. But here it must be made for a specific purpose, that is repayment of debt or What is the repayment of debtor? Performance of promise. Next, consideration. There may be a consideration, sir, gratuitous bailment, non-gratuitous bailment. Yes, here consideration will always be there, sir. So now, right to use. Bailee has a no right of resale. Here, Pani can sell the goods, but when, sir, after giving a prior notice. Right to use. Bailee may use the goods provided. So that is in the contract. So sometimes, sir, the concept of bailment is only for the usage of goods. I will give you a car on lease, sir. So that is what bailment. You can use the goods. So here in contract of bailment, Bailee may use the goods. Pani does not have any right to use the goods. Next, discharge. What is meant by discharge? When the contract when it is terminated, it is discharged when the purpose is fulfilled. What is meant by discharge, sir? Termination. Obligation coming to an end is called discharge. Pani does not have a right to use. Pani must not have any right to use the goods. He should not have any right to use the goods because the goods are only pledged, sir. We are not giving him to use the goods. That is not bailment, sir. So no. Return of goods. Gratuitous bailment, sir. Bail is bound to return the goods on demand by bailer in case of gratuitous bailment. So till the now, sir, in case of pledge, sir, till return of goods, till the debt is repaid, pledgee is not bound to return the goods. Upon payment of the debt or performance of the promise only, he may return the goods only, but not before that. Next. So difference between gratuitous bailment and non-gratuitous bailment. Difference, sir. Meaning. What is the meaning, sir? So without reward or consideration. Gratuitous means without reward or consideration. Here non-gratuitous bailment, consideration passes between bailer and bailee. What is the example for bailment, non-gratuitous bailment, sir? So gratuitous means something for free, right? So you gave your books to your junior, no, that's a gratuitous bailment. Sir, I gave my car on lease, no, that is a non-gratuitous bailment. What is the consideration? No consideration passes between bailer and bailee. So since it is gratuitous, because here it is, since it is non-gratuitous, means not for free. This is not free, sir. Means there must be some consideration. So some consideration passes between bailer and bailee. What is the benefit? It is exclusive. It is for the exclusive benefit of either bailer or bailee. When you gave your goods to your friend, sir, so whenever you gave your book, sir. Yes, sir. It might be for exclusive benefit of either bailer or bailee. You giving your books for your junior is exclusive benefit of such person, such junior. He is the bailee. That is exclusive benefit of bailee. But sometimes you give your goods for preserving or for storing. When you are going out or when you are going out of the town, you may give some goods to your neighbor for safe custody. No, that may be exclusive for the benefit of bailer. Either way is possible. No. Benefits, sir. It is for the mutual benefit of bailer and bailee. What is for the mutual benefit, sir? Non-gratuitous benefit. Sir, I giving a car on lease. For me, I will get some car lease rentals. For him, he will get the car, sir, for his usage. So it is for mutual benefit only. Liability of bailer for unknown defects. Liability of bailer, one who gives the goods for unknown defects. So it is a gratuitous bailment. No, bailer is not liable because we are giving something for free, sir. I am giving my car to my friend, sir, for using. So this is a gratuitous bailment. I don't recover. I don't take any consideration. I don't take any money from my friend. No, this is a gratuitous bailment. In such a case, I am not liable if I don't know the defects. If I don't know, I am not liable, sir. If I know, then I am liable. But if I don't know, in case of gratuitous bailment, then I am not liable. And in another case, sir, bailer is in what is another case? Non-gratuitous bailment means I am giving a car on lease. I am giving a car on lease. Bailer is liable to bailee for loss, whether I know the defect or I don't know the defect. Because I am collecting lease rental, no. When I am collecting lease rentals, I am bound to disclose all the facts because I have to give a good car. I have to provide him with a good car, sir. Because I am charging some money, I have to provide him a good car. If the car has any defects, sir, I will be liable whether I know the defects or I don't know the defects. So that will not change in case of non-gratuitous bailment, sir. Next, bailer's duty to bear expenses. All expenses are borne by bailer in case of gratuitous bailment. Yes, in case of non-gratuitous bailment, sir, bailer generally only extraordinary expenses shall be borne by bailer. What is this, sir? Sir, non-gratuitous means I am giving my car to someone else for rent. This is a non-gratuitous. Per day, I am taking 10,000 rupees as a lease rental for my car. In this case, if such a person, who is this sir? Bailey, he incurred any extraordinary expenses. If the engine got damaged, sir, then I have to pay that extraordinary expenses. All other ordinary expenses, sir, petrol expenses and all minor repairs, he has to pay, sir, because this is a non-gratuitous bailment. Next, termination of bailment. Bailer may prematurely terminate the bailment. Why, sir? Because this is a gratuitous bailment. Sir, those goods belongs to me, sir. I gave it for free so that I can recover anytime. But in case of non-gratuitous bailment, sir, bailment can be terminated only on expiry of specific period. What is the specific period? Specified period. That means the period of contract. So I gave my car to an X persons or on lease rent. I said I will recover the car, so within 1 week. So after completion of 1 week only I can recover the car, but not before, sir. So now, effect of death of bailer. If the bailer dies, bailment is terminated by the death of bailer or bailee in case of gratuitous bailment. In case of non-gratuitous bailment, bailment is not terminated by death of bailer or bailee, because there is a contract, sir. I asked him, Are, I will take my car back after 1 week. Even if the death occurs, sir, then it doesn't matter here in case of non-gratuitous bailment. Now, these are the differences, sir. So, from difference point of view, sir, this question is important. Difference between bailment and pledge, because when the examiner asks the question of differences, he will cover two concepts in one question. No, that's why there are lot of chances for asking the differences from here, and sometimes he might ask from contract of guarantee and all, insurance and guarantee also. So here, as of now, keep this as important, sir. So contract, difference between contract of bailment and pledge. Now, difference between general lien and particular lien. So these are the section numbers, sir. So sir, you need not to remember the section number, sir, because when you quote it wrong, sir, they will you lose marks simply, sir. So you need not pressurize your brain to remember the section numbers. So it's not that much important, sir. So, but as per section 171, sir, the general lien is quoted in section 171. So, in particular lien case, sir, section 170 refers about particular lien. What do you mean by what is the meaning of general lien, sir? It is the right to retain any property of the bailer for general balance of the account. General balance. But what do you mean by particular lien? It's the right to retain only for a charge for the labor employed. Here, I will tell you about particular lien, sir. I gave a watch for repair, sir. So when I have not paid the amount of repair, the person whom the mechanic can retain the watch. In case of general lien, sir, in case of banks, so even the whatever the banks are there, sir, let us think this is the bank, sir. It gave me several debts. But I gave only one security, sir. Even though I have paid the securitized debt, sir, against first debt I give security. I have repaid the first debt also. Now the bank may not give the secured property back, because I am still liable to pay two more debts, no. So that's why the bank can retain my secured property with itself. So this is important, sir. Automatic. A general lien is not automatic, it is automatic, sir. That means it has to be stated in the contract. Availability, sir. General lien may be exercised even though no labor. Means if you have not done work on such property or such subject matter, the general lien can be exercised. But whenever a particular lien, we are talking about a particular lien, sir, it is available only when some services involving exercise of labor. That means there must be some work done on the piece of goods. In the previous example, sir, when the mechanic took watch, sir, he must have been repaired, or he must have been worked on that watch, sir. Then only he can exercise a particular lien. Without repairing, he cannot hold my watch back with him. Right. Persons entitled. Bankers. Who are entitled for general lien, sir? Bankers, wharf engineers. Sir, what do you mean by wharf engineers? It's a kind of warehouses and all. So, policy brokers, just like brokers, sir, are entitled to general lien. In case of particular lien, sir, bailey, finder of lost goods, pledgee, etc. are entitled to particular lien. This is the concept of bailment and pledge, sir. Yes, we'll discuss subsequent concepts also. So as far as exam point of view, sir, so the differences questions are important in concept of gratuitous bailment, non-gratuitous bailment, and moreover bailment and pledges, sir. So we'll discuss in next chapter. Thank you. Hi students, let us see the concept of pledge today. So students, now first of all, while learning about the pledge, we have to know the essential features of pledge. Sir, what is pledge? Basically, for example, sir, whenever we owe a debt to someone else, or we trying to contract a debt, such other person, such creditor may ask for some security, right? When he is asking for security, we have to give some movable goods. We will give some movable goods as security. That means we are pledging these goods as a security for the debt or for a performance of a contract. So here also, just like bailment, the goods must be the subject matter. Likewise, there are certain essential elements for contract of pledge. So what are those essential elements, sir? First of all, we are not just bailing the goods for some consideration. No, this is not purely bailment, sir. Of course, this is part of bailment, but here we give the goods as a security for a debt, or performance of a promise, For as I said, the creditor might ask some goods as a security. No, for such security, we will give some goods, or we will deliver some goods to the creditor. Next one, sir, the goods must be the subject matter. Of course, in case of bailment also, the goods must be the subject matter. So that means not the fixed assets and all. So the goods means mostly movable goods, right? Not mostly, exactly, that goods must be movable goods. So must be the subject matter. So why only movable goods? So that we can deliver the goods to the, so that other person who, sir, will go into the person, sir. We'll name the persons pledge or pledgee, so, or pana or pani. So we'll discuss that. But as of now, the goods must be given as a security, and the goods must be the subject matter. As you know, the goods must be pledged, the goods pledged must be in existence. So what is this? What is this goods must be in existence? That means these must not be future goods. The goods must always exist, sir, so that we can deliver. No, of course, the goods which are future goods, that's what we learned in sale of goods act, right? So in sale of goods act, we learn about future goods also. But here the goods must be in existence, means existing goods, sir. So that since the goods are existing only, if the goods are existing, we can deliver the goods to the pani, right? So we'll discuss the persons, sir, parties to the contract of pledge. Now these four are essential elements, sir. So first one, security, goods must be the subject matter, the goods pledged must be in existence, and delivery of goods. Sir, most of the points are very much similar or very much nearer to the concept of bailment. Let us discuss, sir. So rights of panar and pani. Who are these panar and pani? Listen, sir. Sir, this creditor, he is the creditor. He asked, he has to lend some money to the debtor, no, then only he will become creditor. So while he is lending rupees 10,000 to the debtor, so this debtor has pledged certain goods with the creditor. Now the goods are the subject matter. So this, he gave it as a security. So goods are the subject matter. The goods are already in existence, and there is also delivery of goods. So this is a contract of pledge. Now this creditor, what do we call this creditor, sir? Now we call this creditor as pledgee or pani. We call him as pani. So we call this debtor as panar. Just like a bailer, bailee, we call them as panar, pani. Just like a bailer and bailee, we call in the contract of pledge, we call them as panar and pani. Now let us discuss, sir. So state the rights of panar and pani. What are the rights of panar and pani? Now the rights of panar and pani, sir. So now the rights of panar is, panar can redeem goods pledged. Redeem, what do you mean by redeem? He can pay the debt and he can take back the goods, right? Just like a redeem means taking back. We read about redemption of debentures also, right? The same way, sir. So we can pay back and take the goods back, right? Now rights of pani, sir. Let us see the rights of pani. Yes, sir. So this is not retainer, sir. Rights of the goods pledged. Right of retaining means, what is right of retaining? Now what are we discussing, sir? Rights of pani. Who is the pani here? He is the creditor is the Pani, right of retention. So we sir, if the debtor has not paid the amount due, the creditor has, that means the Pani has right to retain the goods pledged. Remember sir, we're reading about Pani. So that means creditor in our example. So we can, this creditor can retain the goods with him till the payment of price or payment of the amount due by the debtor, that is Panar. Now, right to retention of subsequent debts. Sir, sometimes the debt, a single creditor may give multiple debts, no? Multiple debts to a debtor. So, this creditor in our example may give multiple debts, no? So, just like a concept of generally in a particular lien. Sir, for example, he gave multiple debts. First time he gave 10,000, next time he gave 11,000, another time he gave 12,000, for example. Now, the goods which are pledged can be retained. What is meant by retain? We have to keep the possession with oneself. No, that means the creditor can keep the goods with himself till the whole the amount of the debts are paid. Means all the amount of debts are paid, till the creditor can retain the debts. That means even though the debtor paid 10,000 rupees, the creditor need not give. Even the debtor paid 11,000 rupees, the creditor need not give. So he can retain the goods till the last debt is repaid by the debtor, that means Panar. Now, Pan is a right. So, Pan is a right as to extraordinary expenses incurred. What do you mean by extraordinary expenses incurred? Sir, the debtor has given, just now given some goods as a security, no? For preserving these goods, sir, for preserving these goods, the creditor, that means the Pani, has to take some place on hire, or he has to incur some expenses, no? Those might be perishable goods. If the goods are perished, that might be not of much use at later in point in time, no? That's why these goods has to be preserved. If such expenses are incurred by Pani, so he can collect the expenses, or he has for such expenses incurred by him, he can collect from the Panar. So Pan is right as to extraordinary expenses incurred. Pan is right where Panar makes default. What do you mean by Panar makes default? Sir, on the due date, the debtor failed to pay. That is called default, no? When the Panar has made a default, Pani will have this below rights. If the Panar makes default, what will happen, sir? He can retain the goods, right? Sir, just like a sale of goods act, no, he can retain the goods and then subsequently he issue a notice of reasonable length. So the creditor will give a notice. Array, if you don't pay within reasonable time, I will sell the goods to someone else. Like that, he can resell the goods upon giving a notice. Next, what if there is a surplus, sir? If there is a surplus on goods sold, for example, in the earlier case, the debtor took 10,000 rupees, no? Debtor took 10,000 rupees, no? The creditor took goods worth 10,000 rupees, for example. But upon, these are the goods. Upon default by the debtor defaulted, sir. That means debtor has not paid the money on the due date. Now listen, sir. He gave a notice to the debtor. Array debtor, if you not pay within 15 days or within 1 week, he will give a reasonable time, sir. After such time also, even if debtor has not paid, then the creditor can sell the goods, right? Now listen, sir, when he sold the goods, he got 15,000 rupees, sir. So, out of this 15,000 rupees, actually debt he given is 10,000 rupees only. So, he can retain maximum of 10,000 and this excess or surplus should be given to the debtor because the amount he given is only 10,000, no? That's why, so of course, subject to contract, sir, but usually the law says, if you got any surplus, array creditor, array Pani, if you got any surplus, you have to give it back to Mr. Panar. In the what if there is a deficit on sale, sir? Sir, if there is a deficit on sale, sir, we can make the debtor liable. We can collect. For example, these 10,000 goods has fetched only 6,000 rupees. We can still collect 4,000 rupees. On sale, he gave 10,000 rupees goods worth, no? So we sold it at 6,000 rupees because the goods, the demand went down, sir. So now the market is in a bad condition. That's why we got only 6,000 for the goods worth we sold 10,000 rupees. We got only 6,000, but we gave 10,000 to the debtor. So still we have to get 4,000 rupees. For that 4,000, we can make the Panar liable. Yes, sir. Now, state the duties of Pani. Who is the Pani here? Creditor. No, sir, the goods are as a security, the debtor gave certain goods to creditor, no? Now those goods must be taken care of, right? Like that, there are certain duties of a pani. So let us look into the duties of pani. Reasonable care. Yes, sir, he has to take reasonable care. What do you mean by reasonable care? As if the goods are your own, you will take some care, no? So that's why, like that, you have to take a reasonable care, sir, as a man of ordinary prudence. Next, you should not make any unauthorized use. Sir, he gave it unauthorized use means, look at here, sir, this is unauthorized use. If it is authorized, it is well and good, sir. If the contract is specified, then it is well and good. If the contract has not specified, but still the goods are being used by the creditor, then it is called unauthorized use. You are not supposed to use for any unauthorized purpose, otherwise than specified in the contract. Return the goods. Sir, after payment, you have to return the goods. These are the duties of pani, the creditor, right? So keep the creditor in mind, and you will be able to answer all these points, sir. Now you should not mix these goods with your own goods, sir. Yesterday, in case of bailment also, we read something like this, right? Sir, if the goods are separable and if the goods are not separable, the expenses of separation, like this, sir. So you should not mix the with your own goods. Not to do any act which is inconsistent with. That means you should not pledge or sale. You should not do any, because you are not the owner of the goods. You are not the, since you are not the owner of the goods, you are not supposed to resell the goods, or you are not supposed to pledge the goods. Next, return accretion. Sir, yesterday we read one calf example on dog, baby, puppy example on dog. So whenever there is an addition to the goods pledged, including that, for example, this debtor has pledged 10 grams gold, sir. Yesterday I gave you example, gold example also. Now the value increased, sir. So he gave 10,000, because he gave 10 grams, he gave 10,000, sir. Now the price went up. Now the price of the gold went up. Now the value of 9 grams gold is itself 10,000. Value of 9 grams gold is 10,000. Earlier the value of 10 grams gold is 10,000, sir. Now the value of 9 grams gold is 10,000. Now the Mr. Creditor, who is the creditor, the pani, should not claim that, Are, I will give you gold worth 9 grams only. No, sir, that's not correct. Why, sir? Why it is not correct? Because what is the number of grams given by the debtor to creditor? 10 grams. He should give it back 10 grams, sir, but not 9 grams. If there is any value addition also, he has to add back that value and give whole of the amount of the goods pledged, sir. So you should not hold back any goods with you. Next, state the duties of pawners. Duties of pawners. Who is the pawner, sir? Pawner is the debtor, the one who gave the goods on pledge. Now, duties of pawner. Liable to pay the debt or perform the promise. Duties of pawner. Liable to pay the debt. You are liable, since you took the debt, you are liable to repay, sir, or perform the promise. Sir, what is this perform the promise? For example, sir, there are two persons. Now, in the earlier example, he gave goods as a security. Sometimes he may liable to perform the promise also. What do you mean by perform the promise? Listen here, sir. In this context, let us start our discussion on indemnity and guarantee concept. So what do you mean by indemnity? Indemnity means, in literal terms, to compensate something or to compensate someone for the loss occurred. So as per Indian Contract Act, what do you mean by indemnity? Indemnity means security against loss or to make good the loss. That means to compensate. To make good the loss means to compensate. To compensate. Or to compensate the party who has suffered some loss. Sir, to make good the loss means if you have incurred loss, so that has to be compensated at the, for example, Mr. D has taken money from Mr. C. Mr. C is the creditor, Mr. D is the debtor. He is Mr. I. Now, I may promise Mr. D that if you don't pay the money, the C may sue you, no? The C might sue you, because if you don't pay on the due date, there will be breach of contract. For such breach, Mr. C may sue you. Then For such a suit, if you have incurred any loss or any expenses, I will compensate you. I will compensate you. I will indemnify. I will indemnify. This is called contract of indemnify. Here the contract is between I and D. So, like now listen students. So, here it is a security against a loss incurred by D. Why the loss has been incurred by D? Because since the suit has been filed by C for non-payment of money taken by D. Here literally indemnity means security against loss or to make good the loss or to compensate the party. Sir, what do you mean by compensating? Sir, listen, C sued D, sir. He might have incurred an expense of 1 lakh for the court fees and all. So for defending the suit, he might have incurred some expenses. No, such expenses shall be compensated by I to D. Got my point, sir? That is called to compensate the party who suffered some loss. Right. Now, what is as per section 124, contract of indemnity is a contract by which one party promises to save the other. What do you mean by the other? The other party. A contract by which one party promises to save the other from loss caused to him. Whatever the loss caused to D will be compensated or will be given by I in our present example. So, a contract by which one party promises to save other from loss caused to him. Sir, obviously this 1 lakh is lost to him, no? Because, sir, this might happen like this. So, initially D might have come to I for asking money. Array D, I need some money for my personal purpose. So I might have told, array D, I have no money right now. You better to go and check with Mr. C. If C gives and if you default on the due date, if C gives the money and if you fail to return the money back, then he might sue you. Then if you incur any expenses in relation to that suit or in relation to that complaint raised by C, since you have breached the contract, I will compensate you. I will compensate you. This might happen like this. So here a contract by which one party I is promising to save the other from loss caused to him by the conduct of promisor himself or any other person. Sir, this loss, whatever the 1 lakh loss he incurred, no, this could be, for example, this loss could arise from either the promisor I or any other person C. So, either way, sir, either way. So, if I is willing to compensate, sir, for the loss incurred by D, this is a contract of indemnity. Now, there are two parties in contract of indemnity, sir. Who are the two parties? Indemnifier and indemnified. The party who promises to save other party from loss is known as indemnifier. The party who promises, here I is promising, no, he is called indemnifier. So just like insurer, insured. So in the same way, sir, contract of indemnity, so indemnified is the party who is promised to be saved against the loss is known as indemnified or indemnity holder, right? Sir, if you look into the essential elements of a valid contract of indemnity, sir, first of all, it must be a contract, no? First of all, it must be a contract. Sir, here, let us recall the concept of indemnity, sir. Sir, for example, in case of insurance, the better example is insurance. You know the insurance, right? So, here, the parties will call, since it is a contract of insurance, we call those parties as insurer and insured. But here, we call them as indemnifier, indemnified. So, the person who got insured is called insured. Here, sir, for example, what is the concept of insurance, sir? Sir, Mr. B, a businessman. So, he has a warehouse. Sir, in that warehouse, he will store all his produce, agriculture produce and all. Now, he may take insurance from the insurance company. Here, for any loss he might incur, sir, there might be a fire outbreak or any accident, so no, that's why he might lose all these food grains, no. So, for this loss incurred, the insurance company is trying to indemnifying Mr. B, the businessman. Here, who is indemnified? B is indemnified and insurance company is indemnifier. So now let us go into the essential elements, sir. Let us go into the essential elements. What are the essential elements of a valid contract? Valid contract of indemnity. Sir, if you observe, sir, these are all essential elements of a valid contract as per section 10 of Indian Contract Act. So offer and acceptance, intention to create legal obligation, that is enforceability. Now consideration, competence of parties, that means like legal capability, free consent, lawful object, agreement must not expressly declare to be void, the terms of the agreement must not be vague or uncertain, an agreement to do impossible acts. So all these are covered in section 10, sir. So whatever the section 10 has prescribed certain elements, and also some elements which are not prescribed by section 10, there might be at least two parties, those elements also must be required to be satisfied in order to a contract of indemnity to be a valid contract of indemnity. So all the essential, in simple terms, all the essential elements must be satisfied. Now rights of indemnity holder. Rights of indemnity holder. Who is the indemnity holder? In the case of insurance, who is the indemnity holder? So the person who, the businessman is the indemnity holder. Now what are his rights? So rights of indemnity holder or indemnified. Who is indemnified? Here he is the indemnified. The party who is promised to be saved against the loss. To be saved against the loss is the indemnified. Now students. So what are his rights as an indemnity holder when sued? All damages which he may be compelled to pay in a suit. Now in our previous example, sir, D took money from C, D took money from C, which is promised by I to compensate. Just a minute. This is D. Yeah. So whatever the expenses incurred by D in consideration with the suit, so he has incurred 1 lakh rupees. No, for this 1 lakh rupees, Mr. D can claim 1 lakh from Mr. I. So here D is indemnity holder. All damages which he may be compelled to pay in a suit. Sir, since this is a breach of contract, sir, the general remedy for a breach of contract is to claim damages. So the court may ask Mr. D, since he breached the contract, to pay some damages, right? So that's why if D incurred any damages in relation to the suit, so the court may ask him to pay the damages. Now these damages can be collected by D from I. So next, all costs which he may have been compelled to pay in bringing or defending the suit. What is bringing or defending the suit? Listen here, sir. Sir, if C filed a case on D, that might be a contract, that might be a breach from D. So if C filed a case on D, now D has to pay the expenses, right? That means there is a breach from the point of D. Since there is a breach from point of D, D has to defend the suit, right? For defending the suit also, he might have incurred some expenses. For defending the suit, because C filed a case. Now the case is C versus D. So D is the defendant, C is the plaintiff, right? So since D has to defend the suit, D might have incurred some expenses now. So come otherwise, sir. Sir, I asked D to take the money from C. So C said, I will give you money. He entered into the C and D entered into the contract. C promised that, I will give you money within 1 week. I will give you money within 1 week and you have to repay me within 3 months. This is the terms of the contract. Listen here, sir. Listen here. So there is a contract between D for debtor, C for creditor. D for debtor, C for creditor. Now Mr. C might have entered into an agreement with D that, C, I will pay you money within 1 week, which you have to repay me within 3 months in time, within 3 months. These are the terms of the contract. What if these are the terms of the contract. What if C has failed to give money within 1 week to D, sir? Then this is a breach of contract from the point of C. C has breached the contract. Now D may file the suit. D may bring the suit to the court. D may bring the suit against C. D may file suit. D may file suit since there is a breach of contract from point of C. So C breached the contract. Now what will I do, sir? What is the relevance of I here? Now who asked D to go to C? I asked no, and also he promised in an agreement that array if you incurred any loss in relation to this contract you entered with C, I will compensate you for such amount of loss. Since here D might have incurred some expenses while filing the suit on C, such expenses also has to be compensated by I. That's why here there are two terms, sir. Hope I am clear. So that's why, so all costs which he may have been compelled to pay in, who is he, sir? D might have been compelled to pay in bringing or defending the suit, and all sums which he may have paid under the terms of compromise of suit. What is meant by compromise, sir? No. So sometimes, sir, sometimes what do you mean by compromise, sir? Compromise and arrangement is D. He is C. Sir, C may, if D breaches the contract, C may sue D, right? So for not suing, sometimes C may demand some amount from D. No, whatever the amount demand by C has to be paid by D, and this amount whatever paid by D can be collected from I. That's the whole point here, sir. So whether it is a compromise means C said I will not go to court provided if you pay me some money. So such money also in relation to this arrangement or this compromise has to be paid by Mr. I in this given case. Now, so these are the rights of indemnity holder when sued, sir. What is meant by, now we'll go to contract of guarantee. What is contract of guarantee? A contract of guarantee is a contract to perform the promise made or discharge the liability of a third person in case of his default. We know this, sir. There will be three parties. So keep the parties aside, sir. Now let us dive deep into the definition. A contract of guarantee is a contract to perform the promise made or discharge the liability of a third party. A contract of guarantee is a contract to perform the promise made in relation to a third party. For example, Mr. B, Mr. O entered into a contract. B is, as per the terms of the contract, sir, B has to build a house to Mr. O. Now O should be the owner of the house. Now this big building, apartment, sir. So since there is a contract between O and B, now here there will be another party, yes, sir. Now S will promise O that, array, if B failed to perform this promise, what is the promise? B's promise is to build an apartment for O. This is the promise. Now S will give a guarantee to O that, array, if B failed to perform this promise, I will build it for you. So this apartment I will construct. So that's why this is called contract of guarantee. Now let us go to the definition once again, sir. So a contract of guarantee is a contract to perform the promise made or to discharge the liability. Here we just saw the example for promise made, sir. So discharge the liability. Here in the same example, sir, D has taken money from C. Here, who is he? Yes, sir. Now listen, this C creditor will give money to the debtor, right? But provided there must be some assurance from yes. If D has not paid the money on due date, I will directly pay it to you. Remember, students, in a contract of indemnity, there will be only two parties, indemnifier and indemnified. And in a contract of guarantee, there are three parties. We will look into the parties also. But remember, so there is a liability for D to pay to C, no. But if the D has not paid, now this liability will be repaid, or this liability will be given by S to Mr. C. So, in a contract of guarantee, there will be three parties. A contract of guarantee is a contract to perform promise made or discharge the liability of a third party in case of a default. Now, who are the parties, sir? In a contract of guarantee, there will be three parties. Who are these parties, sir? Surety, principal debtor, creditor. Let us go back to our example, sir. So, let us go back to our example. C is called, who is C, sir? Creditor. D, principal debtor. Why is called principal debtor, sir? Why not debtor? I will explain, sir. Who is S, sir? Surety. S is called surety. Why is called principal debtor, sir? Sir, whose obligation is comes first? That means since C gave money to D, D has a primary obligation to repay the money, no? S has a secondary obligation. That means S will pay the money, S will discharge the liability only if C does not discharge. D does not discharge. That means if D hasn't paid the money, then only S will pay. So the principally D is responsible, sir. So yeah, the primary responsibility lies with D. That's why D is called principal debtor. Of course, S is also a sort of debtor, because even S has to repay at some point in time if D fails. That's why S is, but S is not, S's obligation is not primary, it is secondary obligation, and D's obligation is primary obligation. So, is called principal debtor. So, surety, the person who gives guarantee is called surety. Principal debtor, the party in respect of whose default the guarantee is given. Whose defaults are? So, if the D is defaulted, that's why the guarantee is given. So, the party in respect of whose default? D is default. So, that's why D is called principal debtor. The creditor, the person to whom the guarantee is given. To whom we gave, S gave guarantee, sir? To C. So, creditor is C, the person to whom the guarantee is given in our example. Next, tripartite agreement. Tripartite means three parties, sir. A principal contract between the principal debtor and creditor. There will be a contract between the creditor and debtor. Since creditor is giving the debt, since C is giving the amount to D, there will be a contract on a secondary contract between creditor and surety. Now, what is the secondary contract between creditor and surety, sir? So, S gave guarantee, no. If D fails, S has to pay to C, no. So, there is a secondary contract between creditor and surety. And also, there is an implied contract between surety and principal debtor. What is the implied contract? Listen here, sir. Listen here. There will be three parties, no. Surety, debtor, we'll call it as principal debtor, and creditor. Now there will be a contract between them, principal debtor and creditor, contract 1. There will be a contract between surety and creditor, contract 2. There will be an implied contract between principal debtor and surety. What is this implied contract, sir? Now, if S pays to C, later he can collect the amount from D. No, for example, C gave 10,000 rupees, sir, 10,000 rupees or 1 lakh. So, if principal debtor has not repaid on the due date, S has to pay this 1 lakh, no, sir, but this 1 lakh is paid on behalf of principal debtor, right? So, now S can at later point in time, after paying this 1 lakh, can collect the 1 lakh from Mr. Principal Debtor. So there is an implied contract, sir. It is very implied from the Indian Contract Act, but literally there will be no contract, sir, but it is implied here, so that is called implied contract. Next, so this is a tripartite agreement, sir. So state the essential features of a guarantee. So requisites are essential features of a valid guarantee. What is the purpose, sir? The purpose of guarantee being to secure the payment of a debt. So securing the payment of a debt means, so here we are giving security to C, creditor, for the debt taken by the principal debtor. Consideration. A contract of guarantee should be supported by some consideration. Of course, there will be some consideration in a contract of guarantee. Competent parties. If the principal debtor is incompetent to contract, principal debtor. Who is principal debtor? The one who has taken money from creditor. The contract of guarantee is valid. if the principal letter is incompetent. Why, sir? Sir, for example, C gave to money to principal letter. Principal letter is a minor, let us assume. So we cannot make minor responsible, no. But even though we cannot make minor responsible, we can make the surety responsible, no. That's why principal letter can be an incompetent person and the contract of guarantee is valid. But if surety is incompetent, what will happen here, sir? Now let us assume here surety is a minor. Let us assume here surety is a minor. If the surety is a minor, if the principal letter has not repaid the debt on the due date, we has to make surety liable now. But here surety is a minor, we can never make him personally liable. That's why surety should not be a minor. That means surety should not be an incompetent person. So if if surety is incompetent, the contract would be void, sir. Now, the existence of liability. Of course, there must be an existing liability, sir. Sir, you can't guarantee a future obligation, sir. So the liability must be existing. No misrepresentation or concealment. What are we trying to conceal here, sir? Concealment means trying to hide. So a guarantee which has been obtained by means of misrepresentation made by the creditor and keeping silence as to material circumstance is invalid. Listen here, sir. For example, sir, remember, we explained that contract of guarantee involves not only discharging of a liability but also performance of a promise. What is performance of a promise? Sir, earlier we discussed a house owner example, build apartment example just now. So that is called performance of a promise. If B hasn't built the apartment for O, now who has to build, sir? Mr. S has to build the house to Mr. O. That is called guaranteeing the performance of promise. Now listen, students. Here, so is Mr. O. He is the owner of a business entity. He is Mr. E. He is the, let us assume E. He is the cashier in O's business. Now listen, sir. Sir, here he has lot of times embezzled the cash. Embezzlement means he has taken away the cash from the business unauthorizedly. So he has no authorization, sir. He has taken away the cash and he has misappropriated the cash a lot of times, sir. Now there comes Mr. S, sir. So O asked, "Are E to retain you?" O asked Mr. E, "Are E to retain you in employment?" That means to keep you in employment, I need a guarantee. Now at this point in time, sir, E went to S and S gave the guarantee to O. But while taking the guarantee, O has not informed S that about the past misappropriation. Sir, in the past, E has misappropriated some cash, no, but Mr. S has no knowledge or S is not acquainted or informed, sir. So X has no knowledge of defaults committed by E. So X has no knowledge. X gave guarantee, sir. Sir, no one will give a guarantee to a person who misappropriates cash, no. But S don't know and S gave a guarantee on behalf of E to O. So this kind of guarantee is invalid. Sir, if yes, no, sir, S will not give guarantee, no. That's why neither O nor E informed S about the misappropriation. So the guarantee has been obtained by misrepresentation or concealment. Or concealment means to hide a fact. Right now, therefore, this contract of guarantee is invalid. Writing not necessary. A contract may be a guarantee may be either oral or written, just like a contract. Joining of other co-sureties. When a contract of guarantee provides that a creditor shall not act on it until any other person has joined in it as co-surety. Who is a co-surety, sir? There will be S is the guarantee person who gave guarantee. S is the surety in example. No? So let us assume he is S1 and he is S2. Now he is principal letter, he is creditor. In the terms of the contract, sir, they have mentioned that this there must be co-sureties, means at least 2 or more. So C cannot claim any money from guarantors unless S2 also joined. That means when a contract of guarantee provides that, in the contract it is provided that a creditor shall not act on it, shall not sue upon it until another person has joined in it as co-surety. That means, listen here, sir, I will give an example. Sir, now there is a contract between principal debtor and creditor, principal debtor and creditor. So this principal debtor, in this contract of guarantee, sir, they asked the guarantee of yes, sir. Yes, said, since the amount is large, this amount is 1 crore. This amount is 1 crore. I'm just giving you an example, sir. This is an amount of 1 crore. Since if principal debtor has defaulted, I have to pay this 1 crore, no, but I cannot repay 1 crore. I have no such money, sir. No so much of money. So I ask to take, I request you people to take another person as a surety, so that I will be S1 and another person as yes, sir. He is S and he is S. Surety, another surety. So now these two persons are surety. No. Now if the another surety has not joined this contract of guarantee, this creditor will not have any right to sue this surety, because this surety in the contract of guarantee itself he mentioned that if any other co-surety join only, I will give guarantee, otherwise I will not. So if the other, until unless the other another surety has joined the contract of guarantee, so this will she cannot claim any money from surety. This is the whole point, sir. Now, what are the different types of guarantee? What are different types of guarantee, sir? Listen, specific guarantee and continuing guarantee. Two types, sir. What do you mean by specific guarantee? Let us read here, sir. A guarantee given to a single object, single debt, or a specific transaction, single debt or a specific transaction, or a simple guarantee is called specific or simple guarantee, or ordinary guarantee. Surety's liability comes to an end when the guarantee debt is repaid. Sir, here principal debtor has taken a debt, a single debt from creditor. Here, if the principal debtor has not repaid this debt, sir, principal debtor has not repaid this, surety will be liable. Surety, while giving guarantee, sir, he gave guarantee for only this debt, for only one debt. Now, sir, if the creditor has given another guarantee and the principal debtor has failed to repay, this surety won't be liable, since the surety gave guarantee for only one debt, so for only a specific debt, but not a series of debts, sir. That is why it is called specific guarantee. What do you mean by continuing guarantee, sir? And moreover, in case of specific guarantee, as soon as the principal debtor has repaid the first debt, sir, then it will be the contract of guarantee comes to an end. So at later in point in time, even though C gave another debt, that will not be a contract of guarantee, since S specified the guarantee only for the first debt but not to the second debt. Now, what is meant by continuing guarantee, sir? A guarantee which extends to a series of transactions but not a single transaction. The guarantee which extends to a series of transactions is called a continuing guarantee. Is called a continuing guarantee. So, continuing guarantee means, example. Now, listen, sir. He is Mr. P. He is Mr. P. His name is Pushpa. So, he is a student, sir. He is a CA Foundation student. He is Mr. T, sir. He is Mr. T. Sir, think him as a major, sir. Not explained, you have to assume he as a major, sir, but not minor. Okay. Now, Mr. T is a owner of a tea shop. Owner of a tea shop. Sir, Mr. P has a habit of taking tea daily after the completion of classes, sir. Now, Mr. F came to Mr. T. Mr. F is the father of P. F is the father of P. Now, so Mr. F, if Mr. F went to Mr. T and informed him, if my son has not repaid any of the any amount for the tea, sir, the coaching will last for 2 months. In these 2 months, if he has not paid, the money for any the tea he has taken, then I will pay it to you. I will pay it to you. Means F is giving guarantee to Mr. T that if Mr. P failed to give any money, so any money for the T has taken for in the 2 months, whenever sir, if P failed to take, so F has to repay the money to Mr. T. Since here F is giving guarantee, so is called surety. T is the, who is T sir? He is the creditor, P is the principal debtor. Now listen here sir, if Pushpa failed to pay sir, F, but here you have to observe one thing sir, the guarantee is not for a single T sir, it's a series of T's. That means it's a series of transactions but not a specific transaction. This is called continuing guarantee sir. This will be valid for 2 months. This will be valid for 2 months. The contract of guarantee which extends a series of transactions is called continuing guarantee. Surety's liability continues until the revocation of guarantee. So revocation means sir, if the contract specified, so you have to follow the contract. If the contract has not specified, for example, so in the terms of the contract sir, so there is no this 2 months and all. So his father just came and said, "Arey Mr. T, whatever my son, whatever the T has taken by my son, if he fails to repay, I will pay it to you." There is no time involvement, sir. Since there is no time involvement, the guarantee continues, sir. So this is called continuing guarantee. And whenever F comes back and revokes, revoke means to withdraw the guarantee. Till that, at that point in time, the guarantee continues. After revocation, the contract of guarantee will be terminated. Next, sir. So, yeah, surety's liability continues till until the revocation of guarantee and is liable for the unpaid balance. Unpaid means, sir, Mr. Pushpa has been paid to some one or two T, no, some TC might have been paid, no, but for the other unpaid balance, whatever the unpaid balance is there, no, for that only who is liable? Who is liable? Father. Mr. F is liable to the extent of unpaid balance only at the end of guarantee. Now, nature and extent of surety's liability. What is the liability of surety, sir? The liability of surety is coextensive with that of principal debtor. Sir, both are liable only initially. Liability of surety is secondary in nature but not primary. Why, sir? First principal debtor is liable and then the surety is liable. Now, when a debtor cannot be held liable, the liability of surety also ceases. What is meant by debtor cannot be held liable? Sir, if there is no debt, sir, if there is a the debt has been terminated or the debt has been time barred. If the debt has been time barred, sir, you cannot sue the principal debtor, no. Then you cannot sue surety also. When a debtor cannot be held liable, for example, time barred debt, sir, in case of a time barred debt, so you cannot hold the principal debtor liable, no. So the liability of surety also ceases, means it will also be stopped. The creditor may choose to proceed against a surety first. Yes, that's up to him, sir. He can go to surety and he may demand money from surety. Of course, even now the surety has a right to ask the creditor to go to principal debtor first. So we'll discuss that at later point in time. So sir, this is called liability of surety. This is the liability of surety. Let us continue the discharge of surety in various cases. Now, so discharge of a surety by revocation of guarantee. Sir, what do you mean by revocation? Revocation means to take something back or to withdraw. In simple terms, revocation means to withdraw. When you revoke guarantee, the surety will be discharged. The liability of surety will be no longer existing. That means a discharge of a surety by revocation of guarantee. Let us see, sir. Sir, in case of continuing guarantee, the continuing guarantee may be revoked at any time by surety as to future transactions. Sir, what do you mean by continuing guarantee, sir? So it extends for a series of transactions, right? So a continuing guarantee extends for a series of transactions. Now here, if the continuing guarantee is revoked, for example, in the last time I gave an example, sir. What is that example? For example, a student buying certain necessaries from a shop. Sir, his father may give guarantee to the shopkeeper that if the student fails in repayment of any transaction, then the father will come and pay. So here the father is the surety, student is the principal debtor, shopkeeper is the creditor. So here, but such guarantee will last long for a series of transactions. For example, a particular month. So whatever the purchases made by the student in a particular month has been given guarantee by his father to the shopkeeper. So in such case, the continuing guarantee may be revoked at any time by surety as to future transactions. So what do you mean by as to? Means nothing but relating to. As to means relating to the future transactions. by serving notice to the creditor or creditors. Now the shopkeeper, the father of the student can serve a notice. That means, array shopkeeper, Mr. Creditor, I am revoking my guarantee that was given earlier in with respect to my son's purchases. So, like that, with a notice, a guarantee can be revoked, sir. Once the guarantee is revoked, the surety is not liable for any future transactions, of course, because once it is withdrawn, it will be withdrawn. No, sir, the guarantee will not be existing for the remaining transactions. Now, a revocation of continuing guarantee by surety's death. Surety is no more, sir. Surety passed away. Means that means surety is dead. So, in absence of any contract to the contrary, death of the surety operates as the revocation of continuing guarantee as to future transactions taking place after the death of surety. Now, sir, if the surety is no more, surety is dead, sir. Sir, in absence of any any contract to contrary means generally upon death of the surety, the guarantee will be revoked. But if there is a contract between the surety and the principal, surety and the creditor, that surety, whether I die or not, irrespective of my life, that means, listen here, sir. So, while giving the guarantee, in the contract of guarantee, the surety may specify that even after my death, the guarantee will be existing. Sir, then how can we make liable, sir? We can make his property liable. We can make the surety property of surety liable. So, in case if there is any contract like this, if there is no such contract, sir, then the guarantee will be revoked automatically. Got my point, sir? Yes, sir. Now, by novation. What do you mean by novation? Something new. What do you mean by novation, sir? Sir, in Indian Contract Act also, in case of performance of a contract, in case of a discharge of contract, in those concepts, we use a term novation. What do you mean by novation? Listen, students. So, substituting a new contract in place of a old one is called a novation, right? So, the surety under the original contract is discharged. What are we reading, sir? We are studying about the revocation of guarantee. So, the surety will be discharged, right? The surety will be discharged. The surety under original contract is discharged. When he will get discharged, sir? If a fresh contract is entered into, either between the same parties or between the other parties. Sir, what is this, sir? For example, this surety gave a guarantee with respect to a transaction, between principal debtor and creditor. There is an agreement between them, sir. So, with respect to this agreement or this group of transactions, the surety gave a guarantee. Now, sir, if the principal debtor and creditor has changed this contract, existing contract, and he got substituted with a new contract. See, for example, this is an old contract, sir. Now the principal debtor and creditor has changed the old contract and got it replaced with a new one. Then automatically the surety will get discharged, because the surety gave the guarantee with respect to the old contract but not the new one. That's why so when the parties change the existing contract, the surety will get discharged, sir. So, whether the contract might be with the same parties or different parties. Sir, what do you mean by, novation, sir? Substitution of a new contract in place of a old man. It doesn't really matter whether the contract is between the new parties or the contract is between existing parties. But we have to focus on whether there is a replacement of an existing contract with a new contract. That's it, sir. The guarantee will be revoked, sir. Next one. Write about a discharge of a surety by the conduct of creditor. What do you mean by conduct? The way he behaved, or so the acts he done, basically, right? Let us see, sir. Discharge of a surety by the conduct of creditor. No, variance in the terms of the contract. Sir, can't we call this as the alteration, sir? So, of course. So, what do you mean by variance? He changed the terms of the contract. Right, he changed the terms of the contract. Variance in the terms of the contract. Any variance made in the terms of the contract between principal debtor and creditor. Look at here, sir. So, In our previous example, there is a novation, right? But here it is not novation. You can assume it as an alteration. So here is the principal debtor, here is the creditor. Now here is the surety. There is a contract between these two persons, right? When there is a contract between these two persons, they have altered the terms of the contract, altered the terms of the agreement. Simply, any variance made in the terms of the contract between principal debtor and creditor without surety's consent. That's the whole point, sir. Sir, what if the surety also gave consent? That means he also agreed to give the guarantee to the change agreement also, no? But here there is no consent of surety. Surety, that means he has not accepted such changes, sir. That's why surety will get the guarantee will get revoked, sir. Next, release or discharge of principal debtor. What is the release or discharge of principal debtor? This creditor released this principal debtor. What do you mean by release it, sir? So this creditor said to principal debtor that the principal debtor, I am not going to make you liable. I am waiving off my right. I am waiving off my right. Sir, if the principal debtor, if the creditor has waived off his right to receive, waived off his claim, then he cannot make principal debtor liable now. If the principal debtor is not liable, surety will also be will not be liable. Got my point, sir? Surety is discharged if the creditor enters into a new contract with a principal debtor. Means that means existing contract they have waived off, right? So now, discharge of surety when creditor compounds with, gives time or agrees not to sue principal debtor. Sir, this is the third point, sir. Discharge of surety. When will surety will be discharged, sir? When the creditor compounds with or gives time or agrees not to sue. Sir, basically our surety has a right. What sort of right, sir? Our surety can ask the creditor to sue the debtor first. That's the right of the surety. Now, if the creditor has decided not to sue surety, sir, then obviously he is he is not the creditor is not able to exercise his right. No, that's why creditor will get surety will get discharged. Now I'm coming again, sir. For example, sir, now he is the principal debtor. He is the principal debtor. He is the surety. He is the creditor. Sir, this surety will always have a right to ask the creditor to sue principal debtor first. To sue principal debtor means, array creditor, you have to go and ask principal debtor first, not me. So he has every right to say that to creditor, sir. Now, if the creditor has decided not to sue principal debtor and he decided to sue surety, sir, then it doesn't hold good. That means the sureties the contract of guarantee gets revoked. Once again, sir, listen here. I'll give another example. So, discharge of surety when the creditors compounds with or gives time. Sir, what is this compounds with or gives time? Listen here, sir. I'll give another example. Sir, listen. There is a principal debtor here. He is a creditor. He is a creditor. He is a surety. He is a surety. Now, the creditor gave a debt and time of repayment is, that means due date is 3 months period, sir. The due date will come after 3 months. Credit period basically. The credit period is 3 months. Now, if the credit period has been expanded, that means the credit period has been increased to 6 months, sir. Basically, what will happen here? Sir, the surety gave guarantee up to 3 months, for only 3 months. If upon default, after 3 months, if the principal debtor has defaulted, the surety will pay. This surety will pay. Sir, now what happens, sir? Creditor has increased the time limit or credit period. If that is the case, the surety's liability shall also be, the guarantee time will also be, shall extend up to 6 months or 3 months extra, no? So, why will he give 3 months extra, sir? So, it's between creditor and principal debtor, sir. But our surety initially gave only guarantee for 3 months, no? For a 3 month debt. For a 3 month debt only he gave guarantee, no? Subsequently, if the parties or if he gave, sir, frankly speaking, this is also a type of alteration only, sir. So, now if the creditor has gave sufficient time period, means he has increased the time limit of repayment, or if he has increased the credit period, then surety will be discharged. Sir, what is the risk that is surety is facing here, sir? Sir, when you increase the credit, keep on increasing the credit period, sir, the risk will also increase, right? Because the principal letter, there is every chance that principal letter may make default. Because if the let us assume that this 3 months period got increased to 30 months, sir. Credit period 30 months. Let us assume. Sir, now the surety has an obligation till 30 months, no? So basically, this, as long as the time passes by, there is a increase of risk of default. That's why, since you have increased the time of credit period, the surety will get automatically, the guarantee will get automatically revoked, and surety will be discharged. That's the whole point, sir. Now listen. Next point, sir. Discharge of surety by creditors act or omission impairing surety's eventual remedy. Look at it, sir. Surety is discharged if the creditor does any act which is inconsistent with the right of surety. What is this inconsistent with the right of surety? Now, in the previous example, sir, I just told you the creditor may sometimes decide not to sue the principal letter. Here, but the surety has a right, but the surety has a right to seek the creditor to sue the principal letter first, no? Surety has a right to seek creditor to sue the principal letter first. But here, what has principal letter done, sir? Surety is discharged if the creditor does any act which is inconsistent with the rights of surety. Now the right of surety got impaired. Impaired means it got reduced, or the right has been relinquished, sir. Not relinquished exactly. The right has been impaired. That means you have taken away the right from the surety. That's why, since you have taken away such right from the surety will get discharged, sir. So that's the point here. Now, discharge of surety when creditor compounds with, gives time to, or agrees not to sue principal debtor. Composition. Let us look at it, sir. If the creditor makes a composition with the principal debtor without consulting the surety, that means whenever you go for compounding, or whenever you go for, sir, basically when you extend the time, or when you go for compounding, or when you decided not to sue, that means you are trying to impair the rights of surety. Since you are trying to impair the rights of surety, the surety will get discharged. Got my point, sir? No, so basically, what is composition, sir? Listen here, students. Now, composition means, listen here. Basically, the is surety, is principal debtor, is creditor, right? Now, the principal debtor wo rupees at 10 lakhs to the creditor under the loan contract. Now, even after due date, sometimes the principal debtor might not pay. So, the creditor may come into a compromise with principal debtor and ask him to pay 9 lakhs including interest. 9 lakhs including interest as a single payment. I am just giving an example. 9 lakhs including interest as a one-time payment. Sir, if this has happened, the surety will get discharged. Because they both entered into an agreement. No, what is the agreement, sir? That the principal debtor shall pay the creditor with an amount of rupees 9 lakhs including interest as a one-time payment. Since the creditor has basically the contract has been compounded means all sums put together, and they are making a single payment. That's why since they have entered into a new agreement, the surety will get discharged, thereby the contract of guarantee. There will be no contract of guarantee right now, since they have entered into an agreement. Next one, sir. So, promise to give time. Just now we have discussed it, sir. Or promise not to sue. In all these cases, sir, so what will happen? The surety will get discharged, sir. Next, cases where surety not get discharged. Sir, what is the cases where surety not get discharged? Surety not get discharged when an agreement made with a third person, to give time to the principal debtor. What do you mean by with agreement made with a principal debtor? Sir, what I will give an example. Surety will not be discharged in this case when an agreement made with a third person to give time to principal debtor. Sir, the agreement is made with a third party, so by the creditor to give time to the principal debtor. To give time, agreement is to give time to principal debtor. This is the terms of the agreement. Now listen, sir. Now listen, sir. For example, an amount is payable by principal debtor to the creditor, for which he gave a bills of exchange. He accepted bills of exchange and gave it to the creditor, sir. Subsequently, this creditor has endorsed this in favor of a third party. Endorsed this in what endorsed? Sir, he endorsed the bills of exchange in favor of a third party. In this case, sir, if the creditor has asked the third party to give some time with respect to this bill, now the surety won't get discharged. Here comes the surety. He will not get discharged. Sir, the point, try to understand the point of difference. Sir, this agreement is between the third party and creditor. That's why the surety will not get discharged. If the same agreement for increase of time, to give time means, for example, on the due date, third party will go and ask money, will go and ask money from principal debtor. He will take the bill and he will present the bill of exchange to the principal debtor on the due date, right? But now there is an agreement with the creditor and third party. What is there in that agreement, sir? The creditor requested the third party not to sue or not to ask the principal debtor, or to give some time, extra time to the principal debtor with respect to this debt. That means the agreement is between third party and creditor, the surety will not get discharged. Now listen one more point, students. Sir, for example, in our earlier cases, if the creditor has given time, sir, generally the time of the debt, for example, if the time of the debt is, credit period is 3 months. If the creditor has increased the credit period to 6 months, then the surety will get discharged, because the agreement to increase the time limit of credit period is between principal debtor and creditor. Since there is an agreement between these two, that surety will get discharged as it amounts to alteration or novation. Now, since the agreement in our case, since the agreement is between the third party and the creditor and not between the creditor and principal debtor, our surety will not get discharged. Means surety is still liable. Sir, he is unknown party, sir. He is a stranger to the contract. We don't know who is he. But the creditor just has entered an agreement entered an agreement with the third party and not with the principal debtor. That's why it doesn't amount to novation. So thereby the surety will not get discharged. Here it is the point. Next one, sir. Creditor's forbearance to sue does not discharge surety. Mere forbearance on part of the creditor to sue the principal debtor does not discharge the surety. What is meant by mere forbearance, sir? For example, sir, principal debtor has taken a loan from creditor which has to be repaid within 3 months. To which Mr. S means surety gave guarantee to the creditor with respect to this debt. Now listen, sir. Sir, here in our case, the surety will not get discharged for mere forbearance. What do you mean by forbearance, sir? Sort of abstinence. What do you mean by abstinence? Not doing something is called abstinence. For example, he abstained himself. The 3 months have elapsed, sir. The 3 months has, the due date has been elapsed. He means the due date is now over, sir. So the 3 months has been elapsed. Now, sir, immediately upon elapsing of these 3 months, elapsing of this time period, the surety will not get discharged, sir. Why? Sir, this creditor, generally, if you take a promissory note case, sir, so the validity of a promissory note is from the day, from the due date, it is 3 years. 3 years from the due date. Within these 3 years, you can sue, sir. 3 years from due date. 3 years from due date. Within these 3 years, you can sue. Sir, but the credit period given is only 3 months, sir. Sir, upon completion of 3 months, still the creditor can sue within 3 years, no? Sir, creditor has not sued in the first month, sir. That means now the credit period has over and also first month is also over. Sir, even though the first month is over, the creditor has not sued. That means he abstained himself from suing. So does the surety gets discharged here, sir? Absolutely no. Because so mere sir, remember one thing, forbearance is different from not suing. So creditor, if creditor expressly said or entered into an agreement with the principal letter, if sir, for example, if creditor has entered into an agreement with principal letter and said him he is not going to sue, I will not sue you, then the surety will get discharged. So here there is no such agreement, sir. It is just a forbearance, mere forbearance. Even though the 3 months has been done, sir, 3 months has been completed, means due date has been completed, but basing on the promissory note, there are still 3 years upon which the creditor can sue debtor, no. So, but the creditor kept silent, sir. He has not sued. He has basically not sued. That's it. But there is no agreement between principal letter and a creditor. So therefore, this mere forbearance means staying back from not suing a principal letter does not release the surety. I will show you something here, sir. See, so if the creditor has promised not to sue, then the surety will get discharged. If the creditor has promised not to sue in an agreement, then the surety will get discharged. But here the creditor is not promising, sir. Here the creditor is just hold himself back from not suing the creditor. That means there is simple forbearance. He decided just not to sue for this day or for this month. He might sue in the next month. That is why since there is no promise not to sue, then the surety is here in this case not discharged, sir, since there is no promise not to sue. Next, write about discharge of surety by invalidation of the contract of guarantee. Why the contract of guarantee is invalidated? Let us look at it, sir. Discharge of surety by invalidation of contract of guarantee. Guarantee obtained by misrepresentation is invalid. What is mean, sir? You know misrepresentation, right? In a Indian contract. So if you do something unintentionally, not to defraud some other, sir, you have did something unintentionally with the information you possess. You possess an information, sir. You thought this information is correct. And you have induced the other party. To enter into a contract. Though you have no intention to deceive, this contract is entered with inducement, no. That's why it is called misrepresentation. So, if the contract is obtained by misrepresentation, sir, then it will be invalid. What do you mean by concealment? For example, look at here, sir. Sir, he is Mr. E. He is Mr. R. R is the employer of E, employer. E is the employee whose performance has been guaranteed. Now look at here, sir. Mr. E is an employee. Mr. R is an employer. Sir, he is a cashier. He is a cashier in R's business. He is a cashier in R's business. Now, he may, sir, sometimes he may embezzle cash, no? This E may embezzle cash. That's why Mr. R obtained guarantee from Mr. S. He is a surety. Why the guarantee is given, sir? In case he has embezzled some cash, the amount shall be paid by R. The amount shall be paid by S. If he embezzled cash, basically his performance is being guaranteed here. Now listen, sir, but while taking this contract of guarantee from S, or if R has not disclosed, what do you mean by not disclosed, sir? He has concealed. What he has concealed, sir? A material fact. What is it, sir? Now listen here, sir. Sir, from the past 12 months, Mr. So E has embezzled cash for 12 times, sir. Embezzled cash 12 times. That means he has taken away the cash without any authority or without saying, sir. Means that is a petty theft. There is a theft of cash by E, sir. But such if before taking this contract of guarantee, the fact of this theft has not informed to surety. That means, sir, what happens if this 12 months theft has been informed to surety? The guarantee may not be given, no. That's why, so Mr. neither E nor employer nor R has not informed about the past transactions or past embezzlements here. So without informing or without acquainting, so the guarantee has been obtained by R, sir. Since they concealed a material fact, this guarantee is invalid. That means, sir, basically we know about the character of E, no. That's why if S come to know about the character of E or about the past thefts, sir, so S might not give guarantee, no. That's why they have concealed the fact of this embezzlement and has obtained the guarantee from Mr. S. So since this guarantee has been obtained through concealment of fact, this will be the guarantee will be not valid. The guarantee will be not valid. This is the point here, sir. Yes, sir. Guarantee on contract that creditor shall not act on it until the co-surety joins. Sir, listen here, sir. Sir, now principal letter is the creditor, is the surety. Is the surety. Sir, listen here, sir. For example, if the principal, in case of a contract of guarantee, sometimes the surety may demand for another surety. For example, the debt he has given is rupees 1 crore. 1 crore. For obtaining surety, Mr. Creditor and Mr. Principal letter, Mr. Creditor asked Mr. Principal letter for a guarantee. No, Mr. Principal letter went to surety and asked him to give guarantee for this loan contract. Immediately, surety may express that if in case of principal letter, if he has defaulted, now the whole 1 crore shall be paid by surety, no. So he expressed his inability. Basically, he expressed his inability. Are principal letter, if this is the case, if you have defaulted, then I cannot pay the entire loan of 1 crore, no. So I need the other co-sureties to also join. Now, sir, when the other surety 2, when the other surety has also joined, so they are jointly liable, no. They are jointly liable on this contract for this loan, no. Now, since they are jointly liable, they can both repay, right? They both can repay. Now, sir, this creditor, when mentioned by, look at it, sir, guarantee on contract that creditor shall not act until co-sureties join. Now, the creditor can ask only when the co-surety, other co-sureties, sir, who are these two, sir? Basically, who are these two? These two are called co-sureties. Sir, sometimes there might be 3 persons also, sometimes there might be 4 persons also. So the creditor can take an action only all the co-sureties has joined, sir. Otherwise, he cannot sue only one surety without suing other sureties. Now, state the rights of a surety against principal debtor. State the rights of a surety. Sir, who is surety? Mr. S in our example. So, he is asking to state the rights of a surety against the principal debtor, not creditor, principal debtor. So, to whom the guarantee is given. Now, right against the principal debtor, rights of subrogation, substitution. What is meant by subrogation or substitution, sir? Listen here. The simple meaning is substitution. Now, principal debtor has defaulted in repayment of the loan to creditor. Who has to pay now, sir? Now the surety has to pay to creditor. Surety has to pay to creditor, right? Stay there, sir. Now, since the surety has to pay to the creditor, he has paid all the amount that was given by creditor to principal debtor. Creditor gave 1 lakh, sir. So principal debtor made a default. Now the surety paid rupees 1 lakh to the creditor. Surety paid rupees 1 lakh to the creditor. Now this surety can step into the shoe of a creditor. That means for the amount 1 lakh he paid to creditor, now the surety will act as a creditor for this principal debtor. In simple terms, this surety can sue on principal debtor and collect the liability of rupees 1 lakh from principal debtor. So this is called right of subrogation. The surety upon payment or performance of all that he is liable for. Who has paid, sir? The surety has paid. Surety upon payment or performance of all that is liable for. Now, since the principal debtor has been defaulted, it's up to the surety to pay the rupees to pay the amount of 1 lakh. No, that's why he has paid all that is liable for. He is invested with all rights. He is vested with all the rights of a creditor which the creditor had against the principal debtor. Sir, previously this creditor has some rights against principal debtor. No, the same rights will now be possessed by our surety. That's the right of subrogation, sir. Next, implied promise to indemnify. What is meant by implied promise? Sir, there will be, we read on the other day, sir. So what is that, sir? There will be an implied contract between principal debtor and surety. So the surety is entitled to recover from the principal debtor. The surety is entitled to recover from the principal debtor. How much is entitled, sir? So whatever sum he has rightfully paid under the guarantee. Now look at it, sir. Sir, for example, sometimes the surety may also pay certain damages, right? Since non-payment on the due date is a breach of contract. It's a breach of contract. So the other party, the creditor, may sue for damages also. No, if the creditor has sue for damages, so the principal debtor is not in a position to repay. No, if the principal debtor is not in a position to repay, the surety has to repay. No, if the surety has repaid the damages, then the surety can collect the damages. The surety is entitled to recover from the principal debtor whatever sum he has rightfully paid to the guarantee. Rightfully paid means as an obligation, he has paid the amount of damages. So he has a right to collect it from principal debtor, sir. Now, state the rights of a surety against a creditor. State the rights of a surety against a creditor. Surety is a right to benefit creditor security. Now listen here, sir. Surety is entitled to the benefit of every security which the creditor has against the principal debtor. Let us stop here. Surety is entitled. What is meant by entitled, sir? To have a right. To have some right is called entitlement. Now, surety is entitled to benefit of every security. Means surety is entitled to the benefit of every security which the creditor has against the principal debtor. Listen. Now, this principal debtor, when taking the loan from the creditor, might have given some securities. That might be any kind of security, movable goods or immovable goods. He has pledged some, sir, or he gave mortgage, sir. So basically there is a security given. with respect to the debt, sir, of 50 lakhs. Now listen here, sir. Surety is entitled, means surety has now a right to the benefit of every security which the creditor has against the principal debtor at the time when the contract of suretyship is entered into. Simple point, sir. Listen here. Sir, there is a surety. Principal, for example, principal debtor has defaulted. Principal debtor has defaulted. Now, since the principal debtor has defaulted, all the amount has been paid by the surety. So 50 lakhs. Now, this surety can take the securities given by principal debtor. That's the whole point, sir. Nothing much. So he has an entitlement. Now, right to set off. If the creditor sues the surety, if the creditor is suing the surety, sir, surety for payment of principal debtor's liability. Since principal debtor has defaulted, now the creditor is suing Mr. Surety for payment of principal debtor's liability. The surety may have the benefit of set off, if any, that the principal debtor has against the creditor. Now listen, sir. I will give a small example. In this case, the principal debtor is creditor. He gave a loan of 50 lakhs. He gave a loan of 50 lakhs. So, for which Mr. S gave guarantee to creditor, sir. S gave guarantee to creditor. Now is, so in this case, sir, listen very carefully. This is guarantee. Listen carefully, sir. Here, after this contract, principal debtor has sold certain goods. Principal debtor has sold certain goods. This is a fresh contract, sir. This is contract 1, this is contract 2. Goods on credit to the creditor. Now creditor shall pay certain, for example, for rupees 10 lakhs. Now the creditor has to pay rupees 10 lakhs to the principal debtor, no, and the principal debtor has to pay the loan amount of rupees 50 lakhs, no. Now while if the principal debtor has defaulted in payment, when the surety is paying to creditor, he can ask for this set off and may pay rupees 40 lakhs. That's it. Now next, right to share reduction. The surety has a right to claim proportionate. Who has the right, sir? The surety has a right to claim proportionate reduction in his liability if the principal debtor becomes insolvent. Sir, what if a person becomes insolvent, sir? Usually his liabilities will be more, his assets will be less, thereby he cannot repay. The official assignee will be appointed by the court, official receiver or official assignee, any person you can call it otherwise, sir. So he will be appointed by the court, no. So what will he do, sir? He will realize all the assets of insolvent person and he will pay insolvency dividend to whosoever the creditors are there for such insolvent person. Now in the same way, sir, this surety may also claim proportionate reduction in his liability if the principal debtor has become insolvent. If the principal debtor has become insolvent, sir, obviously the surety's liability also may proportionally to that extent will get reduced, no. So he may also ask proportionate reduction in such property, sir. No. Yes, sir. Now, the state the rights of a surety against co-sureties. Who are the co-sureties, sir? In our previous example, we saw about co-sureties, surety 2. So, now, when the same debt or duty is guaranteed by two or more persons, let us take two persons, has guaranteed the same debt. That means a person, principal debtor, has taken a debt from creditor, but this debt, whatever is there, this debt has been guaranteed by two persons. This debt has been guaranteed by two persons. These two persons are called co-sureties. Now listen, sir. So co-sureties are liable to contribute equally. Sir, yes sir, of course they are liable to contribute equally. Sir, for example, this debt is taken for 1 lakh. Generally, if there is no contract, sir, contract to contrary, so generally their liability will be equal, sir. Now, either jointly or severally under the same or different contracts with or without knowledge of each other. That means generally if there is no contract between these two, sir, either jointly or severally they have. For example, listen here, sir, I will give a example for this. Sir, there are, he is surety one, he is principal debtor, he is creditor, he is creditor. Now he gave a loan of rupees 9 lakhs. So he gave guarantee, sir. Now without so he S2 is S1, he is S2, surety 2. Surety 2, he don't really know that already S1 gave guarantee, sir. He also gave guarantee. S3 also gave guarantee, sir. Even S3 don't know that S1 and S2 gave guarantee. So for this debt of rupees 9 lakhs, the liability of each co-surety is 3 lakhs. Now listen, sir, it has been specified in the law, sir. So for the same debt or duty, either jointly or severally, under the same or different contracts, they might have given the contract of guarantee under different contracts for the same debt. The debt is one, sir, guarantees are different. Now under the same or different contracts with or without the knowledge of each other. With or without the knowledge means, just now I said S7 S2 don't know about S3, S3 don't know about S1 and S2. So likewise, so they don't know, they have no knowledge of that guarantees given by previous co-sureties. So even though that is the case, they are liable to contribute equally only. Now liability of co-sureties in different liability of co-sureties bound in different sums. Why is it like this? Listen, sir. Now this is subject to maximum limit fixed by a co-surety to his liability. Co-sureties who are bound in different sums. That means here sometimes not always, sir. Sometimes these two are co-sureties, right? Surety 1, surety 2. He is principal debtor. He is principal debtor. He is creditor. So when he gave a loan of rupees 6 lakhs, this surety 1 may at the time of giving the contract of guarantee express that he would be liable to the maximum extent of 2 lakhs in case of default by the principal debtor. He mentioned so in the contract, sir. In the contract he mentioned that my maximum liability, I can pay only 2 lakhs and I will pay only 2 lakhs in case of a default by a principal debtor. If that is the case, sir, his liability is restricted to 2 lakhs only. Sir, then what about his liability, sir? Usually if he has not mentioned any amount, he will be liable to the rest of the amount. Sir, what if he has mentioned only 3 lakhs as maximum liability, then the guarantee has been given for only for 5 lakhs, that's it. So that has not been completely guaranteed. So the debt has been only guaranteed up to 5 lakhs. Now listen here, sir. Now listen here. Next one, contract of indemnity versus contract of guarantee. Let us see this, sir. Sir, I hope I am clear here, right? So now, contract of indemnity versus contract of guarantee. This might come in exam, sir. This might come in exam. There are very chances, sir, because nowadays ICA is asking at least one difference question per exam. At least in alternative terms. Alternative terms means in every alternative public exams, ICI is asking at least one different type of question, sir. Means they may ask a difference between void contract and a voidable contract, void agreement and void contract. They may ask a difference between hire purchase and sale agreement. So they may ask a difference between contract of indemnity and contract of guarantee. So likewise, sir, they may ask the differences also. So don't neglect these type of questions. As well as this chapter is newly added now, so there are very chances of asking this sort of questions, sir. Now listen, differences. Let us read this once again. So differences, contract of indemnity and contract of guarantee. Who are the parties here? And indemnifier and indemnified. We call the parties as indemnifier. Who is an indemnifier and who is an indemnified? Just like insurer and insured. Here creditor, principal debtor, surety. Nature of liability. Here primary and unconditional. Primary and unconditional. There must not be any conditions in contract of guarantee, sir. Indemnity, sorry. Now here the liability of surety is secondary. Liability of surety is secondary. Whose liability is primary, sir? Liability of principal debtor is primary. Now, sir, in case of insurance, the liability of insurer. So the company which gives insurance is primary liability, no, and there will be no condition. It should not be conditional. So next, time of liability on happening of contingency. For example, you took a insurance for a fire accident, sir. So in case if such fire accident happens, only the contingent, if such contingency means such a thing may happen, such event may happen or may not happen. Upon happenings of such event, only the amount would be paid. Now, time of liability, non-performance of an year in contract of guarantee. In contract of guarantee, what is time of liability? Non-performance of an existing promise. That means basically, a simple example, the creditor, the principal debtor has been defaulted. Next, time to act. The indemnifier need not act at the request of indemnity holder. What do you mean by this, sir? Indemnifier. Who is the indemnifier? For in our example, insurance company. So as soon as the contingency occurs, they need to act and they need to compensate, sir. What about in case of contract of guarantee? The surety acts at the request of principal debtor. What do you mean by surety acts at the request of principal debtor? Sir, in case of a contract of guarantee, if the principal debtor has failed, if the principal debtor has defaulted, then only it's time for the surety to pay the liability. Now, right to sue third party. Indemnifier cannot sue a third party. Sir, in case of contract of guarantee, surety can proceed against principal debtor. Sir, since the surety has paid all the amount in respect of the debtor to the creditor, since the surety has paid out of his pocket to the creditor, later, as per the right of subrogation, sir, the surety can sue principal debtor as well. Now here, in case of a contract of insurance, since there will be, for example, there is a fire outbreak, sir. Now the indemnifier can only compensate the insured or indemnified, but he cannot sue a third party. He cannot sue a third party. He can launch a probe, sir, but he cannot sue a third party. Now, purpose. What is the purpose? So, means here, in case of indemnifier, sir, there will be a third party who is responsible for the loss. No, he cannot sue such a third party. He cannot sue such third party. Now, purpose. Reimbursement of loss. Why the contract of indemnity? What is meant by indemnity? Indemnity means basically to compensate. So, why the contract of guarantee? For security of the creditor. Now, competence to contract. All parties must be competent to contract, both insured or indemnifier or indemnified. So, contract of guarantee. A minor cannot act as a principal debtor. Why, sir? You cannot sue principal debtor, no? That's why a minor cannot act as a principal debtor. Yes, sir. We'll see in the with the next part of discussion, sir. Yes, students. Let us see the contract of agency today. What do you mean by the term agency? Sir, what does the law has said about agency? Sir, in simple terms, a person who does any work on behalf of us is our agent. Generally, we give him certain authority to do some act. For such act, he is our agent. For example, in commercial terms, so if I am a businessman, I will allocate certain work to a person, to another person. So, such another person will handle my business transactions on behalf of me. So, he is called as an agent. I will be called as a principal. I am a principal, he is an agent. Now, so what does section 182 has said about contract of agency? Section 182 of Indian Contract Act defines agent and principal as a person. Agent, what do you mean by agent? Agent, a person employed, he's got employed to do any act for another. So, a person who got employed, for example, think him as a person A. This A got employed to do any act, for another. Another means there is another person. His name is P. So, to do any act for another or to represent another in dealings with third persons. What do you mean by represent in dealing with third persons? Sir, for example, I have employed a lawyer. So he will look after all my legal affairs relating to my business. So my lawyer is acting as an agent. And also, I have employed a person to deal with business transactions with my creditors and my debtors. So he will be my agent. So not only doing any act, sir, that act may also include representing me in dealings with third persons. So there will be some third persons in relation to the business. No, this person A will deal with those third persons. So A is called agent and P is called principal. So who is the principal? The person for whom such act is done or who is so represented. So for me, for myself such act is done, on behalf of me such act is done. So I am the principal, or who is so represented, I got represented by him. I got represented by him. So such person is called, myself will be called as a principal. Let's go into another one, sir. Consideration is not necessary to create an agency. See, look at here, sir. Consideration is not necessary to create agency. Sir, then usually we pay some commission to agents, no? Then there is a consideration. Sir, when executing the transactions, there will be consideration. But when creating agency, there won't be any consideration. So, quasit, no. Sir, there is a principle, sir. Quasit per alium, facit per se. That is, he who acts through an agent is himself acting. Sir, if my agent has acted on behalf of me, that means I have acted directly. I have acted directly. He who acts through an agent, I am acting through my agent. He is himself acting. That means I am acting directly. So even though my agent acted on behalf of me, that means I have acted. So that's the whole point, sir. So quasit per alium, facit per se. Per se means by himself. So next, who may employ an agent or who can be the principal? Who can be the principal, sir? Any person who has attained majority, any person who has attained majority according to the law to which he is subject to. Sir, in the chapter of capacity to contract also, we did the same terminology. According to the law which is subject to means, so it depends, sir. So, for example, sir, there will be different types of contracts, no? Sir, for a marriage contract, the age of majority will be different. For general contracts, the age of majority will be different. For different nations, there the age of majority will be different. So, like that, when you have to see the majority, you have to see the majority depending upon the circumstances and depending upon the law which is subject to. Sir, in case of for example, in case of a marriage contract, for male, it must be 21 years. For female, it must be 18 years, right? So, according to any person who has attained majority can be a principal, and who is of sound mind may employ an agent. Sir, he must be a major and also plus sound mind. He must not be insane. Thus, a minor or a person of unsound mind cannot appoint an agent. Sir, a minor can be an agent, sir, but minor cannot be a principal. Because if anything happens, you will make principal liable, no? If minor is a principal or if principal is a minor, you cannot make the minor responsible, no? So basically, look at here, sir. Basically, so he is a minor. He is a minor and acting as a principal. No, sir, he appointed as an as an agent. Now this agent is working on behalf of this minor, no? Sir, now look at here. This agent has purchased goods from creditor. This agent has purchased goods from creditor from Mr. X, sir. So, sir, these goods are purchased on behalf of minor, no? Sir, if the payment has not been made on the due date, this creditor usually, in general case, he has to make principal liable. But here in our case, if the minor is principal, if the principal is minor, you can't make him responsible, no? That's why a minor can never be a principal, but an agent can be a minor. That's the whole point here, sir. Next, look at that. Look at another point, sir. So in other words, principal must be of majority age and must have sound mind. Principal must be of majority. Now sir, agent and authority of agents. Who may employ an agent? Any person who has attained, just now is a majority according to the law, which is subject to and of sound mind, may employ an agent. Who may be an agent? Any person may become an agent. Even a minor or a person of unsound mind may become an agent, and the principal shall be bound by his acts. So, if such minor or unsound mind person has done anything on behalf of the principal, then the principal would be held liable, but not the minor or unsound mind person. So, consideration not necessary. We saw this, sir. No consideration is necessary in creating an agency. Agency by express and implied authority. Express authority. An authority is said to be expressed when it is given by words spoken or written. Sir, for example, I have appointed a lawyer, sir. I have appointed a lawyer to issue a notice to my debtor because my debtor is not paying me, sir. He has defaulted. So now I want to issue a notice for asking payment to my debtor. So now I want to send a legal notice now. So for that purpose, I have appointed a lawyer. Now such a lawyer will send the notice, on behalf of me now. So I will be called as a principal and he will be called as an agent. Here, sir, I may enter into a written agreement or any agreement, a written agreement or oral agreement. No. So this is called express agreement. Words spoken are written. Implied authority. What do you mean by implied authority, sir? These two are the authorities of an agent. An agent might have an implied authority or express authority. Implied authority. It is to be inferred from the circumstances of the case, conduct of the parties, and in the ordinary course of dealings. I'll give an example, sir. Sir, implied authority is also a authority. For example, I have appointed a salesman who makes cash sales as well as credit sales on behalf of, is an agent on behalf of his principal, Mr. P. Sir, this drawing, the picture is small, sir, but he is not a minor, remember. Now, Mr. P has asked Mr. A, agent, a salesman, to execute, to sell the goods either on cash or on credit. This is an express authority, right? So, Mr. A has an express authority to sell the goods, right? A has an express authority. Now, what do you mean by implied authority? Look at here, sir. When doing cash sales or when doing credit sales, sir, in case of sales, sir, we usually issue an invoice, right? We usually issue an invoice. So, here in this case also, Mr. A has issued sales invoice, Sir, but we only asked him to sell the goods now, but not, we haven't asked him to issue invoice now. But still, from the circumstances, it is implied that he has an authority to issue invoice also. It is part and parcel of course of dealings, That's why here A has express authority to sell the goods and implied authority to issue the invoice. So that is called express authority and implied authority. That means agent will possess both express authority and implied authority. And now, sir, he has made a credit sale, sir. He has made a credit sale. Now, Mr. Debtor, who is debtor, sir? Who took the goods on credit, right? Our debtor. He is our debtor. So he made a payment, sir. That means A has collected the money. So now A also has a implied authority to take the money now. So when sir, for example, think like this, sir. He made a cash sale. When making a cash sale, sir, to a customer, the customer will give money, no. Here the customer taking money from the customer, so comes under implied authority. Expressly we have said to A that, A, go and sell these goods. That's it, sir. That's what we have expressly conveyed. But it is very implied that if he sells the goods, he has a right to take cash from the customer also, no. That's why his authority is implied here. That's the whole point, sir. Next, what are different agencies under implied authority? Now see, sir, agency by estoppel. What do you mean by agency by estoppel? Sir, here expressly we have not given any authorities here. So expressly we have never given authority in case of agency by estoppel. I will give an example. Look at here, sir. Agency by estoppel. Agency by estoppel. Listen here, sir. Now, in the previous example, we have appointed A. This principal has appointed A for making sales on behalf of P. On behalf of P. So thereby A is an agent. So A makes cash sales as well as credit sales. Sir, in order to sell the goods, so first of all certain goods has to be purchased, no? Certain goods has to be purchased. So A purchases the goods and sells the goods. Of course, this is in the authority only. A purchases the goods and sells the goods to customers. Sir, for these purchases, P makes payment. Whatever the purchases made from our creditor, for that credit purchases, P will pay. For that credit purchases, P pays his cash. Now, since A is our agent, no, that's why we have paid our cash. Now, listen, sir. Subsequently also, in the 4th month, in another month also, A made credit purchases from creditor. C is our creditor. Now, sir, P cannot subsequently deny the payment to this creditor, because first 3 months you have accepted and paid for the goods bought by A, no? Goods bought by A on behalf of you. That's why you have paid. That means now the creditor will assume that A is your agent, no? And for the another month, you have the A has purchased the goods on credit. Now, so thereby you should not subsequently deny the fact of your agency between you and your principal. That means for this 4th month also you have to pay, because upon payment for the first 3 months, there can be taken an assumption by Mr. C that A is your agent. Now subsequently you not deny the contract of agency between you and Mr. A, sir. So this is called agency by estoppel. Estoppel means what, sir? For example, you give a representation. Subsequently, you should not deny the representation. So which you should not deny the fact of that representation. Here in this case, sir, estoppel case, there will be 3 parties. So first of all, upon payment of for the first three purchases, C believed that and acted accordingly. That means C believed that A is your agent and gave certain credit, made certain credit sales to A. Since he made credit sales to A and he has recovered money from you, now C has an assumption. So that's why he accepted payment for you and he thought A is your agent. Now subsequently if A makes a credit purchase, subsequently you should not deny the fact that you have established earlier. That means earlier P has established that A as an agent. No, that's why now you should not deny the fact of such representation. That's the whole point, sir. This is called agency by estoppel. Now, another one, sir. Agency by necessity. The name itself speaks, sir. What do you mean by agency by necessity, sir? Agency by necessity. Now, look at here, sir. For example, so again, who is our agent, sir? A is our agent. P is the principal. Now, we went on a business trip, sir. So for our business expansion, we were in a plan, sir. That's why we went to a business trip. Now, sir, A is looking after our business. No, on a fine day, sir. So this is our go down, sir. This go down. There was a floods, sir. There were floods, sir. If there are huge floods, sir, so the things in the go down, may get drenched and they might sometimes they might be washed out also. So that's why A took necessary, though A is our selling agent, he took necessary steps as a man of ordinary prudence, necessary steps to save us from the loss. Now A has also authority. It is implied authority. What is the implied authority, sir? Here, authority, agency by necessity. He is an agent. He is our agent, sir, by necessity. That's why he took necessary steps. He acted like a man of ordinary prudence. If these goods belongs to him, he would have saved. No, in the same way, even the goods are the if goods belongs to the principal, Mr. A has saved our goods from damaging from floods, sir. That's why now agent A has an authority of authority in implied nature. That means implied authority, agency by implied authority or agency by necessity. Sir, these are all the points in agency by implied authority, sir. In that, agency by necessity is a part. Now, next, agency by operation of law. Sometimes for example, sir, in our partnership, sir, every partner is an agent to one. We know the concept of mutual agency. No, we know the concept of mutual agency, sir. As per this concept, sir, every partner is a principal as well as an agent. So is an agent to the firm. Firm is group of partners, so he is a principal. Sometimes when he acted on behalf of firm, he will be called as an agent. No, so as per Indian Partnership Act 1932, so agency can be created by operation of law. Now, rights of person, he has to acts done for him without his authority. What do you mean by effect of ratification? Rights of a person, has to. What do you mean by has to, sir? Whenever you see has to means related to. Has to means related to. Rights of person related to acts done for him without his authority. Sir, he did acts for the principal only. He did acts for the principal only, but without authority he did, sir. Now we as a principal, I'll give an example, sir. Ratification. Sir, what do you mean by ratification? Ratification means a kind of subsequent approval. Subsequent. Simple, sir. Listen. For example, who is the principal, sir? P is the principal. Who is the agent, sir? A is the agent. Sir, we asked Mr. A, we gave him an express authority, sir. What is the express authority? We asked him to purchase certain goods from the market on credit. For example, for rupees 100 each, means per unit 100, sir. Per unit 100. Sir, since the prices are a little bit higher in the existing market, he went to some other market and he purchased the goods on credit. He purchased the goods on credit for rupees 90 per unit. 90 per unit. That might be of same quality as directed by the principal. Now, sir, since the principal has intended to purchase the goods on credit in a particular market, but the agent has purchased in some other market, now the principal may own or disown such act. That means, since the agent has no authority to go another market, for suppose, for this is an example, sir, we asked him to purchase in particular market only, so where the value of the good is rupees 100, but instead he went to other market. That means he acted beyond his authority. No, he has no authority of going to another market. So here in this case, sir, even though he purchased for rupees 90, the principal P has two options. Either he may own the act or disown. What is meant by owning, sir? He may ratify. That means he may give approval subsequently. That means already he made purchase. No, now A can. So now A can approve the transaction. What do you mean by approving the transaction? Though agent has no authority to purchase in other market, now agent, since he purchased in other market, principal has an option of giving approval to it also. So what do you mean by disowning, sir? So P may ask A, array A, since you have exceeded the authority, now I will be not held liable. I will not be liable for this rupees 90. Even though you purchased for a lower price, this is not what I have asked for. I have asked for a totally different product from a different market. Even though the same product from a different market, and since you have changed the market, I am disowning this. So therefore the principal has an option of accepting means approval. Giving approval is called ratification, or you may disown it as well. Now for example, I'll give another example, sir. For this principal, A is an agent, no. So now this principal has several godowns, sir. He has lot of godowns. So he has lot of godowns in the city, sir. Now who is this agent, sir? He is our sales agent, right? He is our sales agent. Let us assume he is our sales agent. Now what should a sales agent do, sir? He should sell the goods either on debit or credit as per the express authority given by the principal. But now this sales agent has collected the rent. These are our own godowns now. These are owned by P. Now, sir, without authority, the principal has never given any authority to agent, sir. This agent has collected the rent from these godowns. Since he collected rent from the godowns, sir, now the principal may ratify. That means he can accept or he may disown, sir. That means, so in this case, sir, though the agent has no authority, agent collected the rent, no. So the principal can even disown also. Array agent. So I am not going to approve this transaction further. That means not only further, as of now also I am not going to approve this transaction, since this is beyond your authority. Or else sometimes, so P may accept also, sir. P may own the transaction, since the amount instead of collecting by P, A only collected, no. That depends on the type of goods and the type of transaction and the type of things which has happened between principal and agent, sir. So there can be ratification. Here it is also implied ratification, sir. Now agency by operation of law we have done, with effect of ratification also we have done, sir. Now agency by estoppel and its essential conditions, meaning when an agent without authority done acts, sir. In our examples also, without authority he collected the godown rents, no, and without authority he purchased in some other market. Now we asked him to purchase from a particular market, he went to other market without our authority, no. So when an agent has without authority done acts or incurred obligations to third persons. Incurred obligations to third persons means, sir, we asked him to purchase the goods, credit purchase the goods from a particular market. He went to other market and made a credit purchases there. Now the principal may own such transaction or disown such transaction. That means, since even though he purchased at a lower price or higher price, doesn't matter. But here the point is, he did it without authority. He done that act without authority. So, or incurred obligation. What is meant by incurred obligation? Incurring some liability to third persons on behalf of his principal. This is called agency by estoppel. Now, what are the essential conditions, sir? He must have represented the principal only. Yes, there must be express or implied authority. There is, but here in this case, sir, there is no authority at all, sir. He exceeded the authority given. Now state that the agent has an authority. Of course, yeah, sir, he made a representation. What kind of representation it is? Now listen, sir. So this agent, in our previous example, sir, in our credit purchase example, in this example, sir, listen. For the first 3 months, he made a credit purchases. Agent made a credit purchases, and subsequently, what happened, sir? P went and paid the money for the first 3 transactions. No, for the first 3 months, for the first 3 transactions, where A has purchased the goods, P made a payment, right? P made a payment. Now, sir, since P made payment, it amounts to representation, right? It amounts to representation. So this representation can be understood by C as, okay, P is the principal and A is the agent. That's why P got P is paying now, and on behalf of P, A is represented. So you can call it either way, sir. So there is a representation from principal. So now the creditor may think that P is the principal and A is agent. There can be, sir, the agent, this can be expressed or implied, sir. So in our case, sir, so since agent made credit purchase for the first 3 months and principal made the repayments for the first 3 months, this is an implied, no, it is implied that P is the principal and A is the agent. Of course, there is no written agreement between our principal and that creditor, sir. So creditor never went and said principal never went and said to the creditor like, "Arey, A will come daily to our shop and he will make credit purchases if A on behalf of myself. So for this I will make payment." So there are no such expression of words, sir. So it is not an express authority, it's an implied authority. It's implied there, sir. So state that the agent has an authority. Sir, by principal paying the goods, he is establishing a fact. What is the fact he is establishing, sir? That our agent has authority. Yes, our agent has authority and he is taking the goods and I am making the payment. So now C will understand that whatever the goods purchased by A, agent has or is being purchased with authority given by principal. I will tell you, I will give another example, sir. I will continue the example actually. Listen here, sir. So since A is purchasing the goods on credit from C, no, from C, A is purchasing the goods on credit. Sir, now this principal, if this is an unauthorized transaction, if this transaction is an unauthorized transaction, he should not own it, he should not ratify it, no. But what P has done here, sir, P went and made payment for this credit purchase. For this credit purchase, P went and made payment, no. That means we are establishing, P is establishing a fact that A has authority, so you can give goods to A. Thereafter, I will make payment. So he is establishing a fact, no. That's why, look at here, sir. So state that agent has authority. Already our principal established. Induced the third person. And now, who is inducing the third person? Our agent. And also subsequently the principal is coming and paying. So our agent, even though he has no authority of purchasing the goods, he purchased the goods, no, by inducing the third person. Who is the third person here? So third person is the creditor. He agent induced the third person and also without having authority, he purchased the goods. After purchasing the goods, sir, so our principal made a representation. So even sometimes the agent will also make a representation, sir. Just like, I am an agent to Mr. P. I have an authority to purchase goods from you. So this is how the steps runs like, sir. Listen here. So first the agent will make a representation. What is the representation from agent, sir? I have authority. I have authority. So to whom such representation is made, sir? To Mr. C. To Mr. C. What will C do, sir? C believed in that fact and acted accordingly, no? Yes, sir. Now Mr. C, in the second step, C sold goods to A. C sold goods to A. Now what happened next, sir? Later on, the payment has been made by principal. The payment has been made by the principal. Why did he made payment made by principal, sir? For the goods purchased by A. Here already A induced C and purchased the goods without having authority. Now here principal has made payment. Now let's see, sir. So here believed the representation. Who believed the representation? The third party believed the representation. Sir, listen, sir. In case of estoppel, most 99.9% of the times there will be an involvement of 3 persons. Sir, in case of partner by estoppel also there will be 3 persons. Who are the 3 persons, sir? So partners and the person who is not a partner will represent himself to be a partner, no? So this second person, and who is the third person? The outsider. The outsider will believe the false representation given by a non-partner. So So regarding the firm, and he will give credit to the firm, no. So there will be always three persons in case of agency by estoppel, sir, or in case of estoppel, sir. Here the third person has believed that representation and gave credit to the agent, and now the agent, since the principal has made payment, it is an established fact that our agent has an authority. So that's it, sir. Next, sir. Agency by ratification. What do you mean by agency by ratification, and state some rules of valid ratification? Just now we saw, sir. What do you mean by ratification? Subsequent approval. Ratification means approving a previous transaction. Sir, for a previous transaction we are approving now. That means this is a subsequent approval. For a previous transaction means the transaction has already happened. Now we are giving approval now. That's why it is called ratification. Ratification means approving a previous act or transaction. Now, let us see essentials of valid essentials or rules of ratification. Sir, this ratification can be express or implied. Just now we saw, no. Just now we saw, yes. So the go down, the agent will collect rent from the go down, no. So our principal may give may validate that. That means he may give ratification to it. So knowledge requisite for valid ratification. Listen here, sir. For example, knowledge required, sir. Sir, ratification to be valid, it must be made with full knowledge of facts. Listen here, sir. For example, our principal went again on a business trip. Sir, this is our inventory bin. Inventory bin means our raw materials will be there, no. So our raw materials, let us think that this is 30% level, this is 30% level, this is 40% level, totally 100%, no. So our level of inventory, means we have only raw materials this much, sir. We have only raw materials this much. Let us assume 30%. These are our raw materials, sir. Raw materials. So there is no P. There is no P here because he went on a business trip. No. How will be here? He will not be here. Who is he? As an he is an agent. We do. Now, so there comes a debtor, sir. Debtor. He ordered debtor. Who is debtor, sir? He is our customer who purchases the goods on credit. So I will not write purchases, sir. He ordered some raw materials. So he want to purchase. Debtor wants to purchase. Basically, he wants to purchase. He wants to purchase on credit. Our debtor wants to purchase on credit, sir. He placed an order, sir. He placed an order. Sir, for example, let us try to understand that there are 100% means 100 units, sir. So this bin or this dabba, whatever it is there. So usually the capacity is 100 units. Bin capacity is 100 units. But now, as of now, we have only 30 units now. That means we have only 30%. The 30% means 30 units. So we have only, just a minute. We have only 30 units. This debtor placed an order for, since there is no principal now, that's why he placed an order with the agent. Of course, agent having an authority. Now we'll try to understand, sir. Agent took the order from the debtor for sale of sale of 80 units, 80 units within 2 days, within 2 days. Sir, already that means he entered into a contract. Agent entered into a contract with the debtor. Now, there comes the problem. The amount of raw material lying with us is only 30 units. Only 30 units. Now, the principal came from the business trip, sir. Listen carefully. After principal coming from the business trip, agent, he is principal. He is principal. So, he is principal. Now, he is agent. He is agent. Listen, sir. Agent and principal. Agent told to principal that he received an order. He received an order. I am very specific here, sir. Agent just told to the principal that, sir, principal, I received an order. I received an order. So we have to sell raw materials. We have to sell raw materials. But the agent has not specified. Agent has not specified about number of units to be sold. Number of units to be sold is 80, no, but we have only 30 units. That fact of such 30 units has not been specified by agent to principal. That means the knowledge of the contract entered between debtor and agent has not been with the principal. So principal thought that we have to sell certain number of units to our creditor, to our debtor. Now listen, sir. Since agent has not given full information, even though such principal accepted such contract, that means he already entered into contract with the agent, entered into contract with the debtor on behalf of us, on behalf of the principal. The agent entered into contract now. Subsequently, without knowledge, he approved. Accepted means approved. So this acceptance is not valid. Since his knowledge is deficient, his knowledge is not full-fledged, sir. So the knowledge of principal is not complete. This ratification is not valid. So, sir, what if the agent has specified all the terms and conditions of the contract to principal about this contract? That means if the agent has said everything to the principal, then principal will be held liable. That will be a valid ratification. In this case, sir, since the agent has not specified full information to the principal cannot be held responsible. Thereby, the approval or the subsequent ratification, the ratification given by principal is invalid. So, since the facts are not in full, sir, this ratification is not valid and agent shall be held responsible for this breach of contract. So, principal will not be held, agent will be held responsible. So, this is an example, sir. Next, ratification of unauthorized act cannot injure third person. No, sir. Ratification of unauthorized act. What are we doing, sir? I'll give an example. Cannot injure third parties. Listen here, sir. We know that ratification means subsequent approval. What does it mean, sir? Ratification of unauthorized act cannot injure third person. What does it mean? Sir, for example, Mr. P is the principal and A is the agent. Now, sir, listen here. When P has a lot of godowns now, lot of warehouses now. So already P has gave a godown on rent to Mr. R. Mr. R, P gave a godown on rent. So the terms of the rent has a clause which specifies the period of tenancy. Period of tenancy means the period of rent, sir. So that means this R can use this go down for a period of 1 year, that is 12 months. So sir, A, without having any authority, sir, without having any authority, so went to Mr. R and asked, Mr. R, please vacate the warehouse so that I have other goods to put it over in the warehouse. Now sir, since an act has already been done by A on behalf of R, and sir, as per the terms of the agreement, the period of rent is 12 months. Now P should not ratify the act done by A, since it is causing, so obviously it's a breach of contract. So since it is causing a loss to the third party R, other party R, so these type of acts can never be ratified. That's the whole point, sir. Next point. So ratification must be done within a reasonable time, sir. And if you have done ratification, it must be communicated to the other party. It must be communicated to the other party. Who is the other party? The third party. The third party. Now, act to be ratified must be valid. Sir, you should not ratify some illegal acts, sir. There is no ratification of unlawful or illegal acts. Act must be act what you have ratified. Act done by an agent have to be ratified, right? Such act ratified must be a valid one. That means it must not be unlawful or illegal. Next point, sir. Explain authority of an agent. So what do you mean by authority of an agent? To how far he can extend his authority? Now, agent authority in normal circumstances and agent authority in emergency. Now look at here, sir. So let at later point in time we'll go to sub agent, sir. But first of all, look into it. Explain authority of an agent. Agent authority in normal circumstances. If agent is employed to do an act, if agent is employed to carry an business. Sir, if agent is employed to do an act, he must do that sole act. And his authority is limited to only to such act, right? Not beyond that. So, he has to, his agent act of agency will be restricted or confined to only such act. Sir, in case of, and also here, he can do all reasonable things, all lawful things to which such act requires. For example, if he is employed to do certain acts, sir. For example, in the previous example, we have appointed a lawyer to collect the money from our debtor, no. So lawyer will issue notice on behalf of us, no. So such a lawyer is appointed as an agent to do a particular act to recover the debt from the our debtor. So his authority, he can do every lawful thing which is necessary in that point of view, in the circumstances. No, sir. Agent, if agent is employed to carry on business, sir, for business also you need to do all lawful, some lawful things, no. So here the agent's authority will be, he can do and access all lawful things necessary in the course of the business. That's it, sir. Next, agent's authority in emergency. What do you mean by the emergency, sir? So this can be to certain extent related to agency by necessity, sir. What do you mean by agency in other agent's authority in emergency? In the previous example, sir, in the previous example, I said some floods and go down wall thing, no, right? So in that case, sir, an agent can do all the act as a man of ordinary prudence, right? So here also, agent will have an authority to do all such acts to save the principal from loss. So that's why here also agent will have an authority. So these are the two cases, sir. Next, sir, we're going into an important topic. Conceptually, this is important, sir. Now, who is a sub-agent? Sir, there are two types of agents we will discuss here, sir. Sub-agent and a substituted agent. Sub-agent and substituted agent. Let us discuss, sir. Who is a sub-agent? A person employed by and acting under the control of original agent. So, a person employed by original agent, not only employed, and means it's plus. He is employed by original agent and acting under the control of original agent. He is acting, that means, what do you mean by acting, sir? He is following the directions of not principal but by agent. Means there are three people here. One is principal, another one is his agent. So this is the contract of agency. Now this agent has appointed another agent. Okay, ma. So he is SBA. His name is SBA, sub agent. Let us confine to SBA. His name is, sir, who appointed Mr. SBA, sir? So this sub agent has been appointed, a person appointed by the agent, a person employed by and acting under the control of original agent in the business of agency is called sub agent. Next, when agent cannot delegate, agent, what means when agent cannot delegate? Agent cannot lawfully employ another to perform acts which he has expressly or impliedly undertaken to perform personally. So general principle is that from principle you have expressly derived the authority to do or to do some act or to perform a thing on behalf of this principle. Now this agent only should do. Basically this agent has derived this power of doing act from the principle. So since you personally has taken the such act to do on behalf of principal, you should not delegate it further. You should not delegate it further. That's the point, sir. So here generally you should not delegate the your task to sub agent. Now exception wherein agent can appoint in certain circumstances, as the law said, in certain circumstances even an agent can appoint sub agent. Generally sub agent should not be appointed, but in certain cases sub agent can be appointed. What are those circumstances? That's we are going to learn here. Now custom of trade or unforeseen emergency. Custom of trade, for example, sir, sir, NHAI, it's a National Highway Authority of India, it want to lay a highway road. Now the contract has been taken by Mr. Abani. Sir, since the contract has been taken by Abani, each and everything, including putting tar and putting some paint, single Abani cannot do it, right? He has to delegate it. Sir, for painting, for laying tar, and for putting some cement, there will be other activities, right? So to bring the road into a shape, there will be several lot of activities, no? So in such case, sir, the Abani cannot do by himself, right? So in such circumstances, yes, the nature of business demands you should employ a sub agent. So of course, NHAI, sir, this person appointed an agent, sir. This person is a contractor to whom the contract has been got, is a civil contractor. He cannot do all by himself, no, right? So in that cases, sir, in that circumstances, even though you got the contract, you will employ several other persons, no? Several other persons. Now look at here, sir. So for example, in this case only, consider Mr. Abani as principal. He is a principal. Now in this case, the principal can appoint another few people, sir. So let them call as subcontractors. So this guy has to, is a principal, he is an agent. So this guy has to lay the road for on behalf of principal Abani. So for Abani, this agent has to lay some road, no? If that is the case, now even this agent cannot construct the whole road, no, complete road. So even he needs some workman who works on behalf of him, right? So in these cases, as the nature of business demands, you can an agent can appoint sub agents. Generally an agent should not appoint, but since this is an exception and as the nature of business demands, an agent can appoint sub agent as well. Now next, unforeseen circumstances, right? Yeah, now listen here, sir. So unforeseen emergency, sir, even though an agent has undertaken from the principal, an agent has undertaken to perform a certain act. So since he has undertaken to perform it, he should not delegate it to further. But if such in certain circumstances where there is an emergency, for example, sir, in this case, there was a fire outbreak in the godown of principal. So this godown belongs to Mr. P, sir. Mr. P. This godown belongs to Mr. P. He generally an agent can act in emergency, but Here there is no A in the hometown. In the hometown, neither P nor A. Both of them are not there, sir. But here there is another person who Mr. B. They are close friends, sir. Now Mr. B has put off the fire in the godown of Mr. P. Now since B has worked for A, and of course B has worked for A only. Why, sir? He don't know about P now. So of course generally sub-agent will be appointed. So in these circumstances, A can call upon his friend B and ask him to put off the fire now. In this case, a sub-agent can be appointed. If this is the case, if there is a fire outbreak, Mr. A can ask his friend to put out the fire on his behalf. Now B is working on behalf of A, but not on behalf of P. Since B is working on behalf of A, now in this case an agent has appointed another person. He further delegated. In such cases, A can further delegate, but generally an agent cannot further delegate, sir. So when A called up and asked B to put off the fire, B has put off the fire, sir. Now B has acted on behalf of A, sir. In such emergency circumstances, so he can appoint a sub-agent. Now, next, sir. Implication on appointing of sub-agent. Implications means who will get affected and how the contract of agency will get affected. What is the liability of principal? What is the liability of agent? What is the liability of sub-agent? And who is responsible to whom? So all this we are going to discuss here, sir. So principal's liability to third person, sir. Generally, when sub-agent, sir, look at here, sir. The implication on appointment of a sub-agent. Since the agent has appointed sub-agent, whatever the tasks done by sub-agent, for such tasks, agent will be held responsible. So principal will not be held responsible. So agent responsibility will be there. So is sub-agent responsible to the principal? No, sir. Sub-agent is not responsible to principal. Sub-agent is responsible to agent. Sub-agent is responsible to agent. So principal liability, no, sir. Agent will be held liable for the acts done by sub-agent. Yes, sir. Now, agent's responsibility. Three people will be there now. Principal, agent, sub-agent. So now agent's responsibility for sub-agent appointed without authority. Agent's responsibility for sub-agent appointed without authority, sir. Authority means there are no circumstances, sir. It's not a case where sub-agent can be appointed and neither the principal approved, sir. Neither principal approved, and also it has not fallen in the exception cases. In the exception cases, we saw two exceptional cases now, where in the case of ordinary course of business, in some certain course of businesses, we can appoint a sub-agent in construction of a road and all. And also in case of certain emergencies, there can be appointment of sub-agent. And if with the consent of the principal also, there can be appointment of sub-agent. But here he has no authority, sir. Without authority only, agent has appointed a sub-agent. Now agent, what is the responsibility of agent? Agent is treated as principal of sub-agent. Of course, we know that. Now, responsible to both principal and third person. Since this agent appointed without authority, he will be responsible to the principal as well as third parties also. The principal is not bound by the acts of sub-agent. Of course, this sub-agent, look at here, sir. So, he is principal, he is agent, and this is a big wall, sir. This is a wall. Just give me time, sir. This is a wall between them, sir. This is a wall between them. The principal can see agent and agent also can see principal, but there is another person, sir. He can see him and he can see him. There is another person here, sub-agent, to whom the principal is not visible. Here, look at here, sir. In this case, sir, that means this principal has no chance of knowing about this sub-agent now. Neither this sub-agent. So principal don't know this about this sub-agent because he got employed without authorization. So without authority, so agent employed sub-agent. That means principal don't know. So now listen here, sir. So now what is the agent responsibility, sir? Agent shall be treated as principal to sub-agent. We know that responsible to both principal and third person. Now agent is responsible to both to the principal and third person. Agent is responsible to the principal. The principal is not bound by the acts of sub-agent. Yes, sir, because principal never knows that there is a sub-agent. So principal is not bound by the sub-agent. Sub-agent is not answerable to principal. Yes, sir, they both can't see one another, no. So they don't know. Sir, what will sub-agent think? Sub-agent think that his principal himself is the real principal. But in fact, that's not true. So next one, sub-agent is answerable only to agent. Of course, he is the one who got employed by him, right? So sub-agent got employed by agent, no. He never know about the big one, the principal. So sub-agent cannot see principal. So sub-agent is always answerable to only agent. Next one, sir. Substituted agent and a relationship between principal and substituted agent. Sir, what do you mean by substituted agent? Let us see here. Substituted agent means he is a person appointed by the agent only, to act for the principal in the business of agency with the knowledge and consent of principal. That means simply with the authority, within authority. Now listen here, sir. Substituted agent is a person appointed by the agent. That's fine. Person, he is also a person appointed by agent. Let us take an example here, sir. He is not sub-agent. He is substituted. He got substituted. That means instead of a original agent, he got substituted. So who will appoint? Original agent only will appoint, sir. Listen. Simple, sir. See, he is the principal. Principal, as of now, he is in United States of America. He is in US. Now, unfortunately, agent is also our agent. The agent A is in Canada, sir. Let us assume they went for a business trip. That's a individual trip, sir. Now, there is another person. So his name is SUB, sub. His name is sub. No, sir, substituted. So don't get confused. His name himself is substituted, sir. Now, sir, this substituted agent is also appointed by the original agent only, but with the consent of the principal. Consent means with the knowledge of the principal. Look at here, sir. Sir, this sub-agent, sir, just now I said no, he is in US and now agent is in Canada. Now he is Mr. D, sir. Who is D? Debtor. Our debtor who owes money of 10 lakhs to our principal, owes 10 lakhs to P. Now, sir, P asked A to collect the money. So how we collect, sir? We should send a notice, no? Now, agent is not also, he is not even in India, no? So, agent appointed a lawyer. With the consent of P, who sent legal notices to the debtor who has defaulted in repayment. Now, since this lawyer or advocate has sent a notice to this debtor, no, saying, Mr. D, you are liable to pay rupees 10 lakhs plus interest to my client P. Sir, this even if you look at here, sir, even this substituted agent is also working for the principal. Substituted agent is not working for the agent, sir. Substituted agent is working for the principal. That's why he mentioned his name P. Now, of course, the substituted agent got appointed with the consent of principal only, that we know. Here, the notice issued by substituted agent to debtor is for and on behalf of this P only. For and on behalf of P. Sir, if P is there, P would have issued directly, or else he would have issued with the help of another lawyer. Since this person, lawyer is also, advocate is also working on behalf of P, this agent is not a sub agent, he is a substituted agent. Sir, generally A should do this. Now substituted agent is doing it on behalf of P. So substituted agent more or less works for the principal, just like an agent. So he got substituted with some other. So here this is important. Relationship between principal and substituted agent. Where an agent holding an express or implied authority. So relationship between principal and substitute agent, sir. So that US wala guy and this yeah. When an agent holding an express or implied authority to name another person to act for the principal in the business of agency. Here look at it, sir. Where an agent, the guy who went to Canada is our agent, holding an express or implied authority. That means he has appointed the sub-agent with the authority. With the authority and consent of the principal only, he has appointed a sub-agent. So, where an agent holding an express or implied authority to name another person to act for the principal. This is the key point here. Now, such other person who got appointed is also acting for the principal but not for the agent. So, here such other person, lawyer, in our example, is acting for the principal only in the business of agency. And where sir, look at it, sir. This sentence is to be interpreted in such a way like where an agent, so holding an express or implied authority to name another person to act for the principal in the business of agency has named, where an agent has named. This where an agent, sir, if there are if there is a phrase, if there is a phrase in between two commas, even though if you keep that phrase away and if you read this sentence and the continuation, the meaning will not be distorted, the meaning will be given, sir, but not completely. Listen here, sir. Where an agent has named another person accordingly. What is such accordingly? The accordingly is in the between two commas. Listen here. Where an agent holding an express or implied authority to name another person. Agent has an authority to name another person for the principal in the business of agency, has named another person accordingly. Accordingly, this other accordingly means according to the authorization he has. So he has an authorization. As per that authorization only he named. That means there is a consent. So that's why such other person is called a substituted agent. Now, agent's duty. This is very important point, sir. Sir, simply, sir, if you for example, you are an agent, sir. So, principal gave you an authority to appoint someone to do a task. Now, agent is appointing, in our previous example, agents appoints a lawyer, no? Sir, legal notice, generally lawyer will be given, right? Sir, in finding a lawyer, sir, so he must be a qualified person. He must be such lawyer must be a qualified person. Such advocate must be a qualified person. Sir, a 10th standard studying, a 10th standard student cannot issue a legal notice, no? That means whenever an agent is appointing another person as substituted agent, he has to behave like a man of ordinary prudence would have exercised in his own name. Sir, for example, if that pertains to your own case, if the debt pertains to agent, he will appoint a expertise lawyer, no, or expertise advocate, no. In such a way also, even now you have to appoint an expert lawyer or expert advocate. Even though such advocate is working on behalf of principal also, you have to appoint him in a diligent manner. Now look at here, sir. Where an agent is selected for his principal. Look at here, sir. Where an agent selected for the principal. An agent has selected someone for the principal. An agent is bound to exercise. When an agent selected, he is bound to exercise the same amount of discretion. What is meant by discretion? The capacity to judge, sir. So the same amount of discretion as a man of ordinary prudence would exercise in his own case. Sir, if that is the own case of agent, you would have employed a better person. No? So even in this case also, you have to employ a better person. Sir, if not, what if our agent has employed an unexpert, for example, inexpert, unqualified person. What if our agent appointed unqualified person? Here we go, sir. Let us take a look here. So generally in that case, is this not continuous, sir? Sir, generally in that case, sir, you cannot make the principal liable. Agent will be held liable. So now state the duties and obligations. State the duties and obligations of an agent. Let us state the duties and obligation of agent. So duties of an agent, sir. Duties of an agent. Yes, sir. Duties of an agent. Duty to execute mandate. Sir, the principal will appoint you for a task. You have to execute it as it is, because mandatorily he appointed you to do tasks on behalf of him now. So you have to carry out the tasks. Yeah, because you are appointed for a mandate. So he will give you a mandate. That means he may ask you to sell goods at certain price. You have to execute as it is. And also, this is the first duty, sir. Next, duty to follow instructions or customs. Sir, for example, so while selling the goods, sir, sometimes the principal may give you certain instructions to the agent. May you miss agent. The principal means, for example, the principal, when a debtor came to your business, the principal may say, you please check the credit rating. Credit rating. So if you check the credit rating, so they will obtain a statement of credit rating now. So the principal may advise the agent to check the credit rating, and then basing on the credit rating only you have to give the goods on credit. That is the instruction given by general instruction given by the principal. Sir, if the principal has said something, or the principal has given you directions, or if the principal has given you some instructions, you have to carry it as it is. So you have to execute it as it is. What do you mean by the custom, sir? If there are no such directions given by the principal, then you have to look into whether there are any customs prevailing. Customs prevailing means usually that business will be done, sir, generally in general sense. So your principal owns for example 50 pani puri stalls, sir. So your principal owns means he owns those. So he appointed you as an agent, sir. When for a particular pani puri stall, when he appointed you as an agent, it is very general practice. So not to give or not to offer those pani puri on credit, right? Generally pani puri wala, they don't offer on credit, right? Because it is customary, sir. Whatever you have to pay and you have to eat and go away. So generally in that customs, sir, in that business, sir, customs may differ from business to business, right? So in particular case of businesses, so the customs may vary. So the customs may vary from other businesses. So you have to follow the custom of such particular business only if there are no instructions from the principal. If the principal instructed you to give credit, you can give credit, sir. Otherwise, if there are no instructions from the principal, then you have to follow the customary practices. Next. So yes, sir, of course you have to have reasonable care and skill. Otherwise, you cannot carry the business of principal, right? So you should possess at least some general skills which would be helpful to carry out the task perfectly. You have to communicate each and everything with the principal in relation to the business, sir. Now, duty to avoid conflict of interest. What do you mean by duty of conflict? What is meant by conflict of interest, sir? For example, in simple sense, you have to always work for the principal and not for your own benefit. An agent should never work for his own benefit, sir. He should work for in the benefit of principal. For example, principal gave you certain goods, sir. So you have not sold today. You means agent has not sold today. Even tomorrow, he has not sold even tomorrow. He has not sold even the day after tomorrow. No, the goods are perishable goods, sir. The goods got partly perished. Sir, if you sold the goods to a higher price for your commission, let us take a look example here, sir. So the principal gave you means the agent certain goods, and he said, I will pay 50% as commission on selling price, sir, and he gave you goods also. Sir, you haven't sold on first day, you haven't sold on second day, you haven't sold on third day. Now you are trying to sell on fourth day. Now the goods are partly perished. Now the goods are partly damaged. Sir, if you sell the goods, partly damaged goods to a higher price, of course your principal may get money. But it will have a negative impact. He is the customer, sir. This customer will have a negative impact, or he will have a negative view. He will give a bad feedback about your principal, no, principal's business, no, that negatively impacts, and that might have severe consequences on the principal, no. So for your commission, you sold these partly damaged goods to a higher, because the more sale value, the more the commission, right? So you will get more commission. If the sale value, because you are getting percent of commission on sale price, if you sell it at a higher value, you will get the more commission. That's why you sold the goods at higher price, higher selling price. Now you may get a higher percent as commission, sir, higher amount as commission, but the principal business will sink further down, sir. So here you're looking for your own interest, sir, but you should not do that, because you have to act for the principal with good skills and all. Yeah, duty not to make secret profit. Yes, sir, of course. Since you are working for the principal, sir, it's not fair to make secret profits, sir. If you make any secret profits, those profits belongs to principal only. Duty to render proper accounts. Proper accounts. What are proper accounts, sir? Each and every invoices, each and every accounting records, you have to submit it to the principal on timely basis. So duty to render proper accounts. Sir, accounts means not exactly profit and loss account, balance sheet and all. So account means even the invoices are also key, sir. Even you have to give invoices also, sir. It doesn't really matter whether you are doing legal business or illegal business, whether as an agent you are doing something on behalf of principal, whether it is illegal also, you have to give even those details to the principal as well. Now, you duty not to delegate. We just read this, sir. In certain circumstances, you can delegate further, sir. You can delegate your task. Agent can delegate further delegate. Sorry, agent can further delegate. In certain tasks, in certain areas, agent should never delegate. Of course, there are exceptions. In case of personal skills also, sir, expressly you have taken to do it, perform personally, sir. Since you have taken to do the task personally, you should not further delegate it. That's also a point, sir. Next, agent's duty to pay sums received for principal, of course. But here, sir, when agent is paying the sums received on behalf of principal, sir, agent can deduct fees, he can deduct commission, he can deduct all other expenses incurred him personally on behalf of principal. That means, sir, he might have incurred certain expenses, no, while carrying out the business of the principal. Agent might have incurred certain expenses, no, he can deduct that expenses and his commission, and he can pay rest of amount only. Now, protect interest of the principal. Yes, sir, of course, he has to always protect the interest of the principal. That means he has to work for the betterment of the principal's business. That's it. Right? State the rights of an agent. Next topic, sir. State the rights of an agent. What are the rights of an agent against his principal? Let us see, sir. Right of retention, just no, right of an agent. Now our agent will have, no, just now I said. So this agent will have certain rights. Let us look into that, sir. Right of retention. What do you mean by retaining something? To keep something in possession with our possession. So right of retention out of sums received on principal's account. Sir, credit, the debtor will make payment against a particular invoice, right? So if the debtor purchased 10,000 rupees goods, sir, he at a later point in time or on the due date, he will pay certain amount, sir, because that amount belongs to the principal, right? Now, agent can, from the 10,000, agent can deduct his commission and other expenses and pay remaining to the principal. Next, right to remuneration. What do you mean by right to remuneration? Yes, sir. Whatever the remuneration that is receivable from the principal, he can even retain that also. Now, right of lien. What do you mean by right of lien? Look at it. Now, observe here, sir. For example, principal gave 10 units of goods to agent to sell. So he sold 9 units, sir. For that 9 units, the agent will get commission, right? If the principal has not paid commission, the agent can retain the possession retain, what do you mean by right of lien, sir? We read it in Sale of Goods Act also, right? So we have, the agent will have right to retain the 10th unit. Next one, right to indemnity means to get compensated. Now, right of indemnification for lawful acts. Sir, generally, when carrying out a business, sir, for example, agent has to travel from one place to another place, sir. He incurred some toll expenses. On road, we incurred toll expenses, right? For such toll, he paid, agent paid out of his own pocket. Out of his own pocket, agent paid something. So it's a lawful expenses, right? Or else he paid GST out of his own pocket, GST liability, goods and services tax. Now, since he paid GST on toll expenses, he has to get indemnified from principal, right? Next step, right of indemnification against the acts done in good faith. Sir, what do you mean by acts done in good faith? Acts done in good faith means for in the better interest of the principal. Sir, we read about agency in emergency, no? Sir, for example, sir, simple example. I'll give you an example. There was a fire outbreak, no? For example, there was a fire outbreak in the godown of the principal. Now, this agent, even though without authority, he has to put off because he has to act in the better interest of the principal, no? Principal is not here, sir. He is somewhere else. So, agent has to put off the fire. Now, for putting off the fire, he has to incur. Sir, first of all, he should remove all the goods and he has to take it to a safer warehouse, right? He has to take it to a safer warehouse. Sir, for taking these goods to a safer warehouse, he will incur some expenses, right? He will incur some expenses. For these expenses, sir, incurred by agent, he has to get indemnified by the principal now. That's what this is called for in good faith, sir. Interest in good faith, amounts in good faith, sir. Now, non-liability of employer of agent to do a criminal act. Non-liability of employer. Look at here, sir. Non-liability of employer of agent. Who is the employer of agent? Principal. So, a non-liability of employer of agent to do a criminal act. For example, I am a principal and you are the agent. I have appointed you to sell goods. It's a lawful act, no? But I have appointed on the other day, next day, I have appointed you to sell goods which are illegal. That means maybe narcotics or any psychotropic substances, anything, sir. So, which are prohibited by government or which are prohibited by any law, I asked you to sell. Or else you are a, for example, sir, you are a rowdy. I hired you. Sir, I want to beat a person, sir. Now, since I don't want to beat him directly, I appointed you or I hired you. So now you are my rowdy. You are doing it on behalf of myself, right? Now if you go and beat such person, sir, I will be not responsible since you know that beating other person is a illegal act. Despite knowing this, still you have bet him, sir. So I won't be held responsible. I won't be liable to you, right? That's it. Non-liability of employer of agent to do a criminal act. Next, right of compensation. Sir, if you have incurred any expenses, sir, just like, sir, right, he can get compensated for such expenses or losses, whatever he has incurred. Now, what are the provisions relating to principal's liability to third party? Sir, listen here. This pertains to principal's liability to third parties. What are the provisions relating to principal's liability to third parties? First one, an agent does all acts on behalf of principal but incurs no personal liability. An agent, of course we know this because agent is acting on behalf of principal now. Since agent is acting on behalf of principal, all liabilities must be met by the principal but not by the agent. So, an agent does all acts on behalf of principal but incurs no personal liability. We know that. Now, principal's liability for the acts. So, what is the principal liability for the acts of agent? Yes, sir. Of course, principal will be personally liable for the acts done by the agent within the authority. Within the authority, if act has done by the agent, then principal will be held liable. Principal's liability when agents exceeded authority. Agent exceed means Sir, we gave certain authority. We ordered him, we instructed him to do a particular act, only a particular act. But our agent has exceeded his authority. That means he acted beyond his authority. In such a case, when the work of an agent is separable and work of agent is not separable. What is this separable or not separable? Sir, for example, we asked him to purchase a couple of motorcycles, sir, bikes, or else a bike and then lorry. Why bike and lorry, sir? Lorry for goods transportation and bike for personal commutation, right? So here we give authority to buy only these two, but here when the principal is ordering, when the principal is instructing the agent, the principal instructed that buy the bike below the value of, do not spend more than 1.5 lakhs for the bike, and for this lorry you can spend rupees 1 crore. Now our agent has purchased this lorry for 1 crore only. That means in this case he has not exceeded authority. And here for this, in the case of a bike, he exceeded his authority and purchased the bike worth rupees 2.8 lakhs. He purchased a Royal Enfield. For example, in this case, these two are separable goods. No, bike is different and lorry is different. Now, for this transaction, for this bike purchase, principal cannot be held liable. Principal is not liable simply. But for this, because he not exceeded authority in this case, no, because they are separable, goods are separable. So for this, principal will be held liable. Here, principal will not be held liable. Next, when work of an agent is not separable. What do you mean by not separable? Sir, in this time, we asked him to purchase a car, sir, for business traveling. A car worth rupees 15 lakhs. Worth rupees 15 lakhs. Not a top end, sir, it's a mid variant car. So, since the principal asked to purchase the car, agent has to purchase the car worth 15 lakhs only, no, or below that. But since agent also will go the car, sometimes he will also use the car, no, he purchased the car for, agent has purchased the car for 25 lakhs rupees. Now, since the agent has exceeded his authority, he shall be, agent will be held personally liable in this case. Next, sir. Sir, for example, I'll give you another example, sir. Sir, what if I will give you an example in my notepad. Principal instructed agent to purchase a bike and car for rupees 45 lakhs put together. 45 lakhs put together. Now, in this case, sir, he bought the bike and car both worth 50 lakhs. We don't know the price of the bike separately, and we don't know the price of the car separately. Now, will the principal will be held liable? No, sir, it will not be liable. Sir, you have to see whether the goods are separable, and goods are separable means whether the price can be separately identified or not. Next. So, consequences of notice given to agent. Simple, sir. For example, here the simple meaning is notice to the principal is notice to the agent. Sorry, notice to the agent is notice to the principal. That means agent having a knowledge in the ordinary course of business is equivalent to principal having knowledge. For example, sir, in a particular case, sir, if an agent has purchased, an agent has purchased a house on behalf of his principal. purchased a house. Sir, this is the warehouse, this is house, everything is the same diagram, sir. So he purchased a house for the principal. Sir, when agent purchasing the house on behalf of principal, agent know that it is 1 BHK, that is means single bedroom kitchen and house apartment, hall apartment, house basically. Now subsequently sir, this act has been done within authority only. Agent has authority, within authority. Agent has authority to buy the goods on behalf of principal only. So that's why he purchased the house on behalf of the principal. Now, while purchasing the house for and on behalf of principal, so the agent clearly knows that that is 1 BHK. Subsequently, this principal cannot cancel the contract from the seller of this house, telling that I don't know whether this is 1 BHK or 2 BHK. So because the knowledge of agent is can be considered as knowledge of principal. Now sir, another example. Sir, now Mr. Agent purchased certain goods in good faith only, sir. In good faith, not in good faith, sorry. Mr. Agent purchased goods from Mr. O. He is the owner of the goods. Sir, even Mr. A thought Mr. O is the owner. Even Mr. A thought O is the owner. Later on, when he's transacting with Mr. O, Mr. R came to Mr. A and he said, and he showed some proofs that he himself is the true owner. He is the real owner, but not Mr. O. Sir, when he purchased the goods, even though he knows the fact, even though he has knowledge of such fact, he still purchased the same goods from Mr. O, knowing that Mr. O is not the real owner and Mr. R is the real owner. Now, when he purchased, sir, of course, he has not purchased the goods in good faith. He has not purchased the goods in good faith. That means he has no valid title. Since he has no valid title, the same he cannot pass. That same will not come to Mr. Principal now. Here, the knowledge of the agent will be considered as knowledge of principal. Thereby, there is no transfer of valid title from O to Mr. P. That's the whole point here. Next, sir. Misrepresentation or fraud by agent. Here, look at the example here, sir. I will give misrepresentation or fraud by agent. He is the principal and he is the agent. Sir, principal asked the agent to sell certain goods, on behalf of principal. Now, that means principal gave some authority to agent. If he sells the goods, even though he knows those goods are damaged, then the third party, the buyer can make the principal liable by making a false representation that these goods are a fresh goods. Of course, the goods are not fresh, but he made a false representation and it is a fraud as per Indian Contract Act. Since there is a contract between agent and a third party, so this is a fraud, right? Now this third party can claim damages from the principal because the agent has acted within the authority. Now, for example, in this case, this is another example, principal and Mr. A, who is a not agent, he is an accountant. He is an accountant, still as an agent, sir, because accounting agent is working on behalf of accounting agent, is doing accounts on behalf of principal. Sir, basically P owns a place of business, sir. So there are other agents also who sells goods and who purchases goods, and A is just an accountant. He should not sell the goods, right? He should do only accounting. He should not sell the goods. But A has sold the goods to a lot of people, sir, by claiming perished goods as fresh goods. That means the goods are already damaged, sir. Despite knowing this fact, sir, he made certain false representations. A made certain false representation and sold the goods to a third party, a buyer. Here, sir, first you have to see that whether A having the authority or not. A is not having the authority. That means this third party cannot make the principal liable. Got my point, sir? Yes, of course. Here, Who will be held liable? Agent will be held liable. That's it. But not the principal. Simple point, sir. If the agent has authority given by the principal and he did a fraud, then first principal will be held responsible. If the agent has no authority in transacting those goods, but he still committed a fraud, then agent should be held responsible directly. That's the whole point here. Next, sir. So, when agent is personally liable, when is agent personally liable? In the absence of a contract to contrary, an agent cannot personally liable. Sir, until unless agent has taken personal liability, agent cannot be held personally liable. So, that's why that is subject to contract. So, if there is no contract, an agent, generally the law says an agent cannot personally enforce contracts entered by him. Enforce means you cannot basically you can sue in the name of the principal only, but not in your own name. So cannot personally enforce contracts entered by him and cannot be held personally liable for them. Even he is not liable for them. So can neither sue nor be sued. Sir, what if there is a contract entered by the principal and agent? Principal said, "Arey, you are selling goods on behalf of me only. But if any case you sold damaged goods, you are liable. Then if there is any such contract, then you have to go against as per the contract and against to this rule." So that is in absence of any contract to contrary. So that means here no personal liability. Here we are seeing exceptions. What are exceptions, sir? That means agent is personally liable. In the previous discussion, just now we have done, no. So here agent is not personally liable, but here there are certain exceptions. That means in these cases agent is personally liable. In the following cases, the agent is presumed to have agreed to be personally liable. We will presume, the law is presuming that the agent, you are personally liable in these cases. What are these cases, sir? Sale or purchase of goods for a foreign principal. Sir, your principal is in foreign, sir. You are in India. So he is a foreign citizen. He lives in foreign only. You are in India. Now, obviously, for example, this agent in India sold certain goods to a buyer, certain damaged goods by fraud. Now, the person, the aggrieved party, the buyer can hold not the principal liable, sir. He cannot go to foreign and sue in that country, no. So he can make the agent personally liable. So since we cannot go to foreign and we need not to go foreign. But who sold you the goods, sir? He's the agent here. So you can make agent directly responsible. Agent directly responsible. Does not disclose the name of the principal. So when agent is transacting, so he is transacting on behalf of some person, but when the agent is transacting, he hasn't disclosed the name of the principal. That means in some cases, agent, to escape from the liability, may tell that I do have a principal, but I don't want to disclose the name. Because if he discloses the name, the people might ask, give the details of such person and all. No. So in such cases, the agent, in some cases, agent, if he did not disclose the name of the principal, he will be held personally liable. Next, acts for a principal not in existence. Sir, there is no principal only, thereby the agent will be held directly responsible. Expressly provides for personal liability of the agent. That means there is a contract relating to personal liability. If the agent has undertaken the responsibility to be personally liable, then he will be held personally liable. Enters into a contract in his own name. That means an agent has always acts on behalf of the principal, but this time the agent has not acted on behalf of principal, sir. Since he acted in his own name, the third party can sue. That means the other person who has entered into contract with the agent, he can sue personally on the agent. Next, misrepresentation or fraud by agent. Yes, sir. Sir, ultimately, whoever commits the fraud should be held responsible, right? Yes, if the agent has committed fraud, sir, agent will be held ultimately responsible. Yes, sir. Next, our concept is termination of agency by renunciation. Sir, what do you mean by renunciation? A formal take back means a formal withdrawal. So basically nothing but a sort of revocation, sir. So what do you mean by termination of agency by renunciation? Sir, an agent can always withdraw from his agency relationship. So now an agent may renounce the business of agency in the same manner in which the principal has right of revocation. Sir, principal can revoke his part of agency, no, I mean principalship, no. In the same way, even an agent can renounce his business of agency, but subject to following conditions. Means in these cases, an agent can revoke his agency. Now, if the agency is for a fixed period, sir, for example, in certain cases, the principal and agency relationship will be time bound. So, for example, a particular agent may need to work only for a particular period of time, that is maybe 3 months, 6 months, 1 month, or irrespective of that, sir. So, whatever, that depends on the agreement. Now, such agent can renounce his agency upon completion of such period. Next, a reasonable notice of renunciation is necessary. Sir, even before such time also, agent can renounce. Means, but there must be a condition. What is that condition? He has to give a proper notice. And then he can renounce the agency. Next, a reasonable notice of renunciation is necessary. Of course, next, if an agent renounces without proper notice, he shall have to compensate the damage. For example, sir, agent so agreed for an agency for 6 months, sir. Sir, he can withdraw any time before that, 3 months, 4 months, or 5 months, whatever. But all these conditions must be satisfied. So, first of all, that must be a agency must be for a fixed period, and a reasonable notice must be served. A reasonable notice must be served to the principal about his renunciation. Next, if the agent renounces without proper notice, sir, what if he doesn't give any notice? Then he shall have to compensate for the damage. So initially he agreed to serve for 6 months, right, as an agent. So not so, he agreed to act as an agent for 6 months, sir. But if you agreed to serve for 6 months as an agent, then if you terminate it, if you renounce it without giving any notice, then the principal may suffer from losses. No, that's why principal, if any loss occurred to the principal, that need to be compensated by this agent who has not issued proper notice of renunciation. Next, termination of agency through other modes. Sir, agency is terminated by renunciation, means agency will come to an end by renunciation, and there are other modes also where agency will be terminated through other modes. What are these, sir? Completion of business. Upon completion of business, for particular transaction only, I have appointed an agent. For example, sir, I need a house in Hyderabad. So for example, if I need a house in Hyderabad, so for renting, so I need a house for renting, sir, for my commercial purpose or whatever. So I appointed an agent and I asked him to look around for some houses or commercial complexes for my business. So that could be, sir, upon completion of search or upon completion of or upon obtaining the house or business complex for my business, then the agency will be terminated since the business for which he appointed has ended. Next, death or insanity. What do you mean by death or insanity? Yes, sir, if the agent is no more, if the agent passed away, the agency will get terminated. What do you mean by insanity? Insane, sir, unsound mind person. Basically, if an agent became unsound, sir, he is incapacitated to enter into contract now. So on behalf of principal also, so therefore that agency will be terminated. Next, if the principal is insolvent, sir, if the principal is insolvent, agency terminated? Because the principal will lose his capacity to contract, right? An insolvent person cannot enter into a contract, so therefore, sir, agent works on behalf of principal, right? So if anyone want to sue on the principal, since he himself initially incapacitated, first of all, they may not enter, or else they cannot enter into contract with the principal because he is insane. Now the relationship between principal and agency will be terminated. So because this is the principal and agency is the relationship between principal and agent, no, that's why this relationship will also get terminated. Next, on the expiry of time, sir, what if the time expired? Yes, as earlier I have explained, if the agency is for 6 months, sir, or 3 months or 4 months, whatever. So on expiry of such period, the agency will be terminated. Termination of agent sub-agent's authority. Sir, for example, he is the, who is a sub-agent, sir? First of all, who is a sub-agent? Sub-agent is a person who is appointed by the agent, Sir, will the sub-agent have any relation with the principal? No. So sub-agent is appointed by the agent, means for this sub-agent, who is the principal? Agent is the principal. So thereby termination of sub-agent's authority. Sir, for example, if the sub-agent's authority is terminated, his principal's authority will also be terminated, and thereby the agency is revoked or terminated. What is an irrevocable agency? In certain cases, sir, you cannot revoke the agency. Why? Sir, listen here. The term irrevocable agency means an agency that cannot be revoked or terminated by the principal. In what cases, sir? Agency coupled with interest. For example, he is the principal. Sir, this principal and he is the agent. For example, so let us go back in the scene, sir. Now, he is Mr. Creditor. He is Mr. Debtor. This debtor gave, this creditor gave 10 lakhs to debtor. Now, this debtor got appointed as an agent for, see, how, for example, this creditor gave 10 lakhs to debtor, no. So the debtor shall repay to the creditor, no. Now this debtor has a piece of land, sir. Now this debtor asked Mr. Creditor to, array creditor, you can sell my land. He is the debtor, he is the creditor, and this land belongs to debtor. Now this debtor asked the creditor to sell this land and take the proceeds of his loan out of this land. For example, I'll clarify once again, sir. For example, yes. So this debtor was 10 lakhs to the creditor, no. Debtor was 10 lakhs to creditor. So this debtor has a land. This debtor has some land. So this debtor asked creditor to sell this land on behalf of this debtor and take the proceeds. What do you mean by the proceeds? The sale proceeds. Take the sale proceeds to the extent of 10 lakhs. That means while creditor selling the land of debtor, while the creditor selling the land of debtor is an agent to the debtor, no, because this creditor is selling the land on behalf of D. Sir, now there is an interest of creditor in this land. Sir, if this land is being sold, this creditor will get his proceeds, no. His 10 lakhs he will get it back, no. So that's why in this case, in this type of situations, the debtor means the principal cannot revoke the agency. That means this debtor cannot take back the agency from this creditor, because creditor means that agent, because the agent has interest in this transaction. So this is called agency coupled with interest. In this case, you should not revoke the agency. Next one, where the agent has partly exercised his authority. Sir, if the agent is already an agent, sir, he exercised his authority. That means whatever the principal has said, the agent has partly exercised his authority. Now, sir, if you revoke your agency, if you revoke agency, such agent will be personally liable. Now, that's why you should not revoke his authority after partly exercising his authority. Now, next up, where the agent has incurred personal liability. Sir, for suppose he is the principal and he is the agent. Sir, the agent purchased goods on credit. And also incurred certain personal liabilities while for this purchase transaction. Sir, if you want to go to some other place and for going to some other place, he has incurred certain personal liabilities. Now, for this transaction, you should not revoke the agency. Why, sir? So, because agent has already incurred personal liability, with respect to this credit transaction, agent has already incurred certain personal liability, that's why you should not revoke the agency. So, next, where the termination of agency is effective. What do you mean by termination? When will be the termination of agency be effective? So, when termination of agent's authority takes effect, when it comes into the knowledge of agent, or and when it comes into the knowledge of such third parties. In these two cases, sir, the agent termination of agency. Sir, what do you mean by third parties? For example, the principal revoked the agency of the agent, and the third party clearly knows that the agency has been revoked by the principal. In this case, since the third party knows that the agency has been revoked, now agent will no longer be that means the agency termination came into communication, has been communicated properly. So when the termination of agency, now at this point in time, sir, when it got communicated, it is said to be effective communication. That means already the agency has been terminated, and the fact of such termination came to the knowledge of third party. Now, agent's duty on termination of agency by principal's death or insanity. Yes, sir. So agency duty on termination of agency. Sir, basically, when the agent came to know that the principal is no more, then the agency will be terminated. So as soon as he came to know the fact, sir, such agency will be terminated. Such termination will be effective when he knows the fact of such death or insanity. Next, so let us see the difference between subagent and substituted agent. Subagent, sir. Who is a subagent? So subagent is a person employed by and acting under the control of original agent in the business of agency. Original agent, sir, but not the principal. Then who is a substituted agent, sir? Where an agent holding an express or implied authority. Where an agent holding an express or implied authority to name another person has named another person accordingly. Sir, for example, where an agent holding an express or implied authority, he has an authority, sir. So he has appointed, sir, what is the example that we have taken earlier? Sir, so for example, the principal asked his agent to name a lawyer for sending legal notice to one of his debtors. So for this purpose, if the agent has named a person or named an advocate to send a legal notice, such advocate will be a substituted agent since he is working for the principal. Now, appointing authority, he works under the directions of agent. Subagent works under the directions of agent, and substituted agent works under the directions of principal. Next, delegation. So agent delegates a part of his work to him. What do you mean by agent delegation? Sir, because he is an agent to the agent, no, that's why agent delegates part of his work to him. Here, in case of substituted agent, agent does not delegate, sir. Who delegates, sir? The principal, because he works for the principal, right? Yeah, privity of contract. There is no privity of contract between the principal and subagent. There is a privity of contract between principal. What do you mean by privity of contract? For simple example, sir. Sir, if for example, there is a principal and there is an agent. Sir, this agent has transacted on behalf of principal and he has entered into a transaction with a third party. Now, this third party can sue on the principal as well, right? So, because there is a privity of contract. Now, in case of substituted agent, there is a privity of contract between the principal and substituted agent, because this substituted agent also, for example, this substituted agent is the advocate example. He also substituted agent. He works for the principal. Now that's why for any transaction entered by the substituted agent, so it creates a privity of contract. Whereas in case of a subagent, sir, what in case of a subagent? Sir, subagent means an agent appointed by original agent, right? Sir, he is a original agent. Here principal will not come into the picture. So there is no privity of contract, because this is, for example, he is the principal. The principal is no way related to this subagent, right? If the principal is no way related to the subagent, whatever the transactions or whatever the contracts entered by the subagent, for those contracts, this original agent is responsible, but not the principal. Therefore, the subagent cannot create any privity of contract. So, what is privity of contract principle, sir? Only the parties to a contract can sue. In the case of substituted agent, listen here, sir. In the case of substituted agent, the substituted agent also will work for the principal, sir, right? This is a original agent, Now, the substituted agent will also work for principal. So, therefore, whatever the contracts entered into by the substituted agent, the third party can sue on principal as well, because it creates a privity of contract. Sir, what is the rule of privity of contract? Only the persons, only the parties to the contract can sue on one another. Only the parties to a contract can sue one another. Can sue one another, but not third parties. Other outside parties cannot. Outside parties to a contract cannot sue. So only the parties to a contract can sue on one another. Sir, in case of a subagent, subagent is the principal, sir. So he is the agent, sir. He is the original agent, in fact. So he is the subagent. He is the subagent. Sir, in this case, the subagent works for his principal. Who is his principal? The original agent. Therefore, whatever the contracts entered into by the subagent this is no way related to the principal. So, but this is related to the agent. So, therefore, subagent will not create a privity of contract with principal. So, there is no privity of contract in case of subagent. Next, sir, his accountability is responsible to the agent alone. Yes, sir, because who is his principal? Original agent. In case of substituted agent, he is responsible to the principal. He is responsible to the principal. Responsibility: agent is responsible to the principal for the acts of subagent. Agent is responsible to the principal for the acts of subagent. Yes, sir. Why, sir? Agent is responsible because he is the one who has appointed, and the subagent works for the agent. No, that's why. Here, agent is not responsible to the principal for the acts of subagent. Basically, sub-agent is not responsible. Why? Even that substituted agent works for the principal. That's why. Next, right, sir. Subagent has no right of action against the principal. Yes, why? Because he has a right of action against the original agent, but not the principal. Substitute for remuneration, especially. The substituted agent can sue the principal for remuneration due to him. Of course. Next, liabilities. Agent is liable for the acts of subagent because he is the one who has appointed subagent. Next, duty of agent. In the case of substituted agent, duty of agent ends when the principal appoints a substituted agent. Yes, sir. Duty of agent ends when principal appoints a substitute, because this substituted agent will be now an agent. No, that's why here the duty of original agent ends, because now there is a relationship of principal and agent between this substituted agent and principal. Improper appointment. So, yes, sir, because an agent is the person who appoints a sub-agent. No, since the agent appoints a sub-agent, sir, it is no way related to the principal. No, so they may be improperly appointed. Because here the liability will rest upon an agent but not the principal, so they may be improperly appointed. As a principal, we don't care. Next, what about improper appointment in case of substituted agent? Listen here, they can never be improperly appointed. Why, sir? If there is any gross negligence in appointment of a substituted agent, the agent will be held responsible, because even in case of substituted agent also, the agent will appoint a substituted agent, but with a due care, as a man of ordinary prudence will exercise in his own case, sir. He'll exercise his judgment in his own case. So, if they has improperly appointed, the agent will be held responsible. So, they can never be appointed improperly. That's it, sir. Next, we'll meet with another new chapter. Let us see the difference between a bill of exchange, promissory note, and a check, sir. In case of a promissory note, sir, we are seeing it on brief, sir. In case of a promissory note, there will be an unconditional undertaking signed by the maker. In case of a bill of exchange, sir, there will be an unconditional order signed by the maker. So, in case of a check, it is drawn upon a specified banker. So, who are the parties? So, maker and payee are the parties. In case of a promissory note, dry and pay me is the dry and payee is the parties, are the parties in case of a bill of exchange. And in case of a check, drawer, banker and payee. Who is the payee? Answer. So, to whom the money is payable is called the payee. Now, nature. So, what is the nature, sir? Here there will be a promise to pay. Here there will be an order for making payment. Sir, here the drawer will make an order to make payment, right? For making payment. Sir, in case of a check, sir, drawn on a specified bank or no, and also a check is always payable on demand. Now, in case, what about acceptance, sir? So, in case of promise note is signed by the person who is liable to pay. That is, who is liable to pay, sir? Maker. So, in case of a bills of exchange, sir, dry needs acceptance from dry. Next, so in case of check, sir, so acceptance is necessary. Acceptance is necessary means, of course, the person who signs on the check, it is nothing but acceptance only. So the acceptance is necessary, sir. Here the acceptance means nothing but the person, the drawer's sign is considered as acceptance and nothing beyond that. So basically here acceptance is just the signature of the drawer. Now payable to bearer cannot be made payable to bearer as per RBI, sir. As per RBI, so a promissory note is not payable to bearer. It can be, no, it is, sir. What about this check bills of exchange? It can be drawn payable to the bearer. However, it cannot be payable to bearer on demand. So in case of a bills of exchange, it cannot be made payable to bearer on demand. So the payee must be certain and it can be drawn payable to only a bearer. So but the bearer on demand doesn't work here, sir. So the bearer on demand doesn't work. So this is as per RBI. So it can be drawn payable to bearer but not bearer on demand. So what about check, sir? It is on demand, even bearer on demand, even to bearer if so made. So whosoever bears the check, sir, he can present it to the bank, sir. If the bank has not made the payment on demand, the check is said to be dishonored. So this is it, sir. So from exam point of view, so the definitions of promissory note, bills of exchange, check, and the essential characteristics of promissory note, bills of exchange, check are respectively are important, sir. And there are different types of instruments. What are different types of instruments, sir? For example, in court instruments. What do you mean by an in court instrument? And what do you mean by inland instrument and foreign instrument? And what do you mean by negotiation? And especially very important question is, what do you mean by negotiable instrument and Spanish characteristics? So these are the certain important concepts, sir. You have to be thorough with those. Our next chapter is negotiable instruments. Negotiable Instrument Act 1881. NI Act 1881. So let us see, sir. What is negotiable instrument and explain the essential characteristics. So in order to call an instrument as negotiable instrument, there will be certain essential elements. Let us look into it, sir. Negotiable instrument is an instrument which is freely transferable, that means unconditionally transferable from one person to another by mere delivery or by endorsement and delivery. Sir, when do we do this mere delivery and when do we do this endorsement and delivery? We'll learn it further, sir. What do you mean by mere delivery? Just without signing, we can, if you have a negotiable instrument, that is check or bills of exchange or promissory note, we can deliver it by mere delivery. We can give it by mere delivery. That means the instrument will get negotiated by mere delivery only. So what about endorsement and delivery? So endorsement means, for example, I took a negotiable instrument or bill of, for example sake, I took a bills of exchange. On the back of the bills of exchange, sir, if I sign and deliver it to someone, that is called endorsement or endorsement. This is called endorsement and delivery. We will learn further, sir. So as of now, let us focus on section 13. Section 13 provides for only three things. Sir, NI Act has specified only three instruments as negotiable instruments. What are those? Promissory note, bills of exchange, and check. So now, what do you mean by negotiable instrument? A negotiable instrument may be either payable to order. So payable to order, I am connecting to it here, sir, or payable to bearer. What do you mean by payable to order or payable to bearer? So here this is linked with this sentence, sir. Payable to order means, for example, if such instrument mentioned the name of a person or if the such instrument has bear the words with by order, so it is called order instrument. Sir, what is a bearer instrument? Sir, no name of the person will be mentioned, sir, or it will be mentioned only a bearer instrument. Then such instrument will be called as a bearer instrument. So what are the characteristics, essential characteristics of negotiable instrument? It must be in writing, it must be signed, it must be freely transferable. What do you mean by freely transferable? Unconditionally transferable. Holder's title is free from defect. Who is a holder, sir? Sir, for example, I have a check which is I have bills of exchange, sir. So Mr. Rex stole that such bills of exchange. Now his title is defective. So in that case, sir, he took the instrument by theft. So his title is defective. So basically, one of the essential characteristics of negotiable instrument is a holder's title is free from defects. That means his title must not be defective. Transferred any number of times. Yes, sir. Negotiable instrument means it can be negotiated in numerous times. Next, unconditional promise to pay. Yes, that's what we read, right? So a negotiable instrument is a freely transferable without any conditions. Next, it must be certain. What must be certain? It must be The negotiable instrument means the person, the payee, or the other person to whom we endorse or whom we give the name of the name and the amounts on it must be certain. It should be delivered. Yes, sir. It must be delivered. Otherwise, the negotiation won't be complete. So, a negotiable instrument must be delivered. Mere endorsement does not amount to negotiation. It must be endorsed means the check or the negotiable the bills of exchange must be signed as well as delivered to the other person. Then only the instrument is said to be negotiated. Otherwise, it is not said to be negotiated. Next, now we'll come into promissory note. Sir, remember, as per negotiable instrument, there are only three instruments. What is that? So, check, bills of exchange, and promissory note. Now, we are going to discuss about promissory note. A promissory note is an instrument in writing that is not being a banknote or currency note. Sir, banknotes or currency notes are issued by RBI. So, whatever the notes issued by RBI, we don't call them as negotiable instrument or promissory notes. So, a promissory note is an instrument in writing containing an unconditional undertaking signed by the maker. Who is the maker? Basically, the person who took the money will make the negotiable instrument and he will sign that site, right? So, one who has taken the money and signed on the instrument, is such person is called maker. So, but that sir, a negotiable, even a promissory note, because it's a negotiable instrument, right? So a promissory note must not contain any condition. So that must be an unconditional undertaking or responsibility, so which is signed by the maker to pay a certain sum of money only. Sir, in a promissory note, you should not promise to give anything other than money. So it must be money only to someone, or to the order of, to the order of. Yes, sir, of course, it may be an order instrument as well. So to or to the order of a certain person, or to the bearer instrument. So, sir, generally there is a certain there is an exception to it, but I will let you know or after some time. No, parties to promissory note. Who are the parties to promissory note? Maker and payee. So the person who makes the promissory note and he will signs, no, so he is the maker of the promissory note. Who is the payee? The person to whom the payment is made is called payee. Next, what are the requisites of a promissory note? Essentials. It must be in writing. There must be an express promise to pay. Sir, express promise to pay means, so the promissory note must contain an express promise. That means it should not be implied. Mere acknowledgement is not sufficient, sir. It must be there must be an express promise to pay to the payee or any other person. So it must be definite and unconditional. Yes, sir. As we said, a negotiable instrument must not contain any conditions. It must be certain as well. It must be signed by the maker. It must be certain. So promise to pay and money only. That's what we have read in the definition. So the parties must be certain. The maker and payee must be certain. It must bear stamps. It must bear stamps, without which it is not enforceable. So it must contain a date as well, and the limitation period is 3 years. Sir, after the due date, you can sue on the instrument only up to 3 years and not beyond that. So because the instrument will be time bound. In case of a promissory note, the limitation period applies is 3 years. Now let us go to bills of exchange. So bills of exchange. A bill of exchange is an instrument writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money. Money only. Again, only, sir. Even in case of a bills of exchange, sir, how does the bills of exchange work? For example, Mr. S sold goods to Mr. B. S is the seller, B is the buyer. Sir, after that he will send a bills of exchange on which B must write and sign. He must make a signature. Thereby it amounts to acceptance. So in this case, sir, B is the maker. A bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only, or to the order of a certain person, or to the bearer of instrument. A bill of exchange is an instrument. Yes, sir. How does a bill of exchange work? When the seller sends a bill of exchange to the buyer signs on it and returns. That means the buyer gives his acceptance. Now there are different parties to a bill of exchange. Again, sir, so without mentioning, we have to there is no other condition, sir. There must not be any conditions. In case of a bill of exchange also, and also it must be only money only, it must be only payment of money only. So this is called bills of exchange. Now again sir, the bill of exchange is an instrument in writing containing an unconditional order. There must be not any conditions present on the instrument, signed by the maker. So sir, of course the maker will sign on it. So by directing a person, certain person to pay certain sum of money only and not anything else. For sir, what is not anything else? In that instrument only money should be mentioned and not any other items or goods. So only to money only to or to the order of to a certain person, or to the order of a certain person, or to the bearer of the instrument. For example, we know that sir, for example, A owes certain sum of money to B. He gave a bills of exchange. He gave a bills of exchange. Sir, B is the payee here. B is the payee here, right? So A owes certain sum of money to B. So to whom the money we have to pay? So to whom the money will go? So it will go to B. So B is the payee. Now look at here, sir. Sir, after acceptance given by A, by signing on it, now B can further endorse it to C as well. Now B can endorse it to C. If B owes to C, so B owes money to C, he can endorse it to C. On the due date, C will go and present the bill of exchange to A, right? So here even C can endorse it to someone else as well. So sir, here the term to, or to the order of, or to set order of a certain person, or to the bearer of the instrument. Again here the negotiable instrument can be an order instrument or a bearer instrument as well. Sir, what is a bearer instrument? As one who bears the instrument, so he can demand the payment from the party whose name is mentioned on the instrument. So that he is called bearer. So now let us see the parties to a bill of exchange, sir. So the drawer, the person who gives the order to pay is called drawer. Drawee, the person who is directed to pay. Sir, now who is directed to pay here? A is a directed to pay because A owes money to B. No, A owes money to B. So A has signed on it. Sir, he will make the bill. So first of all, he will make the bill. So he will make the bill and he will send it to A for acceptance. A will accept and he will give it back to B. So on the due date, B will present, or any other person to whom the B endorsed the bill will present the bill to A. So this how it runs, sir. The payee, the person to whom the payment is made is called payee. The person to whom the payment is made is called payee. To whom the payment is to be made, sir? To B. Sir, in the case of endorsement, so the payment comes to C. So there are three different parties in case of a bill of exchange: the drawer, the drawee, and payee. Now, what are the requisites or essentials of a bill of exchange? It must be in writing. It must be in writing. Then it must be an express order to pay. There must be an express order to pay. Now it must be definite, certain, and unconditional. Sir, this comes wherever you go, sir. In case of negotiable instrument, it must be always be unconditional. And the drawer must sign the instrument. The drawer must sign the instrument. The parties must be certain. Yes, sir. Of course, the drawer also will sign the instrument. The parties must be certain. Who are the parties, sir? The maker and the drawer. Sorry, the drawer and drawee. So the sum must be certain, the amount must be certain, it must be pay money only, it must be to pay money only, not anything else. It must be stamped as well. So this is called a bill of exchange, requisites of bills of exchange. Now, what is a check? A check is a bill of exchange drawn upon a specified banker and payable on demand. Sorry, a check is always payable on demand. So so there will be no grace days in case of a check. A check is a bill of exchange drawn upon a specified banker. So drawee is always a banker in case of a check. Drawee is always a banker in case of a check, and payable on demand, and it includes electronic image of a truncated check and check in electronic form. So what is check in electronic form? So basically, in simple words, the birth of the check itself takes in electronic format. So that is called electronic check. So you can display, for example, the generation of the check itself will be in electronic form. Means the check will be generated in electronic form. Then what is a truncated check? Sir, when clearing, for example, so I have an account in, this is Axis Bank. This is Axis Bank. So Axis Bank gave me a checkbook. Axis Bank gave me a checkbook. Out of this checkbook, sir, I owe you, out of this checkbook, I gave you a check. I gave you a check. So this is an Axis check, sir. This is an Axis check because I owe you money, right? I owe you money. I gave you a check, but you don't have any account in Axis Bank. You have account in SBI. Now, if you go on to, if you take that check to SBI, it may take some times because they are not same branches or they are not same banks. So it will take some days to get the check cleared, right? So while in the process of clearing the check, to restrict the movement of the physical check, the clearing houses means that basically there will be an intermediary banks or dryer bank or dry bank, whatever, dry bank sometimes will generate an electronic check, so for clearing purposes and to restrict the physical movement of the check. So the check generated, the check that got generated in the process of clearing, the check that got generated in the clearing process of clearing is called a, what do you call that, sir? Truncated check. So even truncated checks are also checks. Who are the parties? There are three parties. Dryer, one who draws the check. Dryee, the bank, the payee, to whom the money is being paid, or to whom the money has to be paid. So what are the requisites of a check? All essential elements of a bills of exchange must be satisfied by check as well. It must be drawn on a specified banker. So a bank is always a drawee. So drawee is always a bank in case of a negotiable, in case of a check, sir. It must be payable on demand. Yes, sir. There will be no grace days upon presentment to the bank. It has to be paid. Otherwise, it is said to be dishonored. Next, explain different types of negotiable instrument. Yes, sir. Here we go. Bearer instruments. What are bearer instrument? It is said to be payable to bearer when the name of payee is blank. Sir, on the instrument, if you mention no name of payee, name of payee is blank, sir, then it is called bearer instrument. What is an order instrument? It is payable to a person. That means the name of person is mentioned, payable to a person or his order, or order of such person. Pay to Mr. X or order. This is an order instrument. Or payable to order of a person, or payable to the order of certain person. So it is also called as a order instrument. Inland instrument. The instrument drawn or made in India and made payable in or drawn upon a person in India. Look at it, sir. Instrument made in India or drawn in India. This is the first condition. In order an instrument to be an inland instrument, the instrument must be drawn or made in India. It must be drawn or made in India. And not only drawn or made in India, and made payable in India or upon a person resident in India. Either he must be a resident in India or it is made payable in India. So among other two conditions, what is the primary condition, sir? It must be drawn in India. It has to be satisfied in irrespective of the subsequent conditions. So first of all, the primary condition is it has to be drawn in India, and among other two conditions, what are the two conditions, sir? So, and made payable in India, this is the condition one, or drawn upon a person resident in India. If any of these two conditions are satisfied along with this primary condition, then it is an inland instrument. What is the first one, sir? The instrument drawn or made in India and made payable in or drawn upon a person resident in India is called inland instrument. What is a foreign instrument? Is one which is not an inland instrument. A foreign instrument is one which is not an inland instrument. What is an ambiguous instrument? Where an instrument may be construed. So construed means considered either as a promissory note or a bills of exchange. It is ambiguous, sir, means which is not clear. Sir, for example, the holder of the instrument considered it as a promissory note, then subsequently it has to be considered as promissory note. If the holder of the instrument considered it as a bills of exchange, then subsequently it has to be considered as bills of exchange only. Next, what is an in-court instrument? In-court instrument means it's an instrument which is incomplete in certain aspects. Means so the amount may not be mentioned. So like that, sir. For example, if the amount of the check or if the amount on the instrument is not mentioned, the person who draws the bill may ask the other person so to fill the amount to that extent or to the amount of stamp value, so or the amount as mentioned in the instrument. So it is called an in-court instrument. Since it is incomplete, the amount is not not written there, sir. So it is called incomplete. So such instruments are called in-court instruments. Next, what do you understand by the word negotiation under NI Act 1881? Negotiation means freely transferable from one person to another person. What do you mean by freely transferable? Without any conditions. Their rights can be transferred by negotiation. Right to receive, sir, right to receive is a right. It can be transferred by negotiation. Intention of making that person as a holder of the instrument. What is the intention? Intention of making that person to whomever we transfer the instrument. Our intention is to make such person as the holder of instrument, and that he has to transfer ownership of the instrument. Negotiation means we have to transfer the ownership. We will transfer the, if we transfer the ownership of the instrument, then the instrument is said to be negotiated. Next, negotiable instrument may be negotiated either by delivery. In case of a bearer instrument, sir, we can make the negotiation by mere delivery. And in case of an order instrument, we have to endorse it and deliver. So negotiation happens in these two ways. Now, importance of delivery in negotiation. Sir, here the delivery is of two types. We'll go and see. Importance of delivery in negotiation means delivery is essential. Endorsee will not get any right. That means, for example, Mr. A has mentioned B, pay to B or order. So, but he forgot to deliver it to B. He mentioned the name of the B, sir, but he hasn't delivered it to B. So here, since there is no delivery of the instrument is not said to be negotiated. So this endorsee, sir, what is meant by endorsement? Sir, we will write the name on the name of B, and Mr. A will sign here. No, he will write on the back of the instrument. He will write name of B and he will sign. Basically, for suppose endorsement means, so this is the back side of the check, back side of the instrument. He will write the name of the B. He will write the name of the B, and he will sign it here. He will sign it here. A will sign it here. Then it is said to be endorsed, sir. So, but he endorsed it, sir, but he hasn't delivered the endorsed instrument to the endorsee. The person who signs back of the instrument is called endorser. The other person to whom we endorse is called endorsee. Since we have not delivered it to him, sir, so he will not get any right over it. Now, it must be voluntary. What must be voluntary, sir? Such a delivery must be voluntary. Its objective should be to pass the property. Why are we delivering it to, sir? Sir, we are delivering such instrument to give the property. What is the property? The amount mentioned, or the right, basically the right over the instrument is called property. So whatever the in case of a check, sir, the amount mentioned therein is the property. So what is the delivery? Can be either actual delivery or constructive delivery. Actual delivery. What is an actual delivery, sir? So physically transferring the check or negotiable instrument to such person is called actual delivery. What is constructive delivery, sir? Listen, sir. Mr. A has an account in Axis Bank, where B is also having an account. Even A is having an account in Axis Bank, B is also having an account in Axis Bank. In this case, sir, for example, if A asked the person of Axis Bank, the official of Axis Bank, to transfer the check by telling the check number and all the details to Mr. M or Mr. O, the official of the bank. Now, A asked Mr. O to transfer the amount or to transfer the rights in the negotiable instrument to B. Now, if O here, if you clearly observe, if O accepts this transaction, sir, now O is acting as an agent to B. That means we haven't physically delivered the instrument, but still O is holding the instrument as an agent to B. That's why it is said to be constructive delivery. It is said to be constructive delivery. Next, what is when an instrument is conditional or for a specific purpose? The ownership, what do you mean by, what are we studying here, sir? We are studying here the importance of delivery. So when an instrument, sir, we gave delivery, sir, we gave delivery, but the property or the right in the instrument will pass to the endorsee upon fulfillment of certain conditions or upon fulfillment of certain purpose. In that case, sir, the ownership of the instrument, sir, we give this check by placing a condition. We haven't mentioned the condition in the instrument, but there is a condition. We kept a condition whenever we are transferring this instrument to Mr. B. A kept a condition. Sir, now the property in the instrument passes to B upon satisfaction of such condition as kept by A, sir. So the ownership of the instrument does not transfer to the recipient when an instrument is conditional or issued for a specific purpose. This rule does not apply when the instrument is negotiated to a holder in due course. Sir, what is the difference between a holder, small difference between a holder and holder in due course? Sir, generally, holder in due course will get the instrument for some consideration, while a holder, sir, we call a person who has a right on the instrument, but in case of a holder, there will be no consideration. The consideration is not necessary. But in case of a holder in due course, he will take the instrument for some value. He will obtain the instrument for some value. So there will be a consideration in case of holder in due course. Now, until delivery is made, the contract is incomplete and revocable. Yes, sir, we know that until delivery is made, contract is, because in case of negotiation, delivery is also mandatory. If the endorser, one who endorses, so one who endorses, he's to whom we endorse is called endorsee. The person who endorses is called endorser. The endorser, the legal representative of endorser, cannot negotiate the instrument by mere delivery. So the legal representative of an endorser cannot negotiate the instrument by mere delivery. Yes, sir, because the endorser died, sir. So if the endorser died, he might have endorsed. That means he might have just signed on the instrument, but he didn't deliver. No. So the legal representative, if he merely delivered, that doesn't mean it has negotiated the instrument. So negotiation completes upon endorsement and delivery. But the endorser who is dead has just signed on the instrument, but he has not delivered. Thereby, instrument has not negotiated. Now, yes, sir. Dishonor of a check. What do you mean by dishonor of a check? Listen here, sir. Where any check drawn by a person on account maintained by him with a bank. For suppose, I have an account in, again, Axis Bank or HDFC. I have an account in HDFC. Sir, I will have certain account balance. Sir, in case of a bank, our account balance will be an liability will be an obligation to them, right? So, for example, the amount standing to the credit of our account, our money is with them. So basically, they have to repay at some time or other. So since it is not their money, it's an obligation to them. But now look at it, sir. We have issued our balance is, for example, 10 lakhs. Our bank balance is 10 lakhs in HDFC Bank. Now we have issued a check for 12 lakhs. Will the instrument be honored or dishonored? It will be dishonored. Let's go into the definition. Where any check drawn by a person on account maintained by him with a banker. On account maintained by him with a banker. So why you have drawn a check on it, sir? For payment of any money, for payment of any amount of money to another person from that account. Sir, why do we have issued check? We have a check in HDFC and we asked the bank to pay 12 lakhs of amount from that check for the discharge, whether in whole or in part, discharge of any debt or other liability. Since, for example, we owe him 12 lakhs, sir, we owe him 24 lakhs. Sir, 24 lakhs debt need not be paid off or need not be discharged all at once. We may pay twice or thrice. That depends on the agreement between the debtor and creditor. But so the check issued need not be for the whole obligation. It can be for part obligation as well. So for the discharge, we issued the check to another person from that account for the discharge in whole or in part of any debt or other liability. So such a check is returned by the bank unpaid. The bank has not paid the amount, sir, and the check is returned by the bank unpaid because of, there may be two reasons. Either because of amount standing to the credit of that account is insufficient to honor the check. Sir, just now we saw our bank balance is at 10 lakh rupees, but the check we have issued is 12 lakhs. Now the 10 lakhs amount is not sufficient to honor the check of 12 lakhs. No, that's why they have returned the check. The bank has returned the check unpaid, or that it exceeds. What is meant by that? That check exceeds the amount arranged to be paid from that account by an agreement made with the bank. Sir, for example, I have previously entered into an agreement before issue of this check only. I have entered into an agreement with the bank stating that, dear HDFC, if I issue any check pertaining to this account number, so 543261, so pertaining to this account number, please pay only maximum to the extent of maximum to the extent of 5 lakhs rupees, max to the extent of 5 lakhs rupees or not beyond. So already there is an agreement, no, but the agreement is restricting my amount up to 5 lakhs, no. So the amount of 5 lakhs only will be honored and not beyond. So even if I issue check containing 6 lakhs, the check will be dishonored. So the amount of check must be 5 lakhs or less. Here when I issue a check to HDFC Bank, amounting to 12 lakhs, since there is an agreement that you have entered earlier, the bank will return the check unpaid because of that agreement. So agreement may be returned by, check may be returned by the bank due to any of these two cases. So then the person who issued the check, such person shall be deemed to have committed an offence and shall be punished. Such person shall be punished with an imprisonment up to 2 years or with a fine which may extend to the twice of the amount of the check. Sir, twice of the amount of the check means I have gave 12 lakhs amount check now. So my penalty or will be 24 lakhs. 24 lakhs. So or with both 2 years imprisonment and penalty, and or with both. Yes. Next, presumption in case of dishonor of check. When a check is dishonored, it is presumed that holder of the check received it to discharge either fully or partially. Sir, why have I issued the check to my creditor, sir? Because I owe him certain amount. That's why. Even the law presumes the same, sir. You gave him the check since you owe him something. So basically now it's up to the person who issued check. He has to prove that he has not committed any offense. Now here the presumption is holder of the check received it to discharge either fully or partially. Now the effect of this presumption is to place the evidential burden on the accused. Who is the accused here? I am the accused. The people, I am the one who are facing the complaint of dishonor. So here I am the accused. Now I have to prove, I have to show the evidence that the check has been there is no for example, I have no intention to dishonor the check. So that kind of evidential burden the law has placed on me. So now, and one more important thing is here, sir, there should be no defense in this case. What is no defense? Let us understand, sir. It is not a valid defense in a prosecution. That means in the process of trial, it is not a valid defense for an offense under section 138 to claim that the drawer had no reason to believe. Now, sir, already check dishonored, sir. Now I should not go to the, I should not make any argument in the court that, sir, I have no reason to believe that my bank balance is so less, sir. I thought my bank balance is 25 lakhs, sir. So these kind of arguments will be invalid and I cannot use it as a defense in the prosecution under section 138. It is not a valid defense in prosecution for an offense under section 138 to claim that the drawer had no reason to believe. Now I should not go and tell that, sir, I have no reason to believe that the check would be dishonored upon presentation as stated in that section. So now I should not make such a claim, sir. So that will not be allowed as a defense in case of in the prosecution of section 138. So now what are the conditions that are to be satisfied for applicability of provisions of dishonor of a check? Section 138 shall not apply unless below given conditions are complied with. What are the conditions that are to be satisfied for applicability of section 138? Check presented within the period of validity. Yes, sir, it must be presented within the period of 3 months or within the period of validity, whichever is earlier. Now, demand for payment through notice. Sir, for example, for the dishonored of check, sir, who, for example, we have issued a check to Mr. Bino, the check got dishonored, he has to demand for the payment through notice. He has to issue a notice within 30 days, under the pay or holder in due course, demand for the payment. He has to demand for the payment within 30 days. Return notice to the drawer of check through a return notice. So to whom, sir? To the drawer of check. We should know A issued check to B. Within 30 days of dishonor, he has to give a notice to me through in writing. Failure of drawer to make a payment. Even if after the receipt of such notice, if I fail to make the payment, such drawer fails to make payment within 15 days of the receipt of the said notice, then I will be liable under section 138. That means mere dishonor will not send me to prison at all, sir. So for applicability of section 138, so thus the person, the payee, the holder of the check, holder in due course or the holder of the check must send me a written notice after dishonor within 30 days, or even within 30 days. Even if I have not paid within 30 days, he has to send the check within 30, he has to send the written notice in 30 days. Even after the receipt of notice, if I haven't paid the money within 15 days, sir, I will be held liable under section 138. Basically, the holder in due course has to send me the notice in writing within 30 days about the dishonor of the check. And after receipt of notice, I have to pay the amount. I have to make the payment within 15 days, within 15 days of receipt of such a notice. If I haven't made the payment within 15 days of receipt of such a notice, then I will be held liable under section 138. So next, so presentment of bill of exchange. Presentment of bill of exchange for acceptance. So a bill of exchange payable after sight must be presented to the drawee for acceptance by a person entitled. Who has to present, sir? By a person entitled to demand payment within a reasonable time and during the business hours. So for acceptance, whenever going for acceptance of a bill of exchange or any other instrument, you have to show him the bill of exchange at the place within reasonable time and at the place in the business hours only. In case of default of such present, what if I have not presented for acceptance? Sir, basically sometimes I have to present the instrument to the other party for payment as well as for acceptance. Sir, the other party who has, for example, I have issued a bill of exchange to, means I have drawn a bill of exchange to A. So A needs to pay me some money. Now A may tell that upon that might be a bill for payment for sight. So basically it is a bill of exchange payable after sight. In that case, sir, B may demand to show the instrument, then only he will pay the money. In such case, sir, I have to show him during the business hours only. So there are two types, sir. So bill of exchange for bill of exchange presentment for acceptance and presentment for payment. So these two are different things. In case of default of such presentment, if I have not presented on the due date, sir, no party liable is liable thereunto person making such default. Since I have not I have not presented the bill on the due date, sir, the other parties who gave me the bill, they are not liable, sir. Only I will be held responsible. It must be presented at that place. It must be present, whatever the place he mentioned, sir, it must be presented at that place only. And the drawee cannot be found. If the drawee cannot be, the bill is considered as dishonored. Sir, on the due date, sir, I took him the bill. So for acceptance or for payment, sir, for acceptance or for payment. So I have went to that place on the due date only, sir. If the drawee cannot be found, the bill is said to be dishonored. Sir, what if I haven't taken the bill to him on the due date? Then I will be a defaulting party, and no other party will be liable. So a presentment through the post office by means of registered post is also sufficient. You need not to go, sir. So this by post registered letter is also sufficient. No. Write about presentment of promissory note for sight. So a promissory note payable at a certain period after sight. So it must be presented to the maker for sight. Who is the maker, sir? So for example, so B gave money to A. A makes promissory note and signs on the instrument. No. So since he makes a promissory note by promising by unconditional undertaking over here, so A will promise he will pay on certain due date to B. So it must be presented to the maker for sight by a person entitled to demand. Who must present, sir? B or any other person to whom B has endorsed the instrument within a reasonable time and business hours. Sir, what if B or any other person to whom B endorsed has not presented payment? In default of such presentment, no party thereto is liable to the person making such default. For B, no party is liable, sir. Or if C has failed to present the instrument, so the other parties either A or B is not liable. So C is the pay, because C has to receive the money. So B has to pay to C, A has to pay to B, and B has to pay to C. C will present the ultimately to A. C shall present, but C has failed, sir. C has failed. Since C has failed, sir, so the B and A are not liable. No. Discuss when presentment is unnecessary. So when presentment is unnecessary, the instrument is considered as dishonored on the due date for presentment. Sir, for example, if the look at here, sir. If the maker, drawee or acceptor, if the maker, drawee or acceptor intentionally prevents the presentment of instrument. Intentionally means he intentionally, when we went to present, sir, for example, so in case of bill of exchange, B is the drawee, sir. A is the drawer. Now A will present the bill for payment now. In that case, B intentionally prevented A for presentment. If A present, he has to pay money now. That's why B intentionally prevented A. So the instrument, since he has intentionally prevented, the instrument is said to be dishonored. And instrument is payable. See, if the instrument is payable at drawee's place, what do you mean by instrument is payable at a drawee's place? Sir, the instrument is payable at drawee's place, sir, but we went to drawee's place, but he closed his or after a reasonable search, we are unable to trace Mr. B or drawee, and also he closed the place of business, sir. If he closes the place of business, sir, then the instrument is said to be dishonored. Now, so basically these are certain conditions. Now, if a party has agreed to pay even without presentment, sir, in other case, sir, we have issued another agreement to so B has to give certain money on a bill of exchange. So B is the drawee. So on this bill of exchange, sir, B said that, sir, even if the drawer has not presented the payment, I will make the payment. In such case, sir, if a party has agreed to pay even without presentment, and if he failed to pay even after such a agreement, then B is said to the instrument is said to be dishonored. So next, as against the party having knowledge that the instrument has not been presented, sir, basically A is the drawer, B is the drawee, sir. So A has to present the instrument to B. A has to present the instrument to B. But on the due date, sir, even after maturity, A hasn't presented the instrument. Even though A hasn't presented the instrument to B, still B has made certain payments. In this case, A need not to present the instrument again. So that's it, sir. So, and also the last point, as against the drawer, if the drawee could not suffer, any damages, sir, then you need not to present the bill of, you need not to present the instrument for payment acceptance. Sir, state the liability of a banker for negligently dealing with bill presented for payment as per NI Act 1881. When a bill of exchange accepted payable at a specified bank, so has been duly presented there for payment, sir. So we'll get some money. Drawee is Mr. Y, sir. We are Mr. X. Drawee is Mr. Y. So we took the bill to the bank. But what did the banker did, sir? So the banker dishonored, and if the banker so negligently or improperly keeps or deals with or delivers back such bill so as to cause loss to the holder, means he dishonored improperly, sir. So he must compensate the holder for such loss. He must give some compensation because he improperly dishonored, sir. Him or is negligent in his duties. He has to compensate. Now, what are the rules of compensation in case of a dishonor of a negotiable instrument? Sir, if the instrument got dishonored, we will not get the money, obviously, right? So, what are the rules as to compensation? Rules relating to compensation. The compensation payable in case of dishonor of promissory note, bill of exchange, or check by any party liable to the holder or any endorsee shall be determined by the following. So, compensation payable will be determined by the following. The holder, whosoever, sir, for example, we presented a check to the bank, sir. We presented a check to the bank. The check bank has dishonored. So after completion of the 30 days plus 15 days, still the payment has not been paid by the other party. So we are now the holder. So in this case, we have certain rights. The holder is entitled to the amount due upon the instrument. The amount due upon the instrument together with the expenses properly incurred. So the amount due upon the instrument together with expenses properly incurred. So what is meant by together with expenses? All the legal expenses, so all the court fees and all, etc. So next, an end. So let's see the example here, sir. So in case of a bills of exchange, A is the drawer, B is the drawee. So B gave the bill of exchange to the drawer, where the drawer has given it to bank for discount. Now here on the due date, if the instrument got dishonored, the bank has the bill of exchange right now. On the due date, the bank will demand payment from B. So the instrument got dishonored. So since the instrument got dishonored, A has paid to the bank whatever the amount on the check, sir. he has paid the amount to the bank since B has not paid. So B has dishonored such instrument. Now sir, in this case the endorser paid the amount to the bank. No, so endorser who being liable has paid the amount due on the same. Now the endorser, since he endorsed it to the bank, he has paid the amount. No, so the he can take the amount from B. Whatever the amount, what is the amount that he can charge or he can take from B? The amount so paid to the bank, amount so paid to the bank plus interest at the rate of 18% per annum plus other expenses caused by dishonorable payment like noting and protesting expenses. He can all these three expenses A can collect from B since he is an endorser. So now the party entitled to compensation may draw for this amount, for this total amount he can draw another bill of exchange on B. So what if this another bill of exchange also dishonored? Again this all three factors comes into play. So whatever amount he has paid to bank plus 18% per annum and all legal expenses or all expenses caused by dishonor and payment, he can again collect it to B and so on so further. So such bill must be accompanied by the instrument dishonored and protest. Protest means, so we do protesting, through a lawyer and all. So and protest thereof or a notary expenses if any. So he is liable to make compensation thereof in the same manner. Sir, for this what, as I said, if the bill, this bill also dishonored, if the second bill also dishonored, we can go for a third bill of exchange. So he is liable to make compensation thereof the same manner as in case of original bill. In case of original bill you paid all the three now. So in case of, if case of second bill also dishonored, you have to pay all the three expenses, right? So these are the differences between check and a bill of exchange. So that's it, sir. Next we'll go for legality of let us see the difference between a bill of exchange, promissory note and a check, sir. In case of a promissory note, sir, we are seeing it on brief, sir. In case of a promissory note, there will be an unconditional undertaking signed by the maker. In case of a bill of exchange, sir, there will be an unconditional order signed by the maker. So in case of a check, it is drawn upon a specified banker. So who are the parties? So maker and payee are the parties. In case of a promissory note, dry and pay me is the dry and payee is the parties, are the parties in case of a bill of exchange. And in case of a check drawer, banker and payee. Who is the payee? Answer. So to whom the money is payable is called the payee. Now nature. So what is the nature, sir? Here there will be a promise to pay. Here there will be an order for making payment. Sir, here the drawer will make an order to make payment, right? For making payment. Sir, in case of a check, sir, drawn on a specified bank or no, and also a check is always payable on demand. Now, in case, what about acceptance, sir? So in case of promise note is signed by the person who is liable to pay. That is, who is liable to pay, sir? Maker. So in case of a bills of exchange, sir, dry needs acceptance from dry. Next, so in case of check, sir, so acceptance is necessary. Acceptance is necessary means, of course, the person who signs on the check, it is nothing but acceptance only. So the acceptance is necessary, sir. Here the acceptance means nothing but the person, the dryer's sign is considered as acceptance and nothing beyond that. So basically here acceptance is just the signature of the drawer. Now payable to bearer cannot be made payable to bearer as per RBI, sir. As per RBI, so a promissory note is not payable to bearer. It can be, no, it is, sir. What about this check bills of exchange? It can be drawn payable to the bearer. However, it cannot be payable to bearer on demand. So in case of a bills of exchange, it cannot be made payable to bearer on demand. So the payee must be certain and it can be drawn payable to only a bearer. So but the bearer on demand doesn't work here, sir. So the bearer on demand doesn't work. So this is as per RBI. So it can be drawn payable to bearer but not bearer on demand. So what about check, sir? It is on demand, even bearer on demand, even to bearer if so made. So whosoever bears the check, sir, he can present it to the bank, sir. If the bank has not made the payment on demand, the check is said to be dishonored. So this is it, sir. So from exam point of view, so the definitions of promissory note, bills of exchange, check, and the essential characteristics of promissory note, bills of exchange, check are respectively are important, sir. and there are different types of instruments. What are the different types of instruments, sir? For example, in court instruments. In court, what do you mean by an in court instrument, and what do you mean by inland instrument and foreign instrument, and what do you mean by negotiation, and especially very important question is what do you mean by negotiable instrument and Spanish characteristics. So these are the certain important concepts, sir. You have to be thorough with those. So we are going to see Indian regulatory framework. So what is law, and we are going to describe the process of law. So what is law? Basically, law is nothing but a set of obligations and duties imposed by government for securing welfare and providing justice to the society. Law is set of obligations and duties imposed by the government for securing welfare and providing justice to society. Sir, without law, there would be no justice at all. So it's an important process, and it's an important law is an important element in the society. So what do you mean by an obligation and duty? So that citizen, if the citizens do follow certain duties and obligations, the society will be at peace. Otherwise, it won't. So for securing welfare and providing justice to society, law is being brought here, sir. So now, what is the process of making law? So, when a law is proposed in parliament, this is not just a proposal. Such proposal is called a bill after acceptance by both Lok Sabha and Rajya Sabha. So, after being accepted by Lok Sabha and Rajya Sabha, it will be sent to obtain the assent of the president. Finally, the law will be notified by government. Sir, after the assent of the president, the bill will be called as an act, and finally the law will be notified in the publication called Official Gazette of India. So that's how a law will be brought. Now, what are the different sources of law? Indian Constitution. So it is the foremost law that deals. Indian Constitution is the first source of law, sir. It is the foremost law that deals with the framework within which our democratic system works. Sir, beyond this framework, the democratic system will not work, sir, and it cannot function basically. So our democratic system, if it has to function, it has to function within the boundaries set by Indian Constitution only. So Indian Constitution, which is the basis, it is the basis and sources of all laws, we can rightly say that. So made by parliament. So acts made by parliament and state assemblies. It creates a new law. So these are called, what are parliaments and assemblies? These are legislative bodies, right? So they create new law or changes an existing law. Parliament is supreme legislative body. So precedents or judicial decisions of various courts, nothing but case laws, right? Case laws are also source of law. What are the sources of law? First, Indian Constitution, laws made by parliament and state assemblies, and judicial precedents and judicial decisions. It is a process which is followed by the judges to take decision. The decision is taken by following similar cases that has happened in the past. So in the past, sir, there might some, sir, we see so many case laws. So those were the past judgments by the courts. Now at the present situation, the judges or the court refers to the previous judgments, so that it will so that the case laws or case precedents will be a basis for deciding or making a new law right now. So customs and usages. So law is based on custom, known as customary law. So it is a what is a custom, sir? Basically, it is a long established practice considered as unwritten law beyond human memory. Sir, we do follow certain customs and customs in the society. So such custom can also be taken as a base. For making a law. So there are four types of basis for where the sources of laws are. First is Indian Constitution, next is Parliament and State Assembly, next are judicial precedents, next customs and usages. Next, explain different types of laws in Indian legal system. The laws in Indian legal system, sir. First, criminal law. What is a criminal law? Concerned with a violation of rule of law. For example, sir, you basically, for example, a murder. Sir, a murder is obviously a violation of law. It's an offense under IPC. So a fraud is also an offense under IPC. Sir, in case of coercion, we read no, sir. So an act committed or forbidden, so under IPC, so Indian Penal Code. So those are all violations of rule of law. Public laws and punishments there will be public laws and there will be punishments for the same as well. So it is governed by IPC 8016 and CRPC, Criminal Procedure Code 1973. What is a civil law? For example, simple example, sir, if there is a breach of contract, sir, so we will go to civil court. So what is the civil law? The dispute between individuals or organizations are dealt under civil law. The act of process and administration of civil law are governed by CPC, Civil Procedure Code 1908. Next, common law. So common law is nothing but case law, sir. A judicial precedent or case law is known as common law. Sir, what are we reading? We are reading about the laws in Indian judicial system. Previously we have discussed the sources of law, sir. Now we are discussing laws in Indian judicial system. So common law, it's a judgment delivered by the Supreme Court. A judgment delivered by the Supreme Court. Sir, what is the apex court in India? Supreme Court is the apex court. That means the judgments given by the Supreme Court will be binding on all its lower courts, sir. So a judgment delivered by the Supreme Court will be binding upon courts within the territory of India. Now, principles of natural justice. It is often known as just natural deals with a certain fundamental principles of justice beyond written law. Yes, sir. So we read certain principles, sir. Principles of natural justice, sir. In certain cases, we will give opportunity of being heard, right? So it is the principle of natural justice. So like that, there will be principles of natural justice also. So these are the laws in Indian judicial legal system. Next, concept of enforcing the law. What do you mean by enforcing the law, sir? After a law is passed in parliament, it has to be enforced. Means it has to be properly implemented. Sometimes somebody should monitor whether the law is being followed or not. This is the job of the executive. For this purpose, government functions are distributed to various ministries. Sir, for example, who look after income tax collection and etc. So there will be income tax departments. So Ministry of Finance, it will be under Ministry of Finance. So that's why there are certain ministries to see whether the law is being enforced or not, properly followed or not. So some of the popular ministries: Ministry of Finance, Home Affairs, Corporate Affairs, Ministry of Corporate Affairs, MCA. We see that Ministry of Law and Justice, etc. So no, Ministry of Finance, sir. So what is Ministry of Finance? So it's a ministry with Government of India, concerned with economy of India, serving as a treasury of India. Yes, of course. So it is a treasury of India. So all the money related matters will be dealt there. So it concerns itself with the taxations, financial legislations, financial institutions like banks, capital market, the stock markets and all, centers and state finances, and union budgets that are being takes place every year, right? So these all related under, this all will be dealt under Ministry of Finance. One of the important functions of Ministry of Finance is the presentation of union budget. Just now we have said, sir. So every year the finance minister will bring the finance budget to the parliament, right? So this is called presentation of union budget. Now, who will constitute what is the constitution? Constitution means basically the composition of a Ministry of Finance. Ministry of Finance is the apex controlling authority. Apex means top controlling authority of four central civil services, namely Indian Revenue Service, Indian Accounts and Audit Service, and Indian Economic Service, and Indian Civil Account Service. So these are consists of Ministry of Finance, consists of all these departments. Ministry of, again sir, Ministry of Revenue Service, Ministry of Audit and IAS, and Indian Economic Service, and Indian Civil Accounts Service. Now, MCA, this is important for the exam point of view, sir. So, Ministry of Corporate Affairs. Ministry of Corporate Affairs is an Indian government ministry. We know that. So, primarily concerned with administration of Companies Act 2013, Companies Incorporated and Companies Act 1956, LLP Act 2008, and IBC, Insolvency and Bankruptcy Code 2016. So, it is responsible mainly for the regulation of Indian enterprises in industrial and service sector. So now explain about Ministry of Home Affairs and Department of Official Language. So this is called Graha Mantralaya. Graha Mantralaya means Ministry of Home Affairs. So what do we call Ministry of Finance? Vitta Mantralaya. So now Vittam is money, sir. So Ministry of Home Affairs is a Ministry of Government of India. Ministry of Home Affairs is Ministry of Government of India. We know that. It is mainly responsible for maintenance. Government of India, why are they stating that Government of India? It's not a state government ministry, sir. It is a central government ministry. So it is mainly responsible for maintenance of internal security and domestic policy. So it is headed by Union Finance. So Union Home Minister, Union Minister of Home Affairs. We'll call it, or we'll call him as Home Minister of Union or Union Minister of Home Affairs. So now there are certain departments, sir. Sir, just now we saw departments under Ministry of Finance. So now we are seeing departments under MCA. What are those departments under MCA? Department of Border Management, Internal Security, Official Language, Department of Home, Department of States, Department of Jammu and Kashmir, and like that. So these are the different departments under Ministry of Home Affairs. Now there are under Department of Official Language, sir, there are certain other departments. What are those? Translation Bureau, Hindi training. Sir, what is the main function of this? So to basically to bring some awareness on Hindi and other regional and other languages. So this is the main function of Department of Official Language. So Central Translation Bureau and Central Hindi Training Institute, Director of Census Operation, these are the departments under it's a Department of Official Language, sir. So to for example, to encourage Hindi or to basically to for the advancement of Hindi, we do use this Central Hindi Training Institute, sir. So this is the main departments of Department of Official Language. Now, so Ministry of Law and Justice. Ministry of Law and Justice is also a government of India in the ministry, sir. Now, management of legal affairs through legislative department. So now look at it, sir. Legislative department so looks after management of legal affairs. Sir, there are other departments as well in Ministry of Law and Justice. Legislative activities through Department of Legal Affairs. Sir, legislative department is different from Department of Legal Affairs, and administration of justice in India through Department of Justice. This is Department of Justice, this is legislative department, and this is Department of Legal Affairs. So now departments of Ministry of Law and Justice. Sir, this is department. So basically Department of Ministry of Law and Justice has further divided into, there are other departments in that as well. Department of Legal Affairs, just now we said Department of Legislative Department, Department of Justice. So in that there are different departments. What do these departments do, sir? Legislative Department looks after management of legal affairs. Department of Legal Affairs look after legislative activities. So Department of Justice looks after administration of justice in India. So next, sir. So security SEBI, sir, we are going to see SEBI, the Securities Exchange Board of India. It is the regulatory body for stock exchanges for securities and commodity market in India. So under the ownership of Ministry of Finance with Government of India, it was established in 9. So this is important from exam point of view, sir. This is very important. It was established on 12th April 1988 as an executive body, and it was given statutory powers on 30th January 1990 through SEBI Act 1992. So now RBI. So this is also important from exam point of view, sir. So what is an RBI? It's an India's central bank and regulatory body. It is under ownership of Ministry of Finance. It is responsible for control, issue and maintaining supply of Indian rupee. It is responsible for control, issue and maintaining and supply of Indian rupee. It also manages the country's main payment system. Sir, you know UPS and all know it is also regulated by RBI only. RBI through BRBNM prints, mints and mints Indian currency notes. RBI established the National Payments Corporation of NPCI. We know this, right? RBI establishes National Payments Corporation of India. Now, Deposit Insurance and Credit Corporation was also established by RBI. This is another department, sir. Deposit Insurance and Credit Guarantee Corporation. Now, define about Insolvency and Bankruptcy Board. So what is Insolvency and Bankruptcy Board, sir? Sir, not only individuals, the companies also will go bankrupt now. So for so to retain the financial status or to declare a company bankrupt, if a company is declared as bankrupt, sir, so the insolvency proceedings will be started, no, sir. So Insolvency and Bankruptcy Board, sir. So it is a regulatory for overseeing insolvency proceedings. It was established on 1st October 2016 and given statutory powers. Sir, why, sir? Sir, sometimes companies will also be insolvent, no? So to overlook for overseeing the not overlooking, basically overseeing the insolvency proceedings, this IBBI will help, sir. It covers individuals, companies, LLPs and partnership firms as well. It attempts to simplify the process of insolvency. Sir, it basically IBBI in IBC, Insolvency Bankruptcy Code 2016, it has a process, sir, for it simplifies the process of insolvency and bankruptcy proceedings. Sir, earlier the insolvency process takes us years and years together, sir, but now it is a time bound process. So it handles the cases using two tribunals like NCLT, National Company Law Tribunal, and Debt Recovery Tribunal for individuals. This is for companies. Now, describe the structure of Indian judicial system. Let us see, sir. The functions of judiciary system of India are regulation of the interpretation of acts and codes, and dispute resolution, and promotion of fairness among citizens of land. So these are the functions of Indian judiciary system. Supreme Court. What are the different main bodies in Indian judicial system, sir? Supreme Court. We know that this is the apex body of judiciary, which is established in 26 January 1950. An individual can seek relief in Supreme Court by filing a writ petition under Article 32. Sir, if his fundamental rights are being, he is deprived of from fundamental rights, deprived of fundamental rights, he can seek relief in the Supreme Court by filing a writ petition under Article 32. High Court. This High Court is the highest court of appeal in each state. Sir, sir, overall India, it's Supreme Court is the highest court. Here, the highest court is of appeal is High Court, sir. The highest court of appeal in each state is High Court, and also the highest court of appeal in each state and union territory is the High Court. Even in union territory, High Court is the highest court, sir. Article 214 of Indian Constitution states that there must be a High Court in each state. So for incorporating incorporating High Court in each state, Article 214 supports, sir. That means in Indian, as per Indian Constitution, Article 214, High Court will be High Court will be High Court will be No, the High Courts has appellant jurisdiction. Appellant means, for example, if you have any appeals in the lower courts, it can be brought to High Courts, and also it has original jurisdiction also. Some of the cases can be directly filed in High Court also. And supervisory jurisdiction. Supervisory jurisdiction means the judgments given by lower courts can be supervised by High Court as well. So district courts, sir. So these are the courts below High Courts. Courts below High Court, sir. The courts of district judge deals with civil law matters. The courts of sessions judge deals with criminal matters. So district judge deals with civil matters and session judge deals with criminal matters. Metropolitan courts. It is established metropolitan cities in consultation with High Court. So in metropolitan courts will be there in only metropolitan cities, sir. Chief Metropolitan Magistrate has the powers of Chief Judicial Magistrate, and Metropolitan Magistrate has the powers of Court of Magistrate of first class, sir. So these are brief, sir, the brief points. So this question is also important from exam point of view. Describe the structure of Indian legal system, Indian judicial system.